Hello. Come on, let's go. I feel if I just stand up here with the microphone and look at the door, everyone runs faster. Come on. All right, well, everyone's coming back in here. Welcome to day 2 of Bitcoin Investor Week. I appreciate you all coming. We are going to go fast and furious. We got a lot of people that we are going to talk to today. There's a couple rules that we like to share with everyone. There is a door here. Guess what? That door is closed for a reason. If If you go outside, make sure the door closes behind you. Do not go and conjugate, I think is the right word, in the corners and talk to people. Is that the right word? No? What's the right word? What is it? Congregate, whatever. What is it? Is it the grammatical thing is a conjugation, or what is that thing? Right? So we're off to a hot start this morning. Obviously, I'm not the smartest person, so we're going to have everybody else talk the rest of the day. So make sure that you keep the door closed. Obviously, when the speakers are up here, please be quiet. On top of that, it's not a secret. Guess what? The speakers are going to come from that side. They're going to come onto the stage. They're going to go off the stage. Please do not bum rush them over in that corner because you're going to make a lot of noise. You might scare them. A lot of them have security. They may tackle you. It'll be really weird if you get tackled trying to talk to a speaker or take a selfie. So let them go in there. You'll see them. They'll be around throughout the day. On top of that, there's no questions from the audience, mainly because every time we've ever taken questions from the audience, this is how the question goes. So my name is Jack Smith. I worked at Morgan Stanley 15 years ago. I then did A, B, and C, D things. Today I'm working on a startup that does X, Y, and Z things, and I believe that stablecoins are going to be really popular. Bitcoin is going to go up high. Do you agree? That's literally the questions people ask. So we're going to keep it just to the speakers, and we're going to do the best that we can with them. Once we get through all of the speakers this morning, we will then break for lunch. We'll come back in the afternoon. There is a cocktail hour at what time? I can't hear her. I think she said 4 o'clock, but around 4:30. There's a lot of free drinks. If you did not see, for those of you that are VIPs, Caroline, I think VIPs, there is a VIP section that is out here. They have a shit ton of alcohol. I've never seen somebody bring this much alcohol. So that should be fun. Please, don't get crazy. And then there's also the coffee bars. And if you need bathrooms, I think there are bathrooms that are up those stairs. That's it. You ready? Okay, no one said anything? All right, cool. We're going to start with Barry Silbert from DCG is going to come up here now, I think. All right, there he is. All right, here's Barry.
Morning, man.
You ready?
Morning.
All right. You are a Bitcoin OG. You've been around for a very long time. If you look out in this audience, somebody made the assessment yesterday. There's not a single hoodie in this audience, which is about 180 degrees difference than probably 15 years ago or so. How do you look at Bitcoin's rise, success, maybe some of the negative trade-offs that we've made as this thing has gotten more mass adoption and become more successful?
So I don't really do these much anymore. And so in prep for this, I had to kind of jog my memory about the early days of Bitcoin. And so I heard about it in 2011. You got involved, what year did you get involved?
End of 2015.
2015, okay.
I was late. I was pissed.
Yeah. You had to buy
a 4-year head start on me.
I know. You had to buy a 200 or something, yeah. In this crowd, I mean, there's a bunch of OGs here. And, when I kind of reminisce about the early days of Bitcoin, I always think about how what's happening right now felt so inevitable, but also so unlikely. And if you think about the evolution of this industry and this asset class, in a very, very short period of time, this has grown into a multi-trillion-dollar asset class, the fastest growing asset class in history. And it feels like every 2, 3, 4 years, there's this press cycle that it's over, it's going to zero. And I love this shit. Like the way things are right now, and I think this is like the builder day, right? Like I love these periods of time when everybody's, really sad, we're watching the price, because the people who are building, everybody's just heads down building shit. And everybody who believes in the importance of decentralized money and digital currency and digital gold, we're all like, we look at everybody who's kind of the naysayers right now, and we know we're right, we know that they're wrong, and we get to just, I think, build something that has been and is going to transform financial markets and capital markets. And so I'm super excited about where things are right now, and this period of uncertainty and dislocation, I don't know if it's going to last for 2 more weeks or 2 more years, but I think this is the most exciting time to be in Bitcoin and cryptocurrency.
When I think of you and DCG, you guys really, I think, came at Bitcoin from a very interesting spot with, kind of the secondaries market and understanding, where capital markets were going. And then you essentially picked off vertical by vertical. Hey, here's businesses that either need to exist and don't exist, or areas where maybe somebody's not doing this as well as, we think we can do it. Can you talk about maybe the businesses that you guys went into, and then where do you see those opportunities now, in terms of maybe future businesses or things that you guys are interested in?
Yeah. So the first business was Grayscale, and so that was in 2013. We launched the Bitcoin Trust, and like in 2013, if you wanted to invest in Bitcoin, I think it was Mt. Gox and a few other exchanges. It was really hard to invest. So I knew that if Bitcoin had if it was ever going to become kind of digital gold, it has to be a lot easier to invest. And so we launched Grayscale. And that was 2013, and we were buying so much Bitcoin that we had to set up a trading desk. And that trading desk ultimately became Genesis Trading. And then, let me think of the order. And then during one of the crypto winters, there was no media covering crypto, and CoinDesk was about to go out of business. So we bought CoinDesk for $500,000. And to support kind of information, and they had a consensus event. And then during another cycle, the whole world was worried that China was controlling Bitcoin hash rate. So we decided to launch a business to focus on Bitcoin mining, to bring Bitcoin mining hash rate into the US. And so we launched Foundry. So Foundry got involved in Bitcoin mining and financing Bitcoin machines. So today Foundry is the largest Bitcoin mining pool in the world. Then we bought a company called Luno, which is kind of like a Coinbase for Africa. Then we launched a mining business for the long tail of cryptocurrency proof of work tokens called Fortitude. I'm going to forget. We launched most recently something called Yuma, which is focusing on Bitensor. And then while we're doing this, we're probably the most prolific investor in the space in terms of number of investments. So I think we've invested in maybe 300 companies around the world. So we're sitting in kind of a very unique position where we get great insight as to kind of like what's happening.
In our conversations, one of the things that has really stuck out to me is this intersection of Bitcoin and crypto and artificial intelligence. And it feels like there's a lot of folks that are talking about like agentic payments and stablecoins and Bitcoin and all that kind of stuff. I think you see some other areas where that intersection of Bitcoin and AI are going to show up. Talk about what you're excited about there, or what you guys are spending time on.
Yeah, I think most of it is kind of bullshit. In that, a lot of projects are saying, hey, we're AI. There is clearly, I think, a very big opportunity around the convergence of crypto and AI. And there's certainly, we're obviously seeing it on the infrastructure side with compute and Bitcoin miners diversifying into or pivoting into AI. But I do think that the ability to incentivize contribution, the ability to incentivize stakeholders in unique ways around AI is super exciting. And so we got involved in something called Bitensor, which is a decentralized open source protocol, just like Bitcoin, but instead of incentivizing security of the network, it incentivizes people to essentially kind of compete and try to solve complex problems of the world. So Bitensor is comprised of over 100 of these different subnets. These subnets are competitions where people are trying to predict sport outcomes or discover drugs or incentivizing compute or storage. Super, super interesting intersection of kind of crypto AI. There's a few other projects that I think are interesting, but this definitely is the first one that has reached escape velocity.
Why do you think that Bitcoin has not been performing maybe the way that Bitcoin investors think? Is it that AI has also become, a place to speculate or drive capital, or kind of what is your take? You've got, a decade plus of experience now, almost 15 years of experience watching this play out. It does feel like this drawdown in this, bear market is maybe a little bit different.
Do you think it feels different?
On one hand, I think it's a better bear market because the drawdown has been less volatile, even though it doesn't always feel that way.
Yeah.
On top of that, I think there's a lot of folks who came in the 2017 bull market that this is now, kind of the third time they're going through a drawdown. And I think it is the third time you're kind of like, do you think it's going to zero? Like it's coming back, right? So I do think there's like hardened hold.
Did you see that FT article that came out, but Bitcoin going to zero?
Where they changed the
like
title?
Yeah.
Yeah. Well, Jemima Kelly and we got a long history.
Up to you. Okay, so...
She used to write articles saying I was a Bitcoin bro, and I told her, I said, define that.
Okay, so this to me just feels like normal market gyrations, and I think part of what's happened is I think a lot of the fast money, the hot money, moved into precious metals, gold and silver. I think there's definitely a lot of money that shifted out of kind of altcoin speculation into prediction markets, and I think we're going to see a massive rotation back out of gold and silver, back into crypto, back into Bitcoin. The prediction market thing scares the shit out of me, and I'm not. I think it's super interesting, but I also think it's maybe not great for society and certainly not great for the investor. So I feel like we're in this rotation of capital, like this hot money moving, kind of opportunity to opportunity. And ultimately, I think that Bitcoin is fundamentally a better version of gold. And I think that many altcoins, not many, I think some altcoins provide a better risk, adjusted risk return opportunity than a lot of the other things that people are playing with right now. And Bitcoin has always been a momentum play. And so the institutional investors that got involved, they're focusing elsewhere right now. They're focusing on AI. They're focusing on precious metals. I can tell you, so Grayscale is in the process of getting its products added to wealth management platforms all around the country. And from what I can see, and I'm chairman of Grayscale, so I don't have direct day-to-day visibility, but from what I can tell, none of the platforms have in any way slowed down their onboarding of these various products. And managed wealth has not touched Bitcoin yet. There's essentially zero allocation into crypto, into Bitcoin. Then they manages $50 trillion. And so if 1 or 2 or 3% of managed wealth goes into Bitcoin over the next 5 years, you're talking about a massive tidal wave of capital flowing into the asset class. So I think we're going to bottom out. There's going to be some choppiness. Who knows if someone blew up? People are getting kind of delevered. But I think once we get the momentum back, I think the conversation is again going to turn back to what is the appropriate allocation of crypto in your portfolio and what's the best way to do it.
So when you think about this hot money thing, this is actually something that I'm very torn on. I've always believed that people should do what they want with their money, and I think that if the government is telling them what to do or companies are telling them what to do, that's usually a pretty bad thing. They're trying to prevent them from doing something that's usually good for them. When you look at these prediction markets, or I was watching the Super Bowl, every other ad's like a gambling ad. And so I'm all for the entertainment and all that kind of stuff. But I think when you start to talk about like the prediction market is eliciting truth, but you're trying to get the quote unquote truth of like how long the press conference is or what color tie someone's going to wear or these like mention market type stuff, I do wonder how are we going to, one, are the regulators going to look at it, but also as a society, like, do we draw a line somewhere where we say, look, actually, we don't want people whose brain has not fully formed, going and wagering on, is Barry going to be on stage for 19 minutes and 30 seconds or 21 minutes, and, we're going to talk for a little bit longer. Let me go wager.
I took the 21-minute bet, just so you know.
Well, like, imagine, right, and now I think this is what's starting to happen, is like, imagine if I took one side of that bet, and then I held you hostage up here until we got to 21 minutes, right?
So look, I think we're aligned on this, and look, my guess is most Bitcoiners are also aligned in that we lean toward libertarian, we're free market people. We want the government to kind of let us do our thing. But it's obvious that many people that are playing in the prediction market space, in the same way that people play the altcoin space, are gambling with money that they can't afford to lose, and it sucks to see. I mean, it's going to end badly, like with all gambling for most people. But I do think that. To your point, the innovation I think it's a new way to again create intelligence to identify unique insights. But I do think it's not good for society. I also think that the more interesting thing is the capital formation opportunities that are being created by the infrastructure that's being built from blockchain. The rails that have been laid initially for Bitcoin and then altcoins and now for stable coins and tokenized assets, it is going to transform the financial markets in ways that even I think you and I can't even imagine right now. Like, it's going to take longer than people expect, but it is absolutely going to change the way that people access capital for ideas, the way that people invest in ideas, the ability for real-time settlement, 24/7 trading of investing and trading of essentially any investable asset in the world is transformative. And that to me is super exciting. And I would love to see the fast money that's messing around with gold and silver and prediction markets to find its way back into the few projects in crypto that make sense.
Let's talk about privacy. I think that one of the big things that everyone was very excited about with Bitcoin in the early days was, oh, it's anonymous cash. Newsflash, it is not. I think that there's plenty of people who are doing nefarious things who kind of found that out the hard way. But I do think that there is a very large portion of people who still would like the ability to use digital money and do so with privacy. There's solutions on the Bitcoin side that people are working on, but maybe the big meme of the second half of last year was all these people started talking about these other privacy type coins. How do you look at privacy when it comes to Bitcoin or other types of digital payments using crypto?
Yeah, so privacy is my jam right now. Privacy. You mentioned it. In the early days of Bitcoin, in 2011, 2012, when I would tell someone what Bitcoin was, I would say it's a digital form of money, not created or controlled by any government, that is finite in supply and is anonymous. In the early days, it was. It was before Chainalysis and Elliptic and Merkle and all these kind of companies. And I feel like over the next, 12, 13, 14 years, we've kind of lost the plot a little bit. And I am excited that in this administration, with this SEC head, I now feel comfortable talking about financial privacy as something that I think it's a fundamental right. And when I think about money, I think about store of value, I think you could objectively say that Bitcoin, for all of its amazing attributes, is likely never going to, I think, have any privacy features. So I believe that the next investing theme, the next big opportunity for investors in the asset class is going to be in privacy-focused cryptocurrencies. And I'm a big fan of Zcash. There's a number of others that are doing some interesting things. But the bet that I'm making, that we're making, is 5 to 10% of Bitcoin over the next few years is going to find its way into privacy-focused cryptocurrencies.
So if 5 or 10% of Bitcoin's current market cap finds its way into privacy-focused coins, your macro outlook seems to be long-term, Bitcoin will do well. I don't know what you think kind of short-term. Are you more bullish on Bitcoin today than ever? Do you own more Bitcoin than you ever have? How are you thinking about Bitcoin and its future prospects? And it's interesting to talk to people who are early, because at that point it was like the most asymmetric asset in the world. At it was 100,000. At 70,000, there's still, I think, the belief that it's got a lot of upside. But the number that people talk about now is like 1 million, which obviously is very different than when you're talking about 1 million at $100.
Yeah. So in the early days, when I would talk to somebody about Bitcoin, I would say asymmetric. It's either going to zero or going a whole lot higher. It's most likely going to zero. I can say with a high level of confidence that Bitcoin is not going away. Bitcoin is slowly going to be taking a larger and larger percentage of a portfolio allocation. From 0 to 1 to, I think gold is a really good target for Bitcoin. So that creates tremendous upside. But if you're also measuring in US dollar terms, I think it's also fair to say that the value of the dollar and fiat currencies is going to continue to go down over the next couple of decades. So I am incredibly bullish about Bitcoin as a core part of a diversified portfolio. But I'm kind of I like to invest in and back and get involved in projects that I think are transformative and have 100, 500, 1,000x type return opportunities. And I think unless the US dollar completely collapses, Bitcoin's not going to go up 500x. I think a Zcash can go up 500x. I think a Potensor can go up 500x. And so our portfolio is allocated accordingly.
So basically, you look at it as it's a core part, but then you still have kind of venture bets. You own the businesses that are throwing off cash flow. It's kind of much more diversified than people who just put 95% of their net worth in Bitcoin today.
Yeah, I mean, Grayscale is the largest crypto-native asset manager in the world. I think we had about 30 billion of AUM at the end of last year, predominantly in Bitcoin. So more than anybody wants to see Bitcoin continue to dominate. But I get really excited about other things that I think are complementary to Bitcoin and have a bigger or higher upside potential.
What do you think that the Bitcoin community or the crypto community at large can do to get more institutional adoption or the sovereign wealth funds and nation states?
Well, I have always thought that the drama in the community maybe makes for interesting fodder on Twitter. It doesn't help. And so the attacks, the drama, look, that's part of Bitcoin. That's what makes Bitcoin great. But I do think that from an institutional investor perspective, they don't like seeing this quantum risk. Bitcoin is not at risk from quantum.
You do not think that quantum risk is real?
I mean, maybe not in our lifetime, but it is definitely not something that keeps me up at night. Look, if you believe that, Zcash is a great hedge. But quantum is one of these topics that the people who are pumping their bags or people who just want to see Bitcoin fail are going to continue to kind of amplify as being kind of a risk for Bitcoin. And I just think that kind of the discourse that I've seen, the drama, it just doesn't help. But look, for the most part, from where I sit, institutional investors, they're digging in, they're getting comfortable with the asset class, they're figuring out what the right allocation is, they're figuring out how to invest their money. This is why I do think that we're going to reach an inflection point. I think at some point this year where the capital rotation is going to begin, and we're going to be out of this is Bitcoin going to zero to okay, what percentage should I have in my portfolio, and what does that mean for the price?
Barry, I think I speak for everyone in the room. Thank you so much for not only coming today, but all your contributions. A big part of the industry is here because of you. So thank you very much.
Thanks for having me.
All right, next up we have Bo Hines. Bo.
It's quite the walk. I had some exercise.
I know, that is a long walk. I feel like we should play some like walkout music. You're at the White House. You now are the CEO of USAT. And when I think about your importance in the crypto industry, there are a couple of big things that you can hang your hat on. One of those being that you guys got the Strategic Bitcoin Reserve done. You were able to get a lot of clarity, no pun intended, in terms of the administration's approach to crypto. Talk maybe just about your time in the White House, working on the crypto stuff, and when you walked out that door to go and work with Tether, how did you look at, like, here's what we accomplished?
Yeah, no, I mean, first and foremost, we had a blast. Obviously, with David being in there, we set the mission forward to move at tech speed, and I feel like we did that in that office. Patrick was the deputy there, who's now in my former role. But it was just fun. I mean, we moved at lightning speed to try to get as many things accomplished that we possibly could. Obviously understanding the nature of political cycles and how these things work, we felt like we had momentum early, and we captured it. But I think that the biggest question that we had to answer when we first arrived was, what bill do we want to put forward first? And that was kind of the debate between Genius and Clarity. Obviously, we were able to get Genius passed this past July, but the Clarity debate continues to rage on. I do not envy Patrick in this position right now. But I think one of the things that might be lost on some people is, yes, we were able to get the SBR done through executive order. Obviously, we hope to see that cemented through congressional action. But we had the President's Working Group report on digital assets that was also released, and this was probably the most comprehensive regulatory framework ever produced by a government in terms of what the digital assets ecosystem should look like. And I encourage you to go take a read. It's crypto.gov. You can go look at it, kind of comb through it and see everything that's in there. But our goal was to kind of lay the groundwork for a brave new world in the financial system. And so with Genius, obviously, stablecoin regulation gives us the on and off ramp we need to enact a world in which I think a lot of us in the technology space have dreamed of, in the digital assets world, where we have 24/7 markets and all of that grandiose stuff. So I loved my time there. I felt like it was the right time to move on after Genius was passed. I think I got kind of leveraged into being the bully a little bit on that bill. So it's always good to have a fresh voice in the room for the next phase. But post that report, decided to step back, and that's what's led me to be the CEO of Tether US now.
Now, when you think about the Clarity Act, everyone is very focused on, hey, is this thing going to pass? Is it not? We had some people yesterday put the odds at 60% odds that it gets passed. How important is this for the industry, or is everything going to be fine if it doesn't get passed, but it'd be nice to have?
I mean, I think it's immensely important. It's the other piece of the puzzle in order to have the complete picture that we need in order to progress things forward. I think it's probably 80 to 90% likely that it passes. I mean, we're down to a few small details that we need to iron out here, and really the biggest one being about UX structure. And I say that because everyone in the media is talking about this yield debate between banks and the crypto natives. I really don't think it's a yield debate. It's more of a UX debate, meaning that do you have to be an OCC chartered bank, and do you have to have a separate platform in order to pass that yield along to your customers? And this really only pertains to one actor in the space. And so I think that a lot of the folks in the crypto world are now unified around this. And I think that the banks are coming to terms with the fact that obviously stablecoin adoption is here and integration is about to begin. And so I'm confident they'll get to the right place. And knowing how David and Patrick work, both brilliant people, I think they'll find a good landing spot.
Talk about Tether US and what you guys are doing.
Yeah, well, look, I think Tether is arguably the most important player in the crypto ecosystem that's not a commodity. And we have about 530 million customers now. We're growing at about a clip of 30 million a quarter, which is pretty remarkable. We're the 13th largest holder of gold in the world, and we're also huge Bitcoin maxis here at Tether. But it's just a very unique company. 300 employees, 10 billion in profit in 2025. Under the Genius Act, in this brave new world, we decided that we wanted to launch a Genius compliant stablecoin product here in the U.S. to service institutions and work on that integration that we had attempted to set up in the White House with this bill. So, it's been a wild ride over the course of the last year. We move very fast. We're a lean, mean machine. But it's remarkable how organized everything is inside of the orbit, and that's truly a testament to how Paolo runs the business from the international side. And so we're hoping with this U.S. product, with our 530 million customers worldwide, we can connect these emerging markets to the U.S. capital markets and create these corridors that have never been established before in finance. And I think that Tether is probably the only company positioned to do that in the world. Tether's much bigger than just a stablecoin company. We're prolific investors in the technology space. We're building everywhere, whether it's in robotics, whether it's in infrastructure. We're constantly looking for ways to improve the system. And I think that for folks that really care deeply about Bitcoin, stablecoin integration is a huge boon for the ecosystem writ large, because it's an on-ramp into this digital assets world that allows people to be able to move in and out of assets like Bitcoin and these other commodities in a much quicker and more efficient way. And I think that's a great thing.
saying that Tether is a prolific investor in technology is an understatement of like the century. Every time I talk to Paolo, I got to get an update about the brain-computer interface company and the various other things. You mentioned these corridors. Describe a little bit as to, what is the benefit of establishing this, right? Are there things that the U.S. institutions are trying to do that they can't do now because of the technology gap, or what is the kind of sales pitch, if you will, to these institutions?
Yeah, I mean, look, it's still very inefficient to move money in the U.S. I mean, our rails are 95% efficient compared to the rest of the world, but it's not very cost effective. You're limited to the time frames in which you can move money on a larger scale. And stablecoin adoption really changes the world dramatically in all of these different verticals. And so you can think about it from like a settlement perspective, whether it's intra or interbank settlements. Obviously, this allows, let's say, Korean banks to actually participate in U.S. capital markets on a Friday afternoon because they have a settlement mechanism and a vehicle to do so post-close. And so I think that the biggest thing right now as we think forward is what does the infrastructure look like? Obviously, like let's say you're trying to move NYSC on chain and have all of that trading take place there and have the on and off ramps be stables. The infrastructure has to be able to support it and it has to be cost effective. And so I think that there's a race right now to build chains in which it actually makes this reasonable and palatable for folks to move forward and create a world that behaves in this way. But stablecoin adoption from the institutional side brings obvious savings to banks and other merchants alike. You go from T2 to T1 to T0 with stablecoins. You're not waiting for intermediary settlements any longer. And so, for businesses, this is also huge. For U.S. consumers, it's great just from a remittance perspective. But I think what you're going to see from UX adoption is a lot of these folks should be building these products all into one. And so you start thinking about origin points, whether it's payroll companies paying their employees in stable coins rather than on a bi-monthly basis, right? They can get paid on a daily basis now. They can, programmatically say, hey, I want to send 10% of my daily paycheck, to somewhere in LATAM or somewhere in Asia. And so, packaging these financial products in a way that the consumer doesn't have to think about engaging with stables is the way that we want to move forward. And I think that what you'll find with U.S. citizens is they have access to many money transfer mechanisms, but they're still very costly. And so our goal is to change that dramatically over the course of the next couple of years.
Let's talk about yield on the stablecoins. Obviously, it's a huge debate. There is a trade-off between it could be beneficial to the users. It could put pressure on companies to do different things if that's not their monetization. You can imagine that some financial institutions are looking at yield and stablecoins as almost like maybe not a loss leader, but just like, hey, we don't care about the margin as much. We just are trying to use this from an adoption standpoint. How do both from a national standpoint, is the U.S. looking at the yield, and then how does Tether and USAT, how do you guys look at the yield?
Well, look, I mean, Tether is agnostic when it comes to the yield conversation because it's not our business model. What we do is we provide the deepest liquidity and the best distribution. And so that's how we attract our customers. I mean, our market cap right now is around $185 billion. And obviously, we've talked about the numbers of adoption in terms of how many people use the product. So we have, the on and off ramps back into fiat that people are looking for, especially on an institutional scale. And so I think that, again, the larger question here is whether or not you can be a broker, exchange, and a bank all in one. Someone called this shadow banks, and I think this is where the banking industry starts to tighten up a little bit and starts to be protective of their territory. I think that the easy solution here is to get an OCC charter, and that way you can engage in the same model of yield sharing relationships that you could with your consumers, just like a bank would. And I think that's probably going to be the landing place with clarity. I don't see how banks could be opposed to that. It's clean for the crypto natives. The OCC is moving very quickly in terms of handing out banking charters to crypto native companies. And so, we're in a world in which we can do this. But for us, we're kind of sitting on the sidelines just as patient, observationists at the moment when it comes to this bill because it really doesn't have a direct impact on us.
When you think about the 530 million people who currently use Tether products, and you mentioned growing 30 million quarter over quarter, how do you think about what other financial services to provide to them? Right, in a way, there are a lot of people who don't have traditional bank accounts, and now all of a sudden they have a wallet. They're able to transact. They can, quote unquote, save in U.S. dollars, which is very attractive to people, especially internationally. Are there other things that you all can do over time to help them get more access to a financial system other than just dollars and payments?
Yeah, I mean, I think that there's going to be, I'll start here, there's going to be immense, in my opinion, chain consolidation, stablecoin consolidation over the course of the next 5 to 10 years. The market here will behave just like any other market does, except it's going to be exponential in terms of how it shapes, and that's just the way in which the world of crypto moves. But I think that as you start seeing people build, especially in the wallet space, like Tether's working on WDK, which is our wallet development kit. This is an immense project for us, and we believe that having the point of origin for the customer is extremely important. And I think that's where the race will go. So you'll start seeing people package, a lot of these financial services into these wallets, which is tremendous for the consumer. And Tether's main mission over the course of the last 7 years has been to provide access to people that don't have the direct ability to engage with financial instruments that we need in our day-to-day lives to live. And that's something that we've accomplished in areas that a lot of people didn't think was possible 10 years ago. It's just creating that financial access brings people together, and we're still very committed to doing that over the course of the next few years as we start working on these wallets and other financial instruments.
You mentioned that you guys are Bitcoin maxis. Again, another understatement. Describe why is Tether good for Bitcoin, or what are the activities that Tether engages in that supports Bitcoin?
Well, look, we love Bitcoin. Obviously, Bitcoin acts as part of our reserves currently. We're big in Bitcoin mining. We're big in Bitcoin trading. Basically, every facet of the Bitcoin ecosystem we are engaged in. And I think that what you'll see with stablecoin adoption is, again, it provides these on and off ramp vehicles for people to actually engage with a commodity like Bitcoin. And so oftentimes, especially in a post-Genius world, stablecoins will be the first introduction to the digital asset ecosystem that people have. And with that, they start getting comfortable with how things move across chain. And obviously, Bitcoin being the granddaddy of them all, I think it'll be an invitation for people to actually use that as an investment vehicle of choice. And we're already starting to see wider spread adoption with larger institutions and multinationals. I think recently Bank of America announced they're allowing their wealth managers to start allocating funds of their clients into Bitcoin. The adoption is just beginning. And that's why I think that if you've been around this space for quite some time, which I'm sure many of you have, these cycles aren't as scary as people make them seem, right? It's volatile, sure. But I, again, think that we're just in the infancy of what this looks like long term. And the integrations of our products and others will only provide a cleaner pathway into this Bitcoin community for folks that want to engage in it.
Talk about the Tether transparency, the attestations, maybe the mix of, you mentioned Bitcoin, gold, treasuries. This is a pretty diversified basket on the back end. And so how do you guys think about those components?
Yeah, gold, Bitcoin, and T-bills, right? I think this year will be...
Sound like you're like Charles Schwab or something.
This year, I think we'll end up being a top 10 purchaser of T-bills. I think right now we're the 17th largest holder of T-bills in the world, including all sovereign states. And we're obviously increasing the amount of T-bills we have in the reserves as we move towards this Genius compliance standard. And so obviously, I firmly believe that USDT will also have reciprocity. And so we want to make sure that we fall, into this Genius compliant regulatory system. But currently we have USAT that fits that mold, and then we have 3 years to kind of get there on the USDT side. But in terms of the excess we have, we're still going to be certainly heavily invested in Bitcoin and looking to continue to grow our presence in that ecosystem long term.
What are you worried about going forward? Are there any big risks or anything that you think are need to be addressed?
I think that privacy is something that we're going to have to think about very deeply over the course of the next few years. It's something that the consumers demand. It's something that they deserve, and I think that there's also a race to create products that also allow people to have the privacy while engaging with this technology on a larger and greater scale. So, that's probably a conversation that could last 45 minutes to an hour if we really got into it. But I'll be curious to see how a lot of the folks working on this develop their technologies around it in the coming years.
Now, when you think about USAT, and then there's kind of, I'll call it Tether International, how do you think about shared technology in the back end, working together, collaborating? Obviously, there's a lot of network effects that kind of come into here, but there's really two technically different products as well. And so how do you guys think about that internally?
Yeah, look, our goal is to create interoperability with these products. So, the difference between Tether and USDT and USAT is that USDT, Tether International, is the issuer. USAT, Anchorage Digital Bank, is the issuer, which is a fully licensed OCC chartered bank here in the US. So separate reserves. And through that, we can facilitate interoperability between the two products in ways that the consumer doesn't have to think about which product they're actually using, right? It's just Tether at the end of the day. And that can be done through the issuer. It can be done through pools on exchanges. It can be done in the DeFi space with TVLs. I mean, there's all sorts of ways to do this. But really, it's up to the customer or the institution that we're servicing and how they want to set this up. But we're confident in our ability to make this as seamless as possible for the user, so that these corridors are actually seamless and there's no speed bumps along the way.
All right, and what's maybe your final word for everyone here in terms of USAT?
Just be on the lookout. Look, we're in this brave new world now of stablecoin adoption. I think that USAT will be the product of choice for many institutions, and so if you see it pop up with a financial service provider that you use, feel free to give it a try, and hopefully you can help others learn exactly what this is all about, help them save money.
Amazing. All right, thank you so much, Bill. I appreciate it. All right, we're going to add a chair here real quick, and we're going to bring up 3 friends of mine who are frankly way smarter than me. I need to bring you move stuff around all the time. That's pretty impressive there, my friend. All right, next up, we've got Russell Okong, Natalie Brunel, and Bill Miller IV, who are going to come up here. You guys are supposed to clap. What's that song like? No man should have all that power. I just say clap. You guys all clap. That's pretty good. All right, you guys ready? When we decided to do this, I was trying to think about what should the title of this panel be, and the thing we came up with that I think just embodies all 3 of you in different ways is like Bitcoiners versus the world. I feel like all 4 of us, frankly, on a day-to-day basis, you hear Bitcoin is dumb, Bitcoin doesn't work, Bitcoin's going down, all like the normal stuff. And that comes from like the Twitterverse. Then you got to deal with the smart people who are like, Bitcoin has no intrinsic value, Bitcoin is this, Bitcoin is that. And I feel like this is brothers and sisters in arms up here of pushing back and saying, hey, everyone calm down. Russ, maybe let's start with you. You were the first professional athlete to really, I think, advocate for getting paid in Bitcoin. It's one thing for, anonymous accounts on Twitter to say it. As an NFL player to say it, I think people are like, oh, hold on a second. Is he crazy or, is this going to catch on? Just talk us through a little bit as to, that experience, what people were saying, and how you guys kind of navigated it.
Oh, no problem. And definitely crazy. I'm not going to dismiss that at all. I think the best way to think about sports is, oftentimes, particularly after the Super Bowl, we're very enamored with the game itself. But oftentimes we miss, right, the men, the women, the people, right, that are actually involved into the sport. And if you think about it, football essentially is a game of percentages, right? So, imagine you are 10 years old and you have displayed exceptional talent, right? And you then start playing football, right? And then you move on to the high school level. That means out of all of the people who played, right, and picked up a helmet, you are 1% of people who have made it to the high school level. And then subsequently, if you want to make it to the collegiate level, it's essentially the same thing. You become 1% of all people who have went from the high school level to the collegiate. And then even on the elite level, it's the same type of percentage that exists there. Now, when you finally make it to the NFL, right, and you think you're living your dream, you hear another stat which says, well, 70% of all athletes will likely be broke, if not go through some form of divorce. And it's very difficult, and maybe perhaps I'm telling my story here, because you have done everything, right, to make to this level. You've essentially beat all the odds. And you're looking at a very high likelihood, a very high probability where you will most likely be broke. So what do you do? What do you do with this information? On one end, you have a series of financial advisors who, by the way, have never actually seen a check as large as you have, right, that are telling you how to invest your money. You have an agent who is, they want their percentage. And then you have family who, by the way, you very love, that they need loans. They need to be taken care of. So what do you do? What do you do with this information? What do you do when you've committed your whole life to a craft and now you're faced with the reality that your blood, your sweat, and your tears cannot help you use the brute force on the field or on the court, right, in the economic realm. And when I really connected with Bitcoin, and Pomp, I'm going to give you a little shout out here. I was actually listening to one of your podcasts around the time that I ended up sharing with one of my teammates, is they said Bitcoin is time. And it was a very important line for me because I had spent so much time trading my health for wealth. And when you do that much trades, you tend to forget. You tend to forget that one day, right, you likely may not have the opportunity to enjoy your wealth, right, or which is really health at the end of the day. You know, so when I saw Bitcoin, it was crazy how simple it was just to buy, self-custody, and hold your Bitcoin, right, and that you could change the trajectory of your entire lives. And that's what I've tried to share with many of my teammates, people I respect and trust.
I think you've done a pretty good job. Natalie, you came at this from a different angle. I think that your family has a very unique story. You guys immigrated to this country. You were working in the media. Newsflash, the media has not been very kind to Bitcoin over the years.
They're loving it this week.
Yeah, they do like it when it goes down. Then they are Bitcoin's friend. But you actually not only, I think, kind of got orange-pilled, became a Bitcoin believer, but also then got the confidence to leave your job and really kind of go on your own and do the things that you thought that you were going to enjoy most. So talk about how kind of Bitcoin, coming from an angle of every single one of your colleagues, was probably advocating for the exact opposite of the conclusion that you came to.
Yeah, but I want to start, I guess, kind of earlier than that, to your point. I mean, I think my family's background and my story of financial loss at a young age really informed and shaped me in so many ways. And we're so fortunate here in the West to look at Bitcoin only from, a price angle, because I think so many times about how if Bitcoin existed when my parents were growing up under communism, they could have converted any money that they had saved into Bitcoin and they would have been able to flee with it. And instead, they could only bring whatever they could fit in 2 suitcases after waiting decades to be able to come here to start over and pursue the American dream, not having any guarantee of what would happen. And then to watch them work so hard, and when I went off to college, have the great financial crisis hit and have them lose everything and see the rug pulled out from under you and the bankers get bailed out on Wall Street. That's why I'm a Bitcoiner, because it fixes a system that's so broken that incentivizes the worst of, I think, human behavior, whereas Bitcoin rewards value. And it's a slow process, but look how far we've come in 15 years. 15 years ago this week, Bitcoin was $1. And now it's trading in the 60,000s. It's gone all the way up to 126,000. We have to zoom out a little bit. I'm not discouraged. And of course, in the media, they're loving it this week right now. They're talking about how it's dead. They're bringing on all the Bitcoin bears. But I think the hard work happens now where we get to educate people. They get to accumulate and come in at a lower cost basis and tell them how important this is as not just number go up, but as a freedom technology for all of us. Because gold, okay, it's got some great features, but it has a central flaw, which means it's physical. You can't transport it. I can't send my golden bar across the world in a matter of seconds and have it settle. And that's why it doesn't represent freedom. Bitcoin is freedom money at any price.
Bill, I think you came at it from an even different angle, which is you have a very strong training in traditional finance, and you really understand, probably more so than almost anyone in this room. If I sat down with you and we looked at a company, you would start talking about cash flow analysis and assets and enterprise value and all the things that go into analyzing a business. You're one of the most hardcore Bitcoin believers I know. Talk about this almost dichotomy, right? Of you understand the traditional world and maybe all the critiques that somebody would have of Bitcoin, yet still come to the same conclusion as Natalie, Russ, or myself.
Yeah, I think it comes down to just understanding at the fundamental level what capital is, what it should be, how we account for it. And then when you just think about what Natalie was saying a second ago about gold and how Bitcoin is a vastly superior technology to gold, even though it hasn't correlated with gold over the past year or so, that's where all the opportunity is. It's more liquid, it's verifiable, it's auditable, it's harder to steal, and it's much more scarce on a supply curve basis. So it's understanding what we're trying to do fundamentally with the money, but it's also thinking about value in a flexible way. And just because everyone hasn't come around to the same view that we have yet doesn't mean that they won't. I mean, you look at what happened over the past 15 years to go from $1 to now it's $66,000. I mean, there's enormous signaling value in markets and in free markets. And so, you know, it took 100 years for running water to go from being a possibility to being ubiquitous in houses. And so I see this as a multi-decade trend, and I think we're just getting started.
Now, each one of you, I think in your own unique way, if I was to say you're a Bitcoiner, you have a very specific kind of worldview, maybe a distrust of certain institutions, organizations, et cetera. But also there is this deep loyalty and, you know, kind of family driven approach to life in general. And, you know, Rush, you were talking about kind of health is time and wealth is time, et cetera. But I think each one of you in a very unique way think a lot about a long-term impact, both on your families, on yourselves. But it seems that the Bitcoiner mindset seeps into other aspects of your life. Right? You know, I think the journey that you've gone on, like, I don't know if you go on that journey if you don't start thinking about Bitcoin, right? I mean, you tell me. But can each of you kind of just talk about, like, the Bitcoiner mindset and outside of just the financial portfolio component?
Yeah, I can definitely try to take a swing at that. So I think the best way that I've really tried to navigate this, and maybe I can share a phone call that I received this past week, and as the Bitcoin price rolled down, it's always very frustrating. Right, and it's not frustrating for the points in regards to just the price, but it's frustrating because, look, Wall Street is going to do what Wall Street does, right? So to expect anything would happen that separate of derivatives and financial products being built on top of Bitcoin is just like mind blowing. But I remember receiving a call from one of my friends, and he's worried about what the price is going to do, and I'm mad at him because I'm just like, look, have I not expressed to you what Bitcoin is, right? Look at it from this perspective. Do you own Bitcoin, or does the price of Bitcoin own you? Because at the end of the day, right, when I got into Bitcoin and when I explained Bitcoin to you, it's to say, look, when you own this asset, you are sovereign. You are sovereign. That means it's not just about, hey, I can take this Bitcoin into self-custody, but now I need to exhibit levels of self-control over my entire life and my portfolio. These two things work together, right? And whether it's my emotional sovereignty, my personal sovereignty, or even how I look at my family, right? Bitcoin has legitimately set us apart, where now I can think long-term. Now I want more time with my kids, so now I think about my health in different ways. I want them to have a very independent and first-principled way in which they look at education. So now we homeschool our kids, right? We look at things in such a different way for the points you made, Pomp, because now with Bitcoin, we can take a step back and we can actually evaluate and look at our lives, which to me, that's the point. That's the point. That's what Bitcoin it gives you. It gives you time. Why do you need time? Because we need to reflect. We need to think about our situation. We need to observe ourselves, right? So Bitcoin has certainly allowed me to do that in a world which was complete dog eat dog, and I could have just kept playing and doing things forever and been on the hamster wheel for my entire life. So I'm very grateful for Bitcoin in that way.
Natalie?
Bitcoin restored hope for me, and I think hope is the most important motivating force in economics. And I think it also encourages people to restore a sense of agency. One of the things that makes me the most disappointed when I look out at our social circumstances right now is just how so many people have absolved themselves of responsibility, and they're crying out for someone to come save them, whether that's the government or whoever. They are no longer sovereign, and they no longer have hope. And I think a lot of it is rooted in that feeling of frustration that I played all the rules, I played them the right way, I followed them, I did the school, I got the good degree, I worked hard, I'm putting in extra hours, I got the side job, and I still can't afford what my parents or my grandparents could on the same income. And I think that changes people, and it makes them feel frustrated. All of a sudden, they're encouraged to compare themselves and their lives with others that are doing much better. And of course, with social media, it's very easy to see people that are on the surface, look, they're doing great, they own all the assets, they're happy. But if we look deeper, I mean, the thing that connects us is this universal feeling that the American dream, I think, represents, which is that if you work hard, you can do anything. If you just have a shot, if you put all of your perseverance, your innovation, if you are able to just have a shot, you can do whatever you want to accomplish. And I think that has no longer been feasible for a lot of people in America, and they feel like no matter how hard they work, it's out of reach. And that's how I felt. I felt that way when I was working in news. I was ascending in my career, getting my raises. I had a solid job and a stable salary, but I felt like I was never any closer to having my dream of buying a home or starting a family and slowing down and wondering what life is all about. And Bitcoin changed that for me. And despite all this price volatility, I feel like it made me aware of the possibility of us coming together on something where, again, the rules are fair. And you would probably agree with this. If we're all playing in this game of life, but the rules are rigged to give an advantage to some people, you're not happy for the winners. You kind of resent them, and you look to them and you think, well, you wouldn't have won if the system was fair. And I think that we need a more level playing field where more people have an opportunity to play a fair game. And it's not going to be equal outcome, but it'll be a more fair, accessible system of opportunities for everyone.
Bill, what about you? I saw you on CNBC yesterday having a field day with these people. You were enjoying yourself as they threw all these dumb ideas at you.
I was trying. So everyone in this room, everyone in the world is born to a system of capital governance that they did not choose. And so for me, opting into Bitcoin was a pretty cool thing. A new technology that really didn't exist until 15 years ago and was not even possible. And so today it is possible. And so opting into that system has been cool for me. You know, from an active fund management perspective, outperforming the market is a very hard thing to do. And you have to take active risks that other people don't take if you want to have a chance at doing that. And so when I look around at all the opportunities that you could choose to invest in over the long term, that give yourself a reasonable chance at outperforming the overall market, Bitcoin is that choice for me. Among a handful of other things, obviously we do, but that's a big part of it. And so that's how I got there. And again, it just comes down to understanding fundamentally the whys. Why do you own Bitcoin? Well, it's a better system of capital governance. People will eventually realize that, just as they have for the past 15 years. They'll continue to come around to it. It will continue to be volatile. Once the volatility is gone, there won't be any opportunity. And so we're in it for the long term.
When you think of the market structure, I think that the critics would point to a bunch of data points, right? They'll say, oh, hash rate is down 40%, or they'll point and say, oh, you can't buy a coffee with a Bitcoin, right? And all these kind of components that people have been saying for years and years. When you're talking to other fund managers or institutions, what are you hearing there? Or has there been any movement in their kind of acceptance of Bitcoin, or what are those conversations like behind closed doors?
I mean, I think one of the dirty secrets is I think a lot of fund managers that can't own it in their own funds, there still are legal challenges to owning it in a mutual fund, by the way, but they own it personally. A lot of fund managers just own it personally, and they can't do it in funds. So I think that's important for people to be aware of.
Natalie, what about you and your conversations? You go all around the world, you interview all these people. It seems like there is this like persistent optimism from the Bitcoiners, but what about the people who don't hold Bitcoin? Is it still a belief like this thing's going to zero and this is just a Ponzi scheme and we're all idiots in this room? Or is there now at least a belief of like, okay, maybe it's not worth, $1 million, but it's also not going to go to zero?
I try to always focus on how much progress we've made, but there's still such a huge education gap. There really is. It's one of the reasons why I wrote the book, Bitcoin is for Everyone. I just wanted something that spoke to the average, like mainstream audience member. And those are really the people I used to speak to when I worked on camera and news. It was like, they're probably at home at 5 o'clock or 6 o'clock at night. They've just come home from a really crazy day and I have to inform them and I have about 2 minutes to do it. And the most important thing I need to do is make them feel something, which is why I always try to go back to that human experience angle of Bitcoin. And that's what I touched on so deeply in the book. Because at the end of the day, this isn't just about numbers on spreadsheets or balance sheets for me. This is like truly about freedom and sovereignty and taking back control over your future, which so many people, again, just feel like they're treading water, they're drowning. And we're all in this system. And so when very few people are at the top and own everything, and it's very, lopsided in terms of equity, that's a system that's very unstable for everyone. If you're part of the 1%, yay, lucky you, but you're dealing with 99% of people who feel so angry and upset, and they're pulling apart, and we're having all sorts of civil issues that I think are symptoms of this deeper problem that people just don't feel empowered. So I want to empower people. I think that that's the message. If we keep educating, and it's going to be a slow burn, but if we just keep doing our part to educate people about how this system works, what money is, why it doesn't hold value, why it's designed to destroy your purchasing power, and what solutions exist, obviously Bitcoin, I think, being the best one, then I think slowly but surely we're going to, get the world on the Bitcoin standard.
Russ, maybe we'll finish with you talking about, you've already mentioned very diverse audiences, your kids, professional athletes. Maybe those two groups are more similar than we would like to think, but talk a little bit about, when you're talking about Bitcoin, there is a way to talk about this that resonates with a person, right? It's not like 2 + 2 = 4. It doesn't matter who you are in the world. Bitcoin is kind of different things to different people. How do you approach these conversations, especially when it's not people from a financial standpoint? Because I think the financial conversation is very clear. Hey, the number does this thing and it goes up for these reasons, whatever. When you're talking to it about sovereignty and some of these more kind of qualitative aspects, it's a different conversation.
Yeah, really good question. I guess I would frame it this way. I've been a team captain on every team I've been on.
Flex.
A little bit. And what that means is that I've been elected by my peers to represent them on the field. And when I think about the relationships, the opportunities that I've had to share Bitcoin, a lot of it's come from having that platform, is that they can confide in me, and they trust me, they know that I've done all the diligence that I possibly can to provide them the information to have the right type of vantage point when it comes to Bitcoin. And I think that's where it starts, is before you start talking about Bitcoin and all its qualities, right? Can that person trust you? Can they trust and know that you have their best, that you have their best, what's the word I'm looking for? You have their best financial health in mind, right? Their best economic health in mind. You care about them as a person. So when I've talked about Bitcoin, a lot of it's kind of been that. A funny quick story, and I think this is important for people like you, is I've been trying to convince some of my family members to get into Bitcoin. And my uncle finally calls me and he's like, hey, I finally got into Bitcoin. Oh, cool. Do you need a wallet, whatever? He said, yeah, I bought a Bitcoin treasury company. I thought it was an important lesson that as much as I may want to advocate for Bitcoin and I want to talk about why Bitcoin matters, for some people, having exposure to Bitcoin is just going to make a lot more sense. So I think that's just a reality that we should all, deal with, is just meet people where they are.
Makes sense to me. Bitcoiners versus the world. I'll take us all day long, my friends.
All day.
Thank you guys very much.
Thank you.
All right, next up we've got Jeff Park and who else is coming up here? Matt Cole. Should be like a reality TV, just watching you carry this thing. That's incredible. How about a hand for that guy, just carrying the chair like that? That's pretty good. All right. What's going on with Bitcoin, guys? This is, there's a lot of people in this room. I've been talking to people for the last couple of days. Everyone knows that Bitcoin long-term is going to do well. But Bitcoin's not supposed to feel like this in the short term. So what's your guys' take as to what's going on?
First?
Oh, come on. You two aren't going to fight. You've got an opinion. Let's go.
First off, I loved Jeff's recent article about Bitcoin Row, and so that's why I was saying, well, you just wrote a great article on that, and I kind of think about the world the same way. And so first off, when you zoom out and you look at Bitcoin from any 4-year period, nothing has changed. We are in the business of underwriting volatility, and so what I mean by that is, I don't know about you guys, I didn't predict that Bitcoin was going to be where it is today. But I did expect 50% drawdowns still as a regular occurrence in the forward-looking view of what we expected Bitcoin to do. And in our company view, and this is just kind of coming from a pension background, is if I can underwrite time and direction, then I don't have to forecast an individual quarter, an individual year. And so my thing is, has the fundamentals changed? Is the U.S. still taking out debt at an unsustainable rate? I think the answer is yes. I don't know if you have a view that the debt crisis will be solved in the near future.
I think it's going to be worse.
I think it's going to be worse, right? And so if that's the view, then really this drawdown is nothing to be out of the ordinary, and the fundamentals haven't changed, and so we just ride it out. I think Warsh had something to do with it, which we can get into, but I think nothing has changed, and so we just write it out and question if the fundamentals have changed, and I don't think they have.
What do you think Warsh's impact, or having Warsh as the Fed chair next, is that good or bad for Bitcoin, or we're agnostic?
Yeah, so for sure, what Warsh has shown is Bitcoin's correlation to risk assets in general are at an all-time high. Because I think what happened with the Warsh announcement wasn't necessarily a Bitcoin sell-off, but it was actually a risk sell-off. And that correlation has increased pretty dramatically, I would say, since last summer, and got accentuated even with the news flow today. So I think there's two versions of the story, right? Because on one hand, there is this hawkish version of balance sheet reduction as a journey that we have not ventured into beyond what this ample reserve system could look like. And there's a lot of uncertainty about this, which is why I think you can see risk assets generally being sold off. And Bitcoin just is now correlated to that dynamic because it's owned by the same portfolio managers in a multi-asset framework where they're underwriting that to be a risk asset. But the thing that I'm long-term really bullish about Warsh is if he actually is able to be what I call like a very pragmatic economist to like rewriting the engines of what Fed independence should look like, there's a version where like the whole monetary setup as we know it is finally going to evolve into something that is a little bit more anti-fragile. And in that world, there's a restoration of what true store value could look like as a reserve asset. So long term, I do feel like it's a little bit painful always to kind of introduce volatility to change from an institution that we've gotten very comfortable with. But deep down, like we all know the current system's not on a good path, and we have to start like ripping the Band-Aid a little bit. But long term, like his holy grail towards what he wants the Fed to be and what he thinks the role of like the interest rate should be, I think all of that points towards a pretty positive, healthy mood for Bitcoin in the future.
So I have a question for you guys, because I follow you guys very closely. And I'm going to frame it with a viewpoint and then a question to see how hard you will push back on this viewpoint. Okay, so my own personal journey as someone that was, a portfolio manager, I managed a lot of treasuries, right? So my journey to be why I was a Bitcoiner was those conversations with the Fed, feeling like I was being gaslit and seeing the printing of money. And Warsh had a similar viewpoint at that time, that QE would be inflationary and was very negative on QE, but now seems to be aligned with the viewpoint that the future is more deflationary from AI than inflationary. And so my viewpoint on if I was the Fed chair would be original QE, I would have been negative on it. That would cause inflation, and I think it did cause asset price inflation, not CPI inflation. But if I view the future risk as deflation, then my viewpoint might be different today than it was in the past on QE or the size of the balance sheet. So do you think that there's a chance that in the Senate confirmation process, when they're grilling him and asking him questions, right, like who's going to be grilling him? It's the Senate and the House, the people that can't get their stuff together and want to borrow money. So if Warsh goes in there and says, yeah, I'm going to shrink the balance sheet, I'm not going to give you guys the drugs that we've been giving, I don't know if they confirm him, but do you think he comes in maybe as more of a dove than the market might anticipate?
Absolutely. And I think there's a thing that people forget. Kevin Warsh actually, from his first term as Fed governor, resigned. And he actually left. And the reason he left was because he disagreed with the committee at the time of engaging in a second round of QE. because he knew the first time when it happened in '08 what it took. But what he was against was this idea of complacency, that now the QE framework is the backbone of the entire global financial framework, where moral hazard is changing the cost of capital. And he was vehemently opposed to it, to the point where actually he resigned, right? So like, I think this is incredible. Like, we have an elite like academic who's also a huge capital markets practitioner, right, from Duquesne and Druckenmiller's days, and actually has the guts to just call the shots as he sees it. And that kind of iconoclastic regulator type personality is so far, as we all now see in the world, that if anyone can ever actually go on the venture of a new Treasury Fed Accord to reset people's expectations on the role of the dollar, I think this is it. I think this is the very powerful combination of personalities and expertise and culture that I don't know if we'll ever get a chance to replicate. So I'm just personally very excited to see what's going to come through with it. And I think it is long-term very, very positive for Bitcoin.
I'd call it the monetary slingshot. So much deflation up front that everyone in this room is going to beg them to print money and cut rates and do all these things to try to overcome or negate the deflation, that then you almost think it like it's pulling you back, and then they start printing, and then it slingshots everything forward. And my guess is that he really understands the deflation. And you're right. Politicians are like, "Oh, you're going to print money? We love you. Can we accelerate the confirmation?" But he also has Trump and Bessent, and I do think that there is this very weird dynamic of where the executive branch has basically done a hostile takeover of the economy by placing these people in these spots that understand the economic policies that are being put in place. Kind of feel like they're in control now, and the Fed is, having to respond rather than drive policy. Is that your take?
Absolutely, and it's what makes me, one, so excited, but two, kind of understanding why the market might throw a short-term fit, right? The market has gotten so used to this, we're going to give you some drugs, some medicine that doesn't fix the underlying problem, but to make you feel okay, and that reduces volatility, pushes asset prices up. When you have someone that's forward-looking, like Warsh, that I think understands that the Fed is not independent, which, I mean, in this group, it's like, that's almost like a laughable thing.
What a genius.
But, just coming back from my old seat at CalPERS, like, a lot of institutions still tended to fall to that bias of the perception of Fed independence, that you would have, Janet Yellen, like, swear to the core, the Fed is independent, and that there's not some, kind of backdoor, quasi handshake dealing that, and to just say, like, look, like, there's going to be an accord between the Fed and the Treasury, that we're going to be thinking together. We're going to be thinking forward-looking, not backward-looking. I say, like, that's about the most bullish thing that I could possibly.
It's kind of crazy though. Like, why would they not be working together? Right? Like, you think about it from, like, as a country, like, don't we want the people in these positions of influence to be working together? Let's not spend much more time on macro, because everyone wants to know about digital credit. You guys have got a lot of opinions there. Jeff, maybe we'll start with you in terms of, your thoughts on the rise of digital credit and where there's opportunity versus where maybe people should be careful.
Yeah, I think, the credit market in the end is an incredibly abundant and large market that even though retail investors don't participate in, is kind of the core of our financial system. And so in this world where, like, people are starved for yield and they're actually trying to think about where to earn appropriate yield that measures up to growth expectations, like, we think we're in a period of decent yield because, like, the Fed's rate that's at 3.5 or whatever. But, like, actually what we've seen is on a real rate, that's actually been pretty deflationary too, right? I think there's data that now show, like, most people who started their entry-level jobs post-college were now on the 6th year of their real wage having gone down. So there's actually, like, a real problem with, like, yield as a concept, even away from, like, nominal numbers. And the thing about Bitcoin is that, like, if you believe in the price appreciation that is possible over a long time frame, you can think about risk segmentation, where people would choose to take something current today versus the volatility of underwriting the uncertainty of tomorrow. And so, to me, I think it's a big market, and it's also a market that is heavily dictated by regulators in kind of like a box checking format, right? Like, what I mean to say is, like, credit ratings matter, and to get credit ratings, you got to be able to do things that hasn't been done before. And so like there's things that just have to get solved. But yesterday I saw Ledin actually issued an ABS securitization for the first time that the S&P actually graded. And it was like a $200 million program where the junior piece was rated B minus, right? The equity tranche of an ABS securitization was rated B minus. That's the same credit rating as MicroStrategy, which actually would have a senior credit relative to all the other equity things they have in the back. All to say, I don't think the S&P knows what they're doing. Like, I actually don't think people have an understanding of like what the appropriate credit rating should be on these things. And that's basically an opportunity for somebody who is smart and clever to think about what that appropriate risk-adjusted return is. And people are going to figure it out. And so I think it's a question of like just risk tranching and risk preferences. And because we all know in the end, institutions, right, they're motivated by different things than principal investors like you and I that are here. They actually have, a lot more guardrails as to how they're measured on their performance success, the volatility drawdowns, and the current operating needs that they have to support. And credit just fits a role that Bitcoin historically, because it is a non-cash flowing asset, could never tap into. And this digital credit finally opens a path, an aperture for that class of investors to come in, which I think is huge.
So maybe taking my old seat at CalPERS for a second and talk about kind of a few different ways to view digital credit. So one, digital credit's been around for just over a year now. For an institution, you need anything that you're going to invest in, unless you're just going to invest like a couple dollars just to watch it, to have a track record. Track records are a minimum of 3 years. And that 3-year period is not typically, I'm going to cut you a multi-billion-dollar check at year 3 in 1 day. It's that once you have a track record, we can start to assess what the risk and return opportunity of this asset is. And so I think sometimes people think, oh, like, when is CalPERS going to buy SETA or Stretch? They might buy it tomorrow. I mean, I have a lot of friends there, but I think the real conversation is they need to see a track record. And so what helps build a track record? There's nothing better to build a track record than a bear market, actually. And if in a bear market where a lot of the people that are watching this from the outside are expecting the issuers of digital credit to have to sell Bitcoin to not be able to meet their interest payments, if they don't have to sell Bitcoin and they made interest payments, then you get a 3-year track record. That's the best 3-year track record that you possibly could have, to say this is how it performed in a bear market. You don't have to model it and think and hope. We can actually show you that. So from that perspective, I think we're in a great time to build digital credit. And then the second thing is, well, what does the risk return opportunity look like? We're learning about the volatility of these instruments as we speak, right? How the market treats them. And I think the TLDR is that I view them as investment grade credit. S&P doesn't know what they're talking about. They give 0 credit to Bitcoin. But the market is assigning basically a almost 2 times of the yield of high yield. So the market is assigning a very high risk to these assets. So the market is disconnected. That's an opportunity for people that can underwrite Bitcoin risk. But if you're a pension, how do pensions think? They think, how do I earn a 7% yield over the long term? And how they construct their portfolio is the fixed income side is less than 7%, and then the equity side is more than 7%, and they try to blend that together to earn 7%. If someone could go in there and say, here's income that's 10% or 11% or 12%, so it's income, but it's offensive income versus negative, defensive income, and we have a track record through a bear market, that starts to become interesting, but we're so early in the process. This is going to be a multi-year process, and so for now, I think it's more people that don't have those restrictions.
Are you guys going to do more? Like, will you have other offerings? I don't know what you can talk about or not talk about, but like, how do you think about, is it a suite, or is it, you just put all your time and energy into the current product?
So our hope is that it's SETA only. We love a simple capital structure, but we've been very open that, for on the common side, the goal is going to be to manage our balance sheet, have the amplification ratio that we want. And we think because of the relative small size of Strive versus a strategy, that there's a high chance that SETA might be able to grow with our common over time and just grow the size of SETA. If there was some scenario where we needed additional digital credit and SETA was not able to meet that, then we would consider another digital credit offering. But at this point, that's not the base case.
Jeff, talk a little bit about the yield generation and how you as an investor would think about investing in maybe digital credit versus, traditional fixed income.
Yeah, I think what's really kind of amazing could be if there was a way to make your underlying collateral even more productive to be able to be the source of the current obligations on those liabilities. I think that is kind of one version that is easy for everyone to understand, which is people are worried about, well, where's the cash flow going to come from if Bitcoin's actually kind of, you're hoping for the price appreciation for which we're all assuming that value has to be realized, right, at some level. And if you could just maybe make Bitcoin a little more productive where it can generate yield because it can participate in the capital markets in a healthy way, I think, when you put those things together, it makes the story much more digestible and rational and in some ways risk reduced. And so with Bitcoin in particular, I've always said, and I'll say it again, the volatility is the best part of why that asset is valuable. And if you can monetize that volatility by doing some call overrights or cash cover put sellings or other kinds of things around it where you're being paid essentially to be patient, you can actually then make that into a yield engine where you can either give it to the pref holders as interest income, or you can use it to buy more Bitcoin on the balance sheet with that organic kind of yield generation. So I think the next versions of Bitcoin treasury companies we'll continue to see will probably fall into that kind of more kind of advanced operation of trying to make the Bitcoin useful somehow, or finding cash flows adjacent to Bitcoin that can also bring more utility to the underlying balance sheet.
Amazing. I learned so much from both of you guys. Thank you guys so much for doing this.
Thank you.
All right, next up we have Fred Thiel. It's a long walk, I know. You got to get your steps in there. All right. You run a very interesting business that has a lot of components and inputs. You have hardware, you have energy, you've got Bitcoin, you've got hash rate. I mean, you got a lot of stuff going on that you've got to figure out how the hell do I navigate all this stuff. Maybe a great place to start. Let's just start with the energy. Everywhere that I read online, energy is not going to be enough availability for what we need because of AI and Bitcoin. Is that true?
Yeah, I think if you look at the big demand right now for energy is from obviously the HPC AI sector. And they need energy that is on now and not on in 2029. And if you're trying to get access to 500 megawatts of power and you get in a queue, you're not going to get it anytime soon. So the hyperscalers are now very focused, as are the neoclouds, on looking at, okay, I don't need a 1 gigawatt data center. I need anything north of 100 megawatts, which has the ability to grow, and I need the power to be on already. Because there are two issues that impact the hyperscalers' ability to bring capacity online, and realize the timing of when they bring their site online is more important than when it costs them to bring it online. Because it's all about a capacity war. Who has GPUs running? It's not about necessarily the specific type of GPU, but it's who has stuff running, because the more stuff you have running, the smarter your model is, the more you can do, right? So permitting is the second problem. So you may have the ability to take powered land and build a hyperscaler site on it, but if that county has a moratorium, won't allow you to build a big hyperscaler center. It's an issue. And I think what you're going to see now is a huge amount of innovation around what defines a data center and how they're built. That is going to make it much more attractive for hyperscalers to talk to people like us who have, over a gigawatt of power that's turned on and ready to go.
So a couple things. Talk about how much power you guys have today, how much is Bitcoin mining versus turned on but not being used, so then how much is in development?
So we have 1.1 gigawatts of power that's operating as Bitcoin mining today. We have another 700 megawatts of power that is unenergized, if you would. That is expansion capacity for that. And we have another couple of gigawatts of power in the pipeline behind that. A lot of our growth for Bitcoin mining is actually targeted internationally. And the reason why is, in the US, to get 100 megawatts of power, I have to fight a hyperscaler. Or somebody who's trying to get it to a hyperscaler. But internationally, there is much less demand for AI and hyperscaler capacity. You can go in lots of countries in the Middle East, you can go in countries in Europe, and a big site for them for AI is 40 megawatts. And so you have power dislocation economics happening around the world, where you have places like Saudi Arabia, where they have built huge amounts of power infrastructure specifically to generate hydrogen. And the hydrogen market isn't developing. And so you have all this renewable energy that's available, but isn't connected to a grid to be sold, and there isn't a city anywhere nearby that is available that they now want to monetize. You have countries like France, where 66% of the energy is nuclear, the rest is mostly renewable, and the capacity of the nuclear power plants is running below 70%. And so they have way excess energy. But there it's a permitting issue. But so I think you look at the business that we or our peers are in, and I think you're going to see most of the US miners will do some portion, if not all, conversion towards AI HPC domestically, and those of us who operate internationally will continue to grow Bitcoin mining internationally, where it's much more economically viable today than in the US.
Is that bad for Bitcoin? Like, do we lose hash rate?
Sorry?
Is that bad for Bitcoin, and do we lose hash rate?
No, I think, listen, the Bitcoin blockchain is oversecured, right? I mean, we have way too many people mining Bitcoin. You don't have enough transaction volume today to support the industry. You go to the halving in 2032, and a lot of miners are going to be worrying about what the business they should be in.
Tariffs obviously have had a huge impact on people in the physical economy. Some positive, some negative. You guys have hardware, and all the electrical components, et cetera. What are you guys seeing in your business?
We operate in a market where today the cost of a terahash of Bitcoin mining capacity is at its lowest point, most probably ever. You know, you can buy mining rigs today for $8, $9 a terahash. Go back to the peak in 2021, it was $80 a terahash for a much less efficient machine.
What is driving that? That's tech innovation driving it down?
It's a combination of oversupply and no demand. Think about it. 40% of miners in the US are the public miners. The vast majority of them have all said, we're going to do HPC or AI. They're not buying any more miners. Bitmain has shut down what was going to be a US assembly facility. They're trying to place machines anywhere they can to put them to work. Nobody is buying Bitcoin miners because right now, unless Bitcoin price moves up, there's no profit margin in adding capacity. You're literally just taking money off the table from yourself. And so it's a perfect time to expand if you are wanting to expand somewhere. And it's a marketplace where really energy rules, and you have to have energy, and that drives everything.
You mentioned earlier innovation around data centers and what is considered a data center. If you go to the extreme, we've heard Elon talk about like the self-driving car, robo-taxi, kind of decentralized thing. He is literally talking about now putting data centers in space to get away from the regulation on Earth. Is that what you're talking about, or are you talking about other versions?
No, I mean, data centers in space, I don't know if any of you have ever built electronics that have to operate in space, but your average GPU will die a quick death from gamma radiation in space, and there's no way to service it. So I think it's a great Elon thing for him to focus on, build data centers on the moon. It's a moonshot type of project, which is perfect for him. Data center innovation is, if you look at Bitcoin mining, it costs you a little over $1 million a megawatt for infrastructure and miners. Infrastructure alone in the data center world is $12 million a megawatt. Add to that another $24 to $30 million a megawatt for GPUs. That's a crazy cost. Now, granted, great revenues, but if you can at least take the infrastructure down to $1 million a megawatt and solve that problem through modularizing a data center. And in the world of inference, you don't need to have all these huge clusters that are interconnected. I think you start seeing all of a sudden an ability to take advantage of power in all sorts of very interesting places. And just to be fair, revenue generation in the AI world is only done through inference. That's what you pay for. Right? You don't pay for training unless you're building models.
It strikes me that if AI and Bitcoin, you all have raced around the world essentially looking for these energy sources. I'm imagining that a very material amount of the capital from AI and Bitcoin is going into developing the energy source, and there people are trying to eat in, vertically integrate. What are you seeing on that front in terms of, in a way, the data center providers, the AI, and the Bitcoin consumers are really now energy developers?
Yeah, so again, it's all about time to energization of the data center. So if you're a hyperscaler, you have a certain amount of capacity you want to have online by the end of 2026, a certain amount by the end of 27, 28, 29. As you get beyond 29, there you can look at, I'm going to go build my own power generation, because that's going to take a couple of years to 3 years just to get permitting, et cetera. Anybody look at Vernova or GE Power's recent, or Siemens Power recent earnings releases, their orders are up 260%. The queues are 36 months to get equipment for generation. So building your own generation capacity is a long game. Right now it's a capacity game, and that's operational capacity, because that's what drives market share. And so they are looking for very fast ways to get online, and that's more easily done by finding people that have power. And so the value of powered land goes up very high.
How do you think about the difference in your business versus, if I'm a public market investor and I'm looking, okay, I got a bunch of these companies I can go and invest in. There's some that are pure play Bitcoin miners. There's some that are kind of these hybrid AI and Bitcoin. And then obviously there's just pure AI. But then I can even go deep into the energy stack. I can go into, Jordy Vischer talks a lot about like memory and all these kind of different components. What do I do? How do I think about this? And maybe what is differentiating about your business versus, so many other options?
Long-term value always accretes at the end, which is closest to the customer. In the historical software world, it was always software, application software. Hardware always commoditizes. You look at the internet build-out, you look at every single boom the industry has had, and I've worked in tech for 40 years.
How's that possible if you're only 21?
I wish. That was many years ago. And so all the value accretes at the end. If you look at why software stocks are getting hit so hard, it's because all of a sudden companies like Anthropic are showing that, hey, you know what, that ERP system you have, it doesn't have as much value. The moat that SAP has is being eroded now by AI, because while you won't necessarily rip SAP out, you will, through agentic technologies, essentially generate the insights that the humans who would be operating SAP would have. So you're stripping off a whole value layer off the ERP stack, CRM, insurance, drug discovery, all these things. And these agentic frameworks, because of things like Claude, you can create them at insane speeds. And so what's happening is the iterative speed of improvement and innovation that's happening is something that these large monolithic ERP and SaaS application vendors can't deal with, because their systems aren't built that way, right? And so if you look at this, it is going to be 2- and 3-man companies that build agentic frameworks for specific applications, and it's going to be a fly in the pan, because that company is going to be popular for about 6 to 12 months, and then somebody's going to come right around and eat them, and you're going to have huge volatility in this sector for the next 5 to 10 years, I think.
So what should people do?
I think you need to be really smart about looking at what is the long piece, the long pole, if you would, in the tent. Energy is a core part, but energy utilities are energy utilities. They're kind of boring. But you want to look at companies that control energy and infrastructure, because while people may say there is a bubble in AI, by the way, the amount of compute that is deployed today versus what will be deployed in 5 years, it's never getting shut off. And so you've got long-term, good, renewable, recurring revenues there. If you want more volatility, go further up the stack.
Now, when I see people online talking about the AI bubble, I think that there's a lot of folks who are like, hey, we're building all this stuff out. They worry about regulation, that, electricity prices are spiking in certain areas. But I also see this whole idea of like, this is classic, Silicon Valley. We make a bunch of cool stuff, but it doesn't actually improve anyone's life. I think I use it every day. If I polled the audience, I think they use it every day. So I'm assuming that that's probably not going to resonate. But how do you think about some of the regulatory stuff that you guys have been dealing with for a long time, right? There was less noise, there was pollution, there was whatever. Now it's electricity prices seem to be the big thing.
Yeah, so it's either noise, water, or electrical prices. Right? Those are the three typical things. NIMBYism, they don't want data centers in their backyard. Anybody here who lives in Loudoun County, North Virginia? It's a place that's kind of, a field of data centers, right? People don't want that in their backyard. They don't want higher electrical prices. And so the president's talking about doing a pact between the data center operators and the utilities so that the data centers may pay higher prices. It's really about becoming more efficient energy operators. If you think about what Bitcoin miners have had to do, we have been constantly chasing a need to have lower and lower and lower cost to produce what we do and become more and more energy efficient. And the AI industry, energy is a pittance of the total cost of what they have to do, right? Their cost is all CapEx around the equipment. As you start seeing a shift towards more ASIC-based compute, that's lower cost. And as you start seeing an ability to abstract the model from the hardware layer, so you can orchestrate AI workloads across the cheapest operating hardware wherever it's needed so that you get the quality of service on the delivery of your task within the time frame you need, you'll do that. And that will drive costs down because this industry, the AI industry, has already commoditized around this thing called cost of a token. And more importantly, how much inference do you get per megawatt? And so it's already commoditizing. And so there's this whole price curve that people are going to have to chase down. And one word of warning from an investment perspective. There is a huge obsolescence curve in AI that is a three-pronged or a three-line curve. In Bitcoin mining, we have one curve, and that's ASICs. And the fact that we have a halving, and that drives us to use more and more efficient ASICs. Those ASICs all plug into the same racks. They use the same power, and they use the same cooling. Biggest complaint that NVIDIA customers have is, I put in H100s, now I'm going to put in Blackwells. I have to retrofit all my racking, all my power, all my cooling. So now think about a company that just signed a lease with a hyperscaler, where they are putting in the equipment, not the hyperscaler. And in 3 years, that hyperscaler is going to say, you know what? You need to rip that out and put the next generation of stuff in there. The company hasn't even paid off this equipment. So I think you're going to see a lot of blow-ups amongst people who have gone out and kind of are renting bare metal to the hyperscalers versus people who are building powered land and then leasing it to the hyperscaler, and the hyperscaler takes all the CapEx risk. Those are the long-term. The people who are in the real estate business are going to be the long-term winners because the people who are putting bare metal and renting bare metal have to bear this obsolescence cost. And nobody can.
I don't think energy's going anywhere, and I think you're in a pretty good business. Fred Thiel, everybody.
Thank you.
All right, next up we got the Coinbase boys. Come on, guys, let's go. Got Brett and Sean coming up here. Ah, look, people clapping. See, yeah, look at that. You guys, I can already tell you guys are so well dressed. They think it's a fashion show over here between the two of you. All right, you ready?
Ready. We're live at the talk show. I love it.
Yeah, it's good. You two run different parts of Coinbase's business. And I thought an interesting way to do this would be, I want to talk about specific things that I think Coinbase is trying to do. And let's talk about it from an institutional standpoint and consumer standpoint and how you guys look at the different value propositions. So first is infrastructure. My take from the outside is that Coinbase is building a bunch of infrastructure so Coinbase can run at scale for both institutions and consumers. But you're also providing infrastructure to certain customers or clients. And then you are advocating for infrastructure type developments in finance in general that interface with Coinbase. Just can you guys talk about how you think about? Maybe Brett, we'll start with you on the institutional side with the infrastructure component of what you guys are doing.
So excited to be here. Thank you. And a great prompt to start. I appreciate that. So
As I think everyone knows, over the past 6 years, the institutional side has built a number of things. I think talking about it as infrastructure is a great way to frame it. So we run 4 different exchanges. We have the Prime platform, which is the main on-ramp. So that's where institutional capital opens an account at Coinbase. That's where the ETFs are. That's where high net worth is. That's where financial services, banks and brokers come to. And they onboard and open accounts in Prime. And that's the place where you can buy, sell, finance. You get the benefits across margin, so on and so forth. And then we have an asset management business as the third pillar. Over the past couple years, we've been quietly accumulating an insanely good clientele who's more looking at Coinbase as an infrastructure provider. So it's kind of our Amazon to AWS moment, where all the things that we've built, custody, trading, all those things as a service are now exposed to but institutions that want to participate in a digital world. And so the names that I'm allowed to share with you are names that have been out there for quite some time now, but PayPal is a good example. So PayPal competes with Coinbase Retail, but actually they use Coinbase custody and trading. You can find the disclosures, but PayPal is free to compete, with Coinbase on that side. The most interesting thing, that we've Revolut, SoFi, there's a long list. We have 300 clients now that have signed up. But the really big thing and current thing for this conversation is that we now have, if you look at the top 20 banks in the world, 5 of them have actually onboarded and 3 of them have publicly talked about their Coinbase integrations. What's interesting is that they're JP Morgan, Citibank, Standard Chartered, and I can't say the other 2, although I wish I could. And what's interesting about that crowd is that crowd has actually been interested in this space for a while. They all have, in different shades, some bit of capability to do this. But with the passage of the Genius Act, stablecoins have now entered the mainstream of the US financial and global financial system. And they're saying, how do we accelerate and actually meet client demand? So the build, buy, partner thing has been now accelerated. And what I'm seeing is even those that were ahead are actually selecting us as a partner to accelerate how they can meet clients where they are. So it's a super important. In fact, we have so much momentum. Brian actually created its own product group, okay? And that product group's mission is to actually onboard and provide infrastructure to all those that want to be in the space now.
What do you think?
Yeah.
By the way, just real quick, you know how successful your business has to be to talk about disclosures on the stage? I aspire to have a business that is successful, but go ahead.
I was just going to add, Brett was focused a lot on the institutional segment, which obviously is very core to the business. But in addition, the infrastructure that we provide powers a lot of developers. And I think the new entrant on that dimension is a lot of corporations that have now come to Coinbase that leverage the secure foundation that we've built from a custody, trading, financing perspective. But we've also built out a suite of APIs to help with payments. So whether that's pay-ins, payouts, settlements, disbursements, et cetera. And that's a new vertical or a use case that we're very excited about investing in.
Talk about the everything exchange, maybe from the business side. I think Max was the first one to ever talk to me about this, and he was like, I think he called it the DeFi mullet. And I was like, oh, here we go. And for those that don't know, the DeFi mullet is basically the trusted interface of Coinbase. So you're on the platform, you're familiar with it, you use it. But on the back end, sometimes you're using the centralized infrastructure. Other times you may be using some sort of decentralized, product, service, infrastructure, et cetera. And so, where are you guys with that? And how has adoption been, maybe on some of the decentralized stuff, not just the centralized stuff?
Yeah, so our goal with Coinbase, the consumer platform, is to be the #1 financial platform in the world. And what we see is this transition that will happen from assets being off-chain to on-chain. And the reason for that is that we believe that on-chain provides better financial infrastructure. It's an upgrade to the financial system in many ways. And so in Coinbase, customers now can trade a variety of different asset classes. We obviously started, and Coinbase is best known for crypto-native assets, Bitcoin, Ethereum, et cetera. But we recently rolled out prediction markets and have started to roll out equities as other assets. And with tokenization, we see those assets migrating on-chain. And directly through Coinbase, you can trade or access assets, whether they're off-chain or on-chain, just directly through the seamless and secure foundation of Coinbase. And so some of the early examples of that, where we've brought really innovative financial services that leverage crypto protocols on the back end, would be our partnership with Morpho, which is a borrow-lend protocol. So if you're a customer on Coinbase and you have Bitcoin and you'd like to take out a loan against that Bitcoin, you can, in one click, receive a loan in USDC. That's not powered by a centralized lending desk, so there's no counterparty risk to any individual financial institution, but it's actually all powered by the Morpho protocol and vaults that are on chain. We also offer trading through Coinbase on a variety of DEX assets, so you can now trade effectively any asset that's on Base or Solana, which includes millions of assets. And where we see that going over time is we can offer a differentiated suite of financial services by tapping into the open ecosystem that exists on crypto rails.
What about the institutions? Do they care at all about DeFi or decentralization or any of that, or they just want kind of a counterparty that understands the space, is trusted, and make sure that they do what they say they're going to do?
So within the context of Prime, actually a little surprising to me, we've had a lot of new entrants to the space actually say, we're not going to miss the next chapter. What is this DeFi thing? And let me experiment with another phase of how banks and people that have cash can be disintermediated from the current architecture. So if you're a Prime client, you can go into Prime on-chain wallet, and that's your window into this new world. And so actually, a little bit beyond my expectation, we've had new entrants come into the space and begin to, I would say, more experiment and learn and say, I know that I can do with one click of a button lending Brett from your Prime desk, and that's how I power most of my trading, trade finance related things. I want to buy now in the old systems, settle tomorrow, buy now. So we facilitate all of that. But in particular, what's happened is I think that the bank cohort is interested in saying, what is this DeFi thing? And who's lending? And how are they lending? And what is like this pool that exists of assets? And so there's been, I would say, a lot of education by doing in small bits and pieces, trying to figure out how this other ecosystem, which still operates outside the world of KYC and AML, and how that is also transforming capital markets. I'd say right now, most of the mind share is mostly on payments related architecture, the announcements from big exchanges going to 24/7. So a lot of readiness and hurry up, we got to catch up to this thing is going on in the banks and broker system. And they're really looking at the stablecoin world to try and figure out how that's going to disrupt. My favorite quote from Davos was from a global CEO of a bank who said, Brett, the last 3 board meetings have actually been on, we don't call it crypto, we call it digital, but it's been on this topic. And we now see stablecoins as an existential threat to our entire core operating business. That's a big deal. That moment hasn't, we've been talking about stablecoin payments and all this stuff for remittances for the 6 years I've been at Coinbase, but never have I had a CEO say it's existential to the business, and we're now fully invested in going down this path. That's a big deal.
What about tokenization? That seems like a recent, big expansion for Coinbase and maybe the industry in general. But tokenization finally feels like, hey, this is here, and we got to do it.
Yeah, it's funny you say it's recent because from our perspective, we've been doing it for a long time. Tokenization, I think, over the last year has gained a lot of steam in the media and publicly, but. We, in partnership with Circle, issued USDC in 2018, and we think about that as one of the earliest real tokenized assets at scale. And it's funny, I remember the moment that we launched USDC, I got a lot of questions like, why do I need a dollar on a blockchain? And I see kind of very similar questions now when people talk about tokenization for other real-world assets, whether those are treasuries or private credit or commodities or equities, and I think we're going through a similar arc there. But from our perspective, Coinbase is leaning in quite a bit, and that bridge that I was talking about from off-chain to on-chain, we will look to tokenize all of those assets onto on-chain financial infrastructure and then offer those directly to our customers. And Brett can talk a little bit more about this, but we recently announced Coinbase Tokenize, which is our end-to-end infrastructure platform for facilitating tokenized assets that will power tokenized equities through Coinbase, but is available to anyone for tokenization use cases.
So I'm going to approach this from a different perspective. Instead of preaching to the room on why tokenization is interesting, we'll take the other narrative, why it's not. So I've been an advocate for a long time now, many years, as Sean has, in saying we need to tokenize, rest of world. And it's never really caught the imagination of the institution until Brian articulated that vision in December. And what's now happened is if you look at the financial system as it operates, and I'm a product of, I came from there, better, faster, cheaper is a thing. Everyone's trying to solve for it, particularly in low margin, high velocity businesses. But we've not been at a point yet until the better, faster, cheaper disrupting the whole tech stack was a tangible reality. So what's going on behind the scenes that you all don't see is that, and I don't see all of it either, but I'm beginning to have a view into it, is that the big banks and the most active traders of short-term bills and T-bills have actually been running simultaneous parallel blockchain ledgers in parallel with the existing systems to evaluate whether the thing is actually better, faster, cheaper. And so the big value add for tokenization doesn't exist at Coinbase today. It does for new markets and disrupting financial systems, and it's the vision that we're going after. But there's a huge beneficiary to this whole thing, which is the existing system of banks that still have this debate of, but I can send on Swift, and why is it better, and et cetera. And so the reality of saying, actually, in a world where prices are going down, margins are thinning, maybe we're another economic turn, we've got to run this big financial system and company on old infrastructure. Is that thing the way that we can actually get another billion of cost savings and financing? So there's a benefit there. The other benefit, which is we've been sitting at, in this world of, we've been running tokenized products, either native or replicas, for a couple of years now. But issuers are coming to us, and mostly the US market, and saying we've kind of tapped out all the pools of capital that we can reach through traditional channels. So at Coinbase, you have these millions and millions of active users, and maybe this idea of democratization of things like private equity and other things, keeping the rules on who can buy. But we represent a new distribution channel for everyone that's in the asset management business. So we have a list of things that can go from here, through the floor and 10 floors through, of asset management companies that now look at tokenization as the next frontier to acquire a new active segment of investors. That's the value proposition. On the investor side, it's giving me access to things that I don't have access to. I can't get into SpaceX. I can't get into OpenAI. I can't get into the BlackRock fund. I can't do some of these things. But now through this mechanism, there's an easy, fast, cheap way for me to do it. So the value proposition exists on the issuer side, reaching new clients, and on the investor side, which is access and a lower cost of investing. So this whole thing is happening all at the same time. These realizations of disrupting the existing system, but on an infrastructure that can actually deliver in the moment. That's the moment we're in.
What else on the business side? I mean, you guys have diversified the business pretty significantly. Those things seem to be scaling. What else should people be paying attention to, especially if they're an investor, either as a shareholder of Coinbase or looking at the business? What are the areas that are most interesting?
Yeah, so our 3 priorities as a company for 2026 are 1, win at the everything exchange, 2, win on chain, and then 3, win stablecoins and payments. So the way that we think about the focus areas for the business are very much aligned with those 3 core priorities, and you'll hear more about that tomorrow on our earnings call. I would really focus on the everything exchange and especially the migration of these assets on chain, because I think that this will be the year that we realize that. And Brett alluded to this a little bit, but when we talk about the upgrade to the financial system, I think the everything exchange sort of like paints that picture much more clearly, because as we're adding support for all of these assets, each asset class has a very bespoke infrastructure and regulatory stack that's required for it, whether that's equities, crypto, prediction markets, et cetera. Once these assets are tokenized, they can all sit in one wallet. And so it's a very seamless user experience, enables better capital efficiency for the end user. And I think that's part of the reason that a lot of investors are expressing interest in it now. So 2026 should be the year that we see that, especially and hopefully buoyed by a lot of momentum on the regulatory front.
What are you excited about?
I can't leave the stage. I don't know if you noticed, I have a subtle orange strap here without saying something about Bitcoin. So we hit an air pocket on price. And we've not been like advocating to buy Bitcoin because we think the price goes up. That's not how we roll. But I will say that the long-term trend of institutions coming in to this space is intact. The demand-supply numbers speak for themselves. I'm not going to advocate for any one investment, but I will say I'm definitely a long-term bull on the space. The secular trend of institutional adoption is super intact. And what's more important now than it was post FTX and sort of the rest of it is that what I talked about during this is about banks' readiness, regulatory compliance, sovereign funds getting invested, et cetera. A dip in price is not going to dissuade any of the CEOs that I talked about in terms of thinking about the adaptation of this technology, the disruption of their current business model. That's the thing that's different this time around. So I personally, and this is a personal point of view, not Coinbase's, it feels to me as a market practitioner that a lot of like the levered perps market that exists outside the US is a little bit kind of guilty of having those exacerbated sort of peaks and valleys. I do think that over time, those peaks and valleys will still exist because we have a big derivative market offshore. But I think that those peaks and valleys will shrink a little bit and we'll have a little bit of a long-term trend. So I'm a little disappointed, I must say, with Bitcoin's price action. But it's not, for someone that's lived in an institutional world that sometimes trades things like retail-held stocks or retail-held bonds, they always act this way. And so we're getting a little bit of like the infantile part of who owns Bitcoin and how they position and how they're highly levered and momentum traders. We're getting a little bit of that distraction manifest at the moment. But my personal point of view is it's a good time to actually think about continuing to deploy capital into this space now.
If I could just add one thing is I very much agree with everything Brett said. Prices go up and down, but I think the core ethos of Bitcoin, the infrastructure has never been stronger. If you look at on-chain metrics right now, everything is up and to the right. The share of decentralized exchange volume to centralized exchange volume up and to the right. Stablecoin supply continues to go up and to the right. Supply of non-stablecoin tokenized assets goes up and to the right. Transaction throughput also up and to the right. So the fundamentals are still there. The price action will go up and down, but we've seen this movie many times before, and I think the ones with long-term conviction get rewarded.
Makes sense to me. Thank you guys very much for doing this.
Thank you. Best brother.
All right, we got Peter Smith coming up here next. It's not fair. I get to see you guys all walk past each other and high five and hug and stuff. I kind of want to get in on that. All right, you've been in this industry for a long time. You've seen the ups, the downs, you've seen the craziness, you've seen the lending, you've seen all the trading. What is your general take right now on what is going on? Why is Bitcoin not higher? We've heard a couple different theories today, but just let's start kind of as a base case. This thing has grown up a lot, but also at the same time, maybe all of the debacle has not left Bitcoin.
Yeah, I mean, I used to try to figure it out. Now I have a simple theory, like just more sellers than buyers. But then I sort of moved on from that simple theory to a more complicated theory. I think that Bitcoin actually is like the market is driven by some like godlike AI, and it tries to find the path, whatever price path will blow out the most number of people financially and emotionally. It finds that precise pathway.
I like that theory.
Yeah. So if you want to know exactly where the price of Bitcoin is going, you just have to figure out what price pathway will beep the most people.
Well, what is Elon's thing? The most entertaining outcomes, the most likely?
It's 100% true with the Bitcoin price.
Yeah.
Like if everyone gets liquidated, if all the longs will get liquidated by the price going to 40, and then all the shorts will get liquidated by the price immediately going to 100K in a week, that's what will happen. I'm not saying that's what I think is going to happen. It's just whatever is the most entertaining and catastrophic market tape is what will happen with the price of Bitcoin.
Let's talk about regulation as a competitive advantage. I think that people usually think of regulation as slowing them down, preventing them from doing stuff. Maybe you have some different thoughts.
It is a moat, and like for us at this point, we hold I think over 50 licenses around the world. Sort of every major country we have a license. It is a moat. It's sort of like the most sad moat though, and I feel like emotionally feel complicated about it because it's a moat that we have and we've built and we've spent a lot of money on, but I think it's kind of like it's a lame one to have. It is a really serious moat, but I would rather live in a world where we're all just kind of like trying to build the best product and give customers the best product experience. Unfortunately, that's not quite the world that we live in, and a lot of that moat comes down to what is essentially regulatory capture.
Better or worse in the United States versus internationally?
The U.S. is the most backward major country when it comes to crypto regulation.
Really? Even more so than Europe?
Oh, Europe is probably the most advanced. Europe has a full licensed framework for crypto financial services activity as well as derivatives activity. Now, I'm an American who's lived most of my adult life in London and now increasingly in the US. And if you asked me 10, 12 years ago in crypto, would the EU be further along in crypto regulation than the US, I would have just burst out laughing. But that's actually what's happened.
Maybe that's a negative thing, though. Maybe the fact that they are so advanced on the regulatory standpoint means that they are stifling innovation in a way that the U.S. isn't.
I don't think so. And I love how pro-America you can spin everything. But I'm here for it. But I think that
You're here. You better be careful. You may not leave.
But this is why when I'm in D.C., and I'm in D.C. a lot right now, I tell U.S. lawmakers that it's really vital that we actually pass the Clarity Act. Even if it's an imperfect bill, I think it's a huge step forward for the industry because it gives you a lot of certainty. It gives capital certainty that they should invest in these businesses. It gives market participants certainty, and it gives entrepreneurs and consumers a certainty about the sort of like regulatory framework that we're all in. And so the UK has established norms now. The EU, Korea, Singapore, so on and so forth, all the way down the line. The U.S. is the last major market that doesn't have it, and it's really important that we get it done so the U.S. remains the center of the crypto world.
You are founder and entrepreneur, but also you do a lot of investing. Crypto and AI seem to be almost the same thing at this point. Like they really do feel like they are coming together in a very unique way. Some people want to talk about payments. Some people want to talk about other aspects. What are you seeing there? What are you interested in? Where are you putting money?
Yeah, I think they have converged. And one of the ways they've converged is just like they both require either a lot of compute and or a lot of energy, right? AI and crypto both, whether you're talking about Ethereum or you're talking about, Bitcoin, it's energy and compute. And so for me as an investor right now, I'm really focused on either companies that will dramatically benefit from AI via like higher margins. Like our margins are going up every year because of sort of extensive automation and use of AI agents. The second thing I'm looking for is the sort of raw inputs required to build these things. So electricity, rare metals, land in key places, grid, that kind of stuff. I actually haven't invested in foundational model companies, partly because it's really hard to see people beating Google at it.
You think Google is like the king?
Yeah, I'm running a large concentrated Google position on my sort of family office side, because I think that Google has the advantage on the compute, they have the advantage on the chips, and then they have the advantage that they can take those models and directly use them to make their core business far more profitable.
What are you guys doing with AI inside of the company?
Yeah, so we've replaced a lot of process-based staff with AI agents. Most of our highest-rated customer service agents are now AI instances, which is very funny. We decided to track them as like, oh, like what's your rating, AI agent?
Wait, hold on. Your highest rated customer service reps
Are
the AI
AIs.
agents.
Yeah.
And what are they doing? Are they just answering emails? Are they getting on the phone? To what extent are they interfacing with the client?
They can do almost everything that the humans can do now.
So they're even getting the rating if they're talking to them on the phone.
Yeah. And we had hundreds of support staff, and now we have dozens.
Did you use your voice for the voice of the agent?
No. There was a suggestion of that once, but my general thought is that people have heard me talk enough over the last 10 years. Like, we don't need me on the support desk, too.
All right, if you need a voice agent, just let me know.
You?
Yeah.
Just Pomp. So, set your password.
What else are you doing? So you have, I mean, that's pretty interesting that the AI agents are getting better ratings than the humans. It makes sense in hindsight, but a little counter.
Yeah, they don't have bad days. They don't get grumpy. They remember everything.
Patience is off the charts.
They're very patient, So, yeah. And then I think, there's a lot of compliance processes, KYC, ADV. There's a lot of things that you can do around like financial operations, screenings, and then frankly on the software development side, I think, over the next 18 months, we're going to see really the biggest change in software development since the introduction of frameworks like 10 years ago. I think like for a lot of people that aren't working with these tools on a day-to-day basis, they don't realize the extent to which almost everything that we do now will probably change over the next 24 months. It's going to be like an incredible moment of transition for the world, probably to an extent that most people can't really imagine today.
Did you see the piece? I think the gentleman wrote it yesterday. Something big is happening.
No, I haven't.
So, software engineer
Yeah.
wrote a piece and basically was like, all right, I just have to come out and say this to all my normie friends. And I'm only going to say this because it happened to me. Something big is happening, but like I no longer have a job essentially because I just tell the machine, create this app that does these things. I go away for 4 hours, I come back and it's done, but it did it better than I could have done. It built it, it tested it, it did all these components. Like something big is happening because if it can do it for my job, it's coming for all of yours. And he makes the comparison to like kind of early days COVID when, Balaji and like 6 other people in the world were like, there's this thing in Wuhan. Yeah. Imagine if, and then it being right, his point is like this thing is pervasively spreading and it is going to accelerate.
Well, one of the roles that was hardest to recruit when I started doing this was designers, product designers, and people who basically talk to your customers to get their feedback and see where they got stuck in the flows. That team, when we were probably 100 software engineers, that team or function I just described is about 30 people.
On top of the 100 engineers.
Yeah. Now it's like 1.
And got replaced all by agents.
Yeah.
Well, that's interesting.
Or just, it's either a combination of agents and then better tooling.
What is the headcount kind of expansion or contraction of blockchain.com over the last, 5 years or so?
Well, ironically, I think we're right about where we were. No, so we're at an all-time high, but only by like 50 people. We're like 650 people, 700 people now. But that is, the composition has changed dramatically. Okay. Right? So like, the customer support team and compliance team, operations teams have fallen. Software engineering team has risen. But I told our team this year that I think that we will reach the peak headcount that we're ever going to reach mid-year. And then even though I expect the business to grow dramatically over the next 10 years, I do not expect headcount to grow really at all.
How much of the code at blockchain.com is being written by agents versus humans?
I don't know.
More or less than 50, would you guess?
I would guess at least 50% is being written by LLMs. Certainly every new product or prototype. There's some stuff we do that's a little scary. Like we have like 8% of all the Bitcoins connected to our platform. And so, that we're probably not ready to turn an AI loose on. And then there's some things we do where we're like, we want to build a game for fun. And the AI will do the whole thing when we'll ship it into production. Mm-hmm. And so it really just kind of depends on what we're working on.
And then if we bring AI interacting with the Bitcoin or with stable coins, like agentic payments, agentic investing, like basically like turning assets over to the agents and saying like, go do this thing. Is that like in the next couple of months we should start seeing that stuff, or is that a little bit further away?
So we have a AI agent internally. We have this AI platform called June, which is like a privacy-centric AI, and it can plug into your wallets and eventually be like a personal financial advisor. We have one version of that bot that is creating and trading its own live trading strategies.
Up or down?
It's
up a lot.
It's like the third best. Yeah, it's quite impressive.
Okay. Did you put money behind it yet?
It's actually my personal money in the test account. so yeah, it's going well. But the coolest thing about it is that you can give it parameters. You can be like, look, I want a strategy that makes 10% on top of my Bitcoin, but I don't want to lose more than 5% of my Bitcoin, in a 30-day period. And it will like go out there and create and try to implement and run a strategy according to those parameters you gave it. It's sort of like everyone having their own personal quant researcher, and then their own personal execution trader. And when you think about where all this is going, somebody was like, this is really cool. I'm like, yeah, but I think it means that alpha will basically disappear over the next 2 or 3 years. Like trading alpha, like if I used to have to go out and hire a very talented person, like, someone who's a lot of academic, someone like me, frankly, to go build these strategies. And now we can just like have a chat with our little like AI bot, right? And it can go out and build it and probably implement it. But that means like historically how someone like me made money will now be open to everyone. And like there's a finite amount of alpha in the world, right? And so I think that what's going to happen as a result of these LLMs to detriment of people like me is actually the wholesale collapse of alpha.
Or there is just even more alpha that is created because we keep spawning new markets. Like I always go back to this idea of like prediction markets weren't around 5 years ago at, in any degree of scale. Although you can question society's, impact, sports gambling. Like there are people who are very good. Billy Walters is famous for a reason. Sure. You kind of go through this stuff, right? Like are there just going to be more markets that get created over time where people start to securitize or tokenize, various types of things that today were not possible? I think of hash rate, as another example. Like we can come up with a bunch of these things where those markets didn't exist.
Like markets will get created very fast and the alpha will vanish very fast, which will make things like incredibly high velocity. But it'll be a whole exciting, brave new world.
What's your pitch to everyone why they should use blockchain.com?
Oh, well, we've been doing it for 12 years for 40 million people and 2,000 institutions. And so far, we've never broken a trade or not honored a withdrawal. Which I think the only other folks that can say that is the guys that were just up here a minute ago. I think trust is really important in crypto. Like it's very difficult to win and very difficult to keep. Why most people trade with us, like that are in this room, like institutions or high net worth, is because we offer and support about 800 different trading pairs. So, against most things that folks like have access to, we have 5 or 6 times the product diversity. We can also trade Bitcoins. We figured out how to buy and sell Bitcoins a while ago. So if you want to do that, we can do that too. But usually people end up with us because they want to trade a very wide array of spot and derivative products.
The craziest part about Peter? He's really smart. You listen to him, you're like, man, this guy's super intelligent. You just got better hair than you are smart. It's like impossible combination. All right, thank you guys very much. Peter Smith, everybody. All right, it's lunchtime. Go get some food, and we will see you all back here, I think at 2:10. I think that's what I'm supposed to tell you. 2:10, we'll see everyone back here.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet. Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog.
That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona. My super awesome assistant, hopefully walking my dog.
That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? They're arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, and you don't have money, and may you have money again, and you don't have money, you have money, then when you... My point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of their life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? They're arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, and you don't have money, and may you have money again, and you don't have money, you have money. Then when you, my point is, sometimes you realize when that, I mean, I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? There are arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? They're arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when that, I worry about all of this stuff, When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? Their arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
Digital assets are one of the fastest evolving technologies ever, and you need a partner that can keep you on the forefront. Abra provides individuals and institutions with a secure way to control, manage, and grow digital asset wealth from a segregated vault. Leverage Abra's competitive borrowing rates with options for instant, collateralized loans against your Bitcoin, Ethereum, and Solana. Abra isn't just a platform, it's a partner in multi-generational wealth planning. Request a portfolio consultation today at abra.com/explore.
Crypto moves fast, faster every day. More coins, more transactions, more volume, more speed. BitGo powers instant settlement, institutional scale, and global reach. So you can unlock more growth and more opportunity. Built for security, built for speed, built for digital assets. BitGo, the digital asset infrastructure company.
You have money, then you don't have money, then you have money again, then you don't have money, you have money, then when you... My point is, sometimes you realize when I worry about all of this stuff, you know? When you're my age, you start to try to plan. Listen, I'll take care of these kids for the rest of my life, but I'm getting to the point where I'm getting old. I don't know how long I can do it.
When I'm producing an ad campaign, I'm basically a global traffic controller. The art director, full-time. The photographer, freelance. The designer, in Rome. The developer, Barcelona.
My super awesome assistant, hopefully walking my dog. That's why I use Deal. My team can choose to get paid in stablecoins, and it goes straight to their wallet.
Getting paid should be the easiest part of the job.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
As markets shift, headlines break, and interest rates swing, one thing stays true. Opportunity is everywhere. At Arch Public, they help you do more than just buy and hold. Yes, their dynamic accumulation algorithms are built for long-term investors, but where they really shine? They're arbitrage algos designed to farm volatility and turbocharge your core positions. The best part of Arch Public's products is they're free. Yeah, you heard that right. Try Arch Public for free. Take advantage of wild moves in assets like Solana, Sui, and Doge, and use them to stack more Bitcoin, completely hands-free. Arch Public is already a preferred partner with Coinbase, Kraken, Gemini, and Robinhood, and their team is here to help you build smarter in any market. Visit Arch Public today at archpublic.com, and your portfolio will thank you.
The foundation that BitGo's built, first with the most robust, strongest, most secure wallet foundation, and then with the regulatory framework on top of it, we can now deliver to all types of clients, whether it's institutional, whether it's retail, whether it's what we call B2B2C, which is us selling to institutions selling to retail. We always make sure that every single client can have the utmost protections, and nobody else is doing this.
All right, very excited. Mike Belshey's going to come up here. We got a lot to talk about, my friend. Let's go.
It's like a late night talk show up here. You got the desk.
I know. Well, it's because then I can, put all my stuff. You guys, good to see you. With the IPO, congratulations. This feels like a very big moment, not only for you guys, but for the industry in general, for another company to go public, be well received by the public markets. Describe a little bit as to the decision to go public and maybe some early lessons or significance to this.
Sure. Well, thank you. It's about a year in the making, so to some degree, it's a sigh of relief. You lose some stresses when it finally goes through. We were trying to get out in October, and then the government decided to take a little vacation. And then they said, well, it's the end of the year. It looks like if we had waited a little longer, it would have been another delay. So anyway, it's good to get out. The reason for us to do it, though, and I can't talk about the stock price and stuff like that, but the reason to do it is really back to some of the core ethos of cryptocurrency, Bitcoin, and why we're here, transparency. So look, the next wave of money that's coming into digital assets is clearly traditional finance, it's Wall Street, it's public companies for the most part, right? These guys have been around for decades to centuries, and it's difficult to interface to a private company and get diligence. So I sometimes tell this little joke, the traditional firms were getting close to this guy a few years back. He had like this massive $200 million investment from Sequoia. Everybody's talking about him. He's a smart whiz kid out of MIT. His name was Sam Bankman-Fried. Oops. And what we conditioned everybody is that Silicon Valley due diligence is crap. Right? They didn't recognize what was going on. He didn't have a CFO. That might have been a clue, right? But, all right, so anyway, that made it even harder for public companies to interface to private companies. We provide infrastructure to all of these guys, and of course, being a public company, you got all the faults of the SEC process, but what it does well is it really puts a spotlight on all the internals of your business. You can see exactly how our finances are, what our balance sheet is, et cetera, and so it makes it a lot easier to do work with the next wave.
I recently heard somebody who will go unnamed say that running a public company is better than running a private company because the pressure makes your company better. You agree with that?
Well, I think pressure always makes your company better, so maybe that's good. Look, it's 3 weeks into it, so I don't know if I have a real view on this as of yet. It's a new dimension that you got to think about. You got investors, to consider. But overall, look, we welcome the scrutiny. It's what we've always done. For the last 12 years of our existence, what we do is we prove that we're worthy of our client's business, and that takes a lot. So,
Let's talk about regulation. There's a lot of licensing, banking. I mean, this is now coming up both in Clarity Act stuff. There's also obviously a number of players in the industry who have said, "Hey, look, I'm going to jump head first into going and getting all of this licensing." There's still players that are holding out and saying, "Hey, we want to do certain things, and we don't want to kind of enter into some of these more regulated components of the business." What's your guys' strategy, and how do you look at the pros and cons of kind of the path you're taking?
Well, as you know, we recently got an OCC chartered national bank. And the reason we did that is because regulators around the planet are still sorting out a lot with digital assets. And it's a relatively new asset class. There's a lot of misconceptions about it. We shouldn't be upset or surprised that regulators have got some work to do just to kind of understand it. And so you end up with kind of state-based regulation, which can be at odds with each other, can be inconsistent, et cetera. Like that national charter. It's the gold standard for here in the U.S. Allows you to get into equities and other products without any questions at all. But second, it provides kind of a unilateral treatment. We need to continue pushing forward. So during the roadshow process, met with 100+ investors. A lot of these guys have been mostly out of the crypto markets for the last 4 years because the SEC was closed to business up until last summer. We got a small wave. So these investors are all learning about crypto and digital assets right now. They're all looking for clarity to get past. They don't necessarily know what's in clarity, whether it's good, whether it's bad. What they do know is that having a legislated path forward for market structure means that the government has approved a path for our asset class. And of course, there should be a path for our asset class. But until that passes, there's some amount of worry. And remember, we were all, I don't know if you were at the White House crypto reception, I think last February, March. And pretty much everybody said to President Trump, look, thank you so much for putting out the executive orders to end the Operation Choke Point against Bitcoin. Can you please codify that in law? And this next step of market structure is to do that.
There's definitely stuff still going on. I hear people all the time talk about, there was a point where some of the major banks wouldn't allow public companies in crypto to get bank accounts. And so it wasn't even like, we're going to kick you out, we're just never going to let you in. But I still think that there's quite a bit going on. And as it becomes more apparent that the crypto companies are competing with the custodians, the banks, et cetera, they're going to lean on the regulatory capture. They're going to lean on, cutting off some of that access, wouldn't you think?
Of course, right? I mean, just look at the Genius Act, right? I mean, of course Americans should have interest on their stable coins. I mean, this isn't really debatable. There's no good counter argument. Historically, by the way, this happened before. So back in 1970, 71, there was this thing called Regulation Q. You familiar with this? You know this, okay. Well, I'll try to be quick. But Regulation Q limited how much interest banks could give to their depositors. And as inflation roared its ugly head, sound familiar? Interest rates on T-bills got high. So some smart guys said, let's do money markets, and we'll have them just be T-bill backed, and we'll give a better interest rate than the bank. And the banks screamed bloody murder. The entire financial system's going to collapse, da-da-da. Of course, it didn't. Regulation Q is gone, doesn't exist anymore. We have lots of money markets that do T-bills, and they provide yield, and the banking system is perfectly just fine. So yes, it is true. Look, I think when you've got these 100-year-old organizations that, frankly, they are victims of regulation too, by the way. Anybody happy with their bank here? Raise your hand if you love your bank. Oh, we got one. He's a banker. Okay. But the reason banks do have such a hard time is because they're so overregulated, right? And even when they try to get it right, they continually find themselves afoul of some sort of AML, KYC, transaction monitoring type of problem. So, look, I don't know. We've kind of held them back in a way by having too much regulation. And then now, when innovation comes, their first reaction is to lean back and say, I need more regulatory capture, which is what happened with stablecoins so far.
One other aspect of the infrastructure component that people are not really talking about because it's not sexy, but feels like it is a very big change is instant settlement. And if we go back in 2017 or 2018, I wrote this whole thing about we had analog assets. Now we have electronic QSIP. We're going to get digital. And you're going to see that transition over the next 20, 30 years. And as I've been thinking about this now for almost a decade, it became clear like what we're really talking about is crypto is a part of this like automation economy. And so AI plays into that, crypto plays into that, whatever. But like instant settlement is literally the definition of like automation, right? And it feels like that is a huge piece of what you and others are doing, but people aren't really talking about it as much because it's kind of more plumbing type stuff.
Well, we built systems that allow us to kind of buffer all of the credit risk and counterparty credit risk that you have when you don't have instant settlement. So if you just dial back before we had computers, people like to trade. And they like to trade fast. And we've gotten better at trading faster and faster and faster over the last 100 years. But then you sometimes have to pause the system just to settle it all out. And so the reason net settlement exists is mostly because it's hard to settle, right? And after you do a bunch of trades, it's easier to just swap the result rather than swap every trade. But we are on a path where we can get to instant settlement inside the transaction. So every trade could just be instantly settled. There is no net settlement. There is no clearing left. And through automation, we will get there.
You guys operate a global business. Somebody on this stage this morning, who will go unnamed, said they thought that Europe's regulatory framework towards crypto was ahead of the U.S. Agree or disagree?
Yeah, so we're regulated here in the U.S. under OCC, and in Europe we're regulated under MiCA through BaFin. We have an office out in Frankfurt. Look, I think the MiCA regulations have been clearer faster. I think that part's been good. I think the stablecoin, also you see similar attempts for regulatory capture. Stablecoins, they require, I think it's 60% to be just in depository banks, which kind of defeats a lot of the purpose of stablecoin safety. But in general, I think the Europeans, yes, they have embraced reasonably well. But of course, the European markets are not as strong as they used to be either.
It's a museum. I didn't say that, somebody else did. If we think about infrastructure, there has been this whole wave, maybe we'll call it like crypto industry 1.0, was you provide infrastructure to other crypto companies to help them do things in crypto. Now it feels like this, wave 2.0, where the institutions are getting involved, is now a bunch of crypto native companies selling infrastructure and access to non-crypto players, the banks, the large financial institutions. Can you talk about maybe the makeup of your customers and where is growth coming from, and how do you think about these non-crypto players, coming in versus maybe the crypto people that you guys serviced historically?
Sure. So I think we've been doing infrastructure since before it was kind of sexy to be doing anything like that. So our products early on, we pioneered multi-sig, for Bitcoin, still the gold standard for how you secure Bitcoin to this day. Everything we do is this 2 out of 3 model. Even when we take it to MPC, when we do MPC these days too, also 2 out of 3 model. That protects against both theft and loss. Who gravitated towards one of those products? Well, it's people that had a lot of digital asset, a lot of Bitcoin in the beginning. These days it's Ethereum, it's Solana, it's everything else. But building on top of that, it's APIs. So we integrated with businesses, right? Exchanges came in, wanted to use our products. They wanted that secure storage, et cetera. As we built out licensed products, they wanted to ride on top of our licenses as well. So the fact that we've got the qualified custody starts to become of interest. And so today we've got what we call crypto as a service, which is an infrastructure where our clients can come to us and they can create on behalf of their clients a fully regulated, segregated, bankruptcy remote, qualified custody account. It goes through all the AML KYC, it goes through all the transaction monitoring. At the end of the day, the client gets the fiduciary protection that they would have gotten kind of anywhere else. But our client doesn't have to do that. Instead, they lean on us to do that part. So right now, I think what's happening is we're entering a wave where instead of having to be an application yourself, instead of being like a retail exchange, there's new businesses that are coming in, just getting started with digital assets. They don't have expertise in how do you protect keys. They don't have expertise in how do you deal with these wallets and with all this digital asset type of money. So they're looking for our experience and they ride on top of it.
If you provide the infrastructure, you could always go eat into the application layer, the kind of consumer touch point, even compete with your clients if you wanted to at some point. There are many stories throughout business history where that has happened and been very successful. I don't get the sense that you guys have done that so far and tried to really kind of go into the interface side. Correct me if I'm wrong, and is that something that you guys think about maybe in certain products or services?
So we do, and I mean, this is one of the challenges of just running a business, right? You don't want to directly compete with your clients. You want them to, leverage you, you leverage them, and it's a It's a good partnership. At the same time, we also build applications for everything that we do. One of the things I think that's interesting is because we've been doing this a while, I think we're not only building infrastructure, but we're also building market structure. And market structure is 2 words. Most people don't know what it means. In my opinion, it is how you mitigate risk in capital markets. I can go into specifics on that. But you go to your bank, he's a fiduciary protecting your funds. You go to your stockbroker, he's a fiduciary protecting your funds. You go to your RIA, he's a fiduciary protecting your investments. You go to your crypto retail exchange, not a fiduciary. Of course, it should be a fiduciary, right? Market structure helps provide this. When you create an account at BitGo, of course, we have a qualified custodian. Every single user, whether you're a retail user, an institutional client, you get fiduciary protections, bankruptcy remote. This is what the FTX users wished they had but did not have with FTX. And so as we go forward, those types of things are what we're building. We pioneer them as applications a bit. We also completely sell everything programmatically for other people to use as well. So we do the heavy lifting. We get all the right security at the bottom layer. We do cold storage. We're big believers in that. We still have to provide great service on top of it, by the way. So cold storage is slow. Well, when you come to BitGo, you can get a fast transaction out. It might only take an hour. Is that going to cold storage? No, that's going to our intermediate wallet, but we take that risk. Your money stays in cold storage while we take those risks.
In the stock market, we continue to see the transaction volume explode higher. We set a new record recently. In crypto, historically, when prices go down, retail interest goes down, and you kind of see the cratering of Google search trends and all this stuff. For your institutional clients, are they changing what they were doing? Are they changing their plans? Are they going faster or slower with the recent drawdown?
Look, I don't know. Just look at the announcements this week. It seems like everything's going completely on track. I think institutions move more steady. So they're slower to change, but then once they've taken a direction, they tend to stay there. So just this morning, we saw announcements of tokenization with Franklin Templeton. We saw BlackRock's going to tokenize their stuff. I mean, these are just announcements that are months in the making, maybe years in the making. So no, they don't seem to be stopping. I think you still got Larry Fink out there saying digital assets are going to be everywhere. Jamie Dimon seems to have reversed his course and is saying the same thing now. So I think the institutions are still coming. We're still talking with them at all the same speed. The retail markets or the Bitcoin price going up and down. Look, you've been here as long as I have. 5th, I guess, crypto major drawdown, Bitcoin major drawdown. It is not the end of the world. We're here for the long term. It's going to be fine.
I was just talking to Charles Payne, and he's somebody who I think is very interested in Bitcoin. He obviously has a kind of an attraction to the retail investor and the little guy, and tries to give them a voice on television. But one of his takeaways was everyone here is so calm, right? He's like, Bitcoin is down 40, 50%, and he's like, everyone is so calm. And he asked me, why? So I don't know. Why do you think?
I think it just comes down to short-term views versus long-term views. I found some quote from Warren Buffett recently saying that, stock market is terrible risk for the short term, and I forgot, very steady for the long term. I forgot how he phrased it. It was better than that.
It's like a voting machine in the short term, a weighing machine in the long run.
I think that one was not Warren Buffett, but it's the same principle. But anyway, the same thing applies here. Look, crypto, digital assets, Bitcoin are tiny, tiny, tiny on the world stage right now. And so, of course, they are more volatile than much larger products. I think more interesting things look at gold right now. Gold's never been as volatile as it is right now. That's not related to Bitcoin. That's related to something going on in the macro environment. Most likely, lack of faith in the dollar. So what kind of effect is that lack of faith in the dollar having on markets broadly? It's massive, and it's very, very hard to isolate like a particular single cause. So yeah, I think Bitcoiners should continue to be completely happy and steady, hold steady for the...
What about tokenization? That feels like, obviously it's a much bigger market, but also that seems to be gaining steam now. You all provide infrastructure. I'm assuming that you'll provide the same infrastructure, products and services for tokenization as Bitcoin?
Yeah. Look, I think you've seen it. Figure's got an announcement. They're going to be doing some tokenized equities. There's a number of others that we haven't announced yet, but we're also working on those on the infrastructure side. I think finally we have an SEC that is open to this idea like, hey, innovation needs to be allowed to happen. They're going to come in and try to guide it to a path which is safe for investors, but not smack it down before it even gets started. So I think Paul Atkins has been just phenomenal in terms of recognizing that you can build better systems. And so then that climate allows everybody from BlackRock to Goldman Sachs to say, hey, we're going to participate in this. We feel like we can offer a better product, potentially get competitively ahead, and we don't have to worry about the SEC coming and just shutting us down before we even got started.
When you were on the roadshow for the IPO, there will be investors, I'm sure, who are like, does this stuff have any value? Kind of like the normal small brain, critiques of the industry. Were there any critiques that you heard that you either found interesting or were somewhat counterintuitive to what you were expecting on the roadshow?
I did have one guy ask me, like, what is a private key? What does it look like? And it sounds kind of funny, right?
Did you pull one out and show them?
I think we should give everybody a little bit of slack. When you start thinking about digital assets, and there's this guy Satoshi, and there's hashing, and there's mining, and it's not back. These are new concepts, and we haven't had anything that was revolutionary for finance, like blockchain, like Bitcoin, for a very long time. So it's no surprise that A, it's foreign, but B, they don't even necessarily fully understand how our existing capital markets work. Like, we talk about market structure. I've said this a few times up here. I've been in rooms with executives. I've been in rooms with bankers, and they also don't know. So the reason they don't think about it is because it's been so established. And by the way, kudos to 1933. How did they build a market structure, a capital markets system that frankly has lasted 100 years without a lot of pitfalls? It's got falls, but it doesn't go down, right? It's up and running, and we have the best capital markets in the world. So the point is, we shouldn't be surprised that people are not fully familiar with what Bitcoin is or how it works or why it's going to be great. The good news is it's like an educational moment. People are really starting to think, like, wait, what is the best way to store value? What is the best way to do payments? Do banks, do depositories still have to be a combination of A, taking retail deposits, and then B, lending it out, taking untold risks? Maybe there's ways that we can move to the side, maybe shed some of that regulation which holds all of our finances back, and build a better system. So anyway, I think it's all good, even though sometimes the questions seem silly.
You have a room full of people who, they're just listening to you right now. What's your pitch to them? Who should come and work with you guys, or what is the value proposition?
Look, we're at our heart very much aligned with the Bitcoin principles and the Bitcoin ethos. We want to see a better financial system that is more democratized, more transparent, less risk. I think we're making strides towards that as an industry. Right now, we have an interesting dilemma. I think it is part of why people are losing a little bit of faith in us right now, which is, if you look at the most lucrative kind of retail markets, our retail exchanges are making like 143 basis points on retail trading. And when I was on the roadshow, I would sometimes talk about BitGo. Look, we do best execution. We get to the best price no matter where it is in the world. And we just do that commercially. We're not doing it because we're regulatory required to do it, although maybe we should be. Anyway, we do it anyway. But, we're in this world where crypto has suddenly become the place that's ripping off retail more than anybody else. It makes Goldman Sachs, who is sitting right next to me, jealous. And we got to fix that. So anyway, BitGo's out to fix that. We're going to make the infrastructure solid so that everybody can use it, bring all those prices down, make it transparent, make it democratized, and hopefully that works.
Amazing. Mike Belshie, everybody.
Thank you.
All right, next up we have Ivan from MoonPay.
What a setup you got here.
It's pretty good, right?
You've leveled up.
By the way, you guys like this thing back here? You know what we're going to do with it? Our team already knows. They said they're not going to throw it out. I said, good, because we're going to put it in our office. I just got to get an office big enough to put it. But we're going. Shit looks cool. I got told by somebody who may or may not be sitting in the front row, you know a lot about agentic payments.
Yeah, AI is the future, man. We got to really prepare.
It's the future, man. What is it? How does it work?
So if you think about it, the world is just becoming faster, cheaper, more efficient. And ultimately, AI is getting to a place where it's just going to continuously improve. It's on this exponential curve. And I think, AI is really going to replace a lot of software, right? These models are going to be ruthlessly efficient about things like execution. And so we're paying a lot of attention to this because if you think about crypto, right? Let's think about like payment rails in general. Most of our payment rails were built in the 1970s. Swift was rolled out in 1977. And so we have a payment system that was built before the internet. And now with crypto, we have an internet native payment system. And AI lives on the internet. It's going to consume this internet native payment system. And so we're just in a world where, I see that all payments eventually are going to flow over blockchains. And we're in this like dial-up kind of phase, right? Like you still are going to be reliant on this legacy infrastructure for some period of time. And there's a lot of regulatory nuance to global money movement. But over time, like everything's just going to be executed by your AI agent. You can imagine a world where you're going to give over all of your key credentials to all of your payment methods. You're going to connect your crypto wallets to them. And then they're going to make financial transactions on your behalf. We're definitely moving to that world.
So in that world, does the agent buy things for me? Does it trade for me? All of the above?
Absolutely everything.
Why should I be scared of that?
I mean, I think we're already, the cat's out of the bag. Like, I don't think we're going back at this point. So it's just, it doesn't happen overnight.
Weird way to say yes.
Well, just think of the analogy of like long distance communication, right? It was super inefficient. You had crazy costs if you wanted to make a phone call from one country to another. Then voice over the internet protocol came. Then you had Skype. Then you had Zoom. You have iMessage built on the same protocol. The same thing's going to happen to money. And so this is just going to be the more efficient rail. There's still debates over what blockchains are going to be on. There's going to be nuances. I think there'll probably be multiple winners, but it's going to be an internet superhighway for payments. And AI agents are going to prefer, they're already going to Claudebot. They're already starting to play with wallets. They're basically figuring out what's going on there. And, I just think we're going to see more machine to machine value movement in general. And it's just going to continue to exponentially increase.
So let's think about the commerce use case for a second. If I right now create an AI agent and I say, hey, go to my Amazon account and buy me stuff, it would use the saved payment credentials that are in Amazon, most likely. Why does it need crypto, stablecoins, Bitcoin, whatever the kind of digital currency? What is the advantage? Or am I thinking about it as the agent doing something in like the Web 2.0 world, and instead actually a lot of the value is going to be the agent gets spun up, it doesn't have any payment credentials, so it creates a wallet, it gets paid for doing something, and like it's off to the races?
Yeah, I don't think it's really an or, I think it's an and, right? So I think that probably you're going to see in most of the foundational models connectivity to all your existing saved payment credentials. That's already, a lot of the agentic frameworks that are being rolled out already are building towards, okay, it's going to be plugged into your existing debit card, credit card, and those type of rails. But, I just think it's radically more efficient to move money over crypto rails. Now it's just a matter of, these agents now take, more of your value flowing into these rails. And so we're already starting to see this in a more broader context. So we just announced yesterday, we're pretty excited. We're partnering with Deal. And I think that's like a major step forward because a lot of what I've been focused on is just on-ramps in general. Like, what are the on-ramps that bring people into the crypto ecosystem? And I think one of the biggest on-ramps we're going to see is people, and we might not see it in the United States where it's as important, but in many different countries in the world, there's huge demand for dollars and also probably Bitcoin, right? And so I think that, payroll more and more is going to be, people are going to elect to say, okay, well, I could take a very high fee of FX conversion to move it into my local currency that might be seeing a lot of inflation. Or I might just decide to take this new stablecoin rail and receive it into a wallet. And I think these wallets eventually are going to replace your bank account. But I think that's kind of like the general trend is just things are going to move and flow into technology that's more efficient.
When I first saw payroll type products with crypto, and it originally was with Bitcoin, I immediately thought streaming payments, you can get paid as you work. The corollary, I think, is the Ubers and a lot of like the gig economy companies are now trying to make like get paid out at the end of the day. So if you drive, for 4 or 5 hours today, at the end you can request the money. Now they are essentially taking balance sheet risk, I think, in terms of they'll pay you out and then they'll wait for the settlement later and they probably take a vig or something. But when now see something like Deal, Is that what you guys are trying to get to? Is not only just like powering the same type of payment that's every 2 weeks as people have been doing, for a long time, but could you actually get to, paying people on a weekly or maybe even a daily basis and kind of change the way that they get paid?
Yeah, I mean, if you think about why do we pay people on a monthly basis, right? Part of it is obviously managing your own float, but separately, a lot of it is just the inefficiency with our existing payment systems, right? And so now that you have this new rail, in theory, like I think streaming payments is gonna be a real thing, and you should be paid by second in theory. Like you don't need to be paid on a weekly or biweekly or monthly basis. I think that was just the way that we accepted that the world worked. And, I think we are going to move to a world, and especially like the definition of work is also going to change dramatically, right? And you can imagine, I think there's going to be a lot more like bounty style work that's happening with humans performing all sorts of different actions. And, you're going to have, not necessarily traditional salaries in the same way that you had it before. You might have a bounty to do a particular form of work, and you'll be able to be paid for the exact second. They'll be able to measure your output and immediately translate that into a crypto asset that you then receive.
What do you think people will ultimately do with the money? And one of the things I've always thought from a framework standpoint is if I live in the United States, I'm basically a dollar maximalist. I get paid in dollars, save in dollars, invest in dollars, pay my taxes dollars, etc. If I want to go to Mexico and I need pesos, it's actually kind of difficult. Right, and I get ripped off at the airport, or everyone's kind of
TravelX is phenomenal, right?
Yeah, amazing. With that said, if you move everything digital, now the friction of switching back and forth between currencies is pretty low, right? You just press a button. And so is this a thing where like the AI agents use stable coins for payments, but maybe Bitcoin for like savings? Or how do you think about, the role of these different currencies for whether it's agents or humans operating in a digital world?
Yeah, I mean, I think stable coins are the gateway to then move into any crypto asset. And essentially the technology is already kind of ready to go in terms of prime time. Like we're getting better and better at scaling in general across different blockchains. I think Bitcoin, I've said this before, and I know some Bitcoin maxis might not have agreed with my view, but I think one of the biggest opportunities for Bitcoin is to ensure that it's wrapped on every single chain and people can access different forms of Bitcoin across every blockchain.
Why?
Because it's just another entry point for people to get access to Bitcoin, and some of the blockchains are just arguably going to be far more efficient for moving money. When we started, it's still, Bitcoin is still far better than a lot of systems, right? And we've tried to improve the speed and efficacy of Bitcoin, but ultimately, for peer-to-peer cash, for example, Bitcoin isn't really the most efficient. If you're at a point of sale and you want to make a payment, you're probably going to see some more efficiency on some of these other chains, but that doesn't hurt the very special properties that Bitcoin has. Like you can just wrap it on a chain and, you could be on Solana and you could still access Bitcoin. But I definitely have always seen Bitcoin as like a hedge against central banks. It's programmatic. Do you trust, humans with the decisions over monetary policy, or do we trust, the programmatic nature of what's been defined in Bitcoin? And I think, Bitcoin will continue to be incredibly valuable. I think the other really interesting thing that we're seeing is, more and more people are going to start seeing these wallets as, wow, this is like a bank account. Like most people here aren't probably happy with their bank account, but this is a bank account on steroids. It can do so many different things. You've got your checking account in the form of a stable coin. You can now move, on chain. You could swap into something like Bitcoin. You'll be able to swap into, now we're going to see all these RWAs that come on chain. I have a pretty interesting view on that because, it's a challenging thing to get into an RWA right now, and I think they need to reduce some of the barrier into coming in. And I actually think a lot of the innovation is actually going to happen offshore just to start, kind of similar to Tether, right? Tether grew outside the United States, and I think you're going to see versions of tokenized stocks, for example, that'll be these SPVs. There may be imperfect instruments, but if you're in a country like Argentina, okay, you receive your money in the form of a stablecoin, you elect not to take the peso, you're protected to some degree against inflation. You could then swap into Bitcoin. You could then swap into probably like gold. You could swap into things like NVIDIA, Apple. I think it's going to be the really clean narratives that probably win in the short term. Like people can understand, I've now got this dollar checking account. Now I've got almost like a brokerage account. I can move into these different investment products. And I think we're at the very early phase of that. Now, where you're talking about like the FX spread and trying to move into peso, and that's quite hard. I think the reason why we're seeing such a growth in crypto-backed cards and stablecoin linked backed cards is we're not in a position where the entire world is on payment terminals, or most merchants aren't in a position where they can accept crypto yet. That will change over time. Like, you're going to opt in as a merchant. You're going to say, well, maybe I don't want to take this Visa, MasterCard, or American Express merchant fee anymore. I'll just want to receive my money in the form of crypto. But until we get there, to bridge that gap, I think running on Visa, MasterCard rails is still going to be really important. And so you receive that money in a stablecoin wallet. You then attach a card to it. You might be holding Bitcoin against it as well. And then you'll be able to strike your card at anywhere that Visa, MasterCard is accepted. And I think it's going to continue to grow.
We've talked a lot about where the world's going. What are you guys doing?
Yeah, so most people know MoonPay as the buy button. That was kind of like where we started our business. We said, okay, well, wallets are probably going to be the future. So if they're going to be the future, you need full backwards compatibility to the existing financial system. And so we started with making it easy to take your debit card and immediately take your debit card and convert that into crypto directly inside your wallet. So that's what we were known for. I think now we're moving to a world where more and more people are going to have crypto, evidenced by, payroll companies now giving you a whole new on-ramp, businesses giving you a whole new on-ramp where they're converting their balance, their payouts directly into crypto. So that's going to bring more money into the ecosystem. And we're going to need to be able to connect to all these crypto sources. So when you think about the future of payments, right, you're going to want to be able to pay with anything. You're going to want to be able to pay with your debit card, your Apple Pay, but you also want to be able to pay with your crypto wallet. You may want to link your exchange accounts, right? And these are just going to be all funding sources that you're going to use. So, a lot of the evolution at MoonPay has been focused on, we've always said we want to cover every single payment method globally, doing that within compliance. But also now a big focus and push for us has been connecting to these crypto sources, because more and more people are having, significant, value sitting inside of these wallets, sitting inside of exchanges. So that's been one area we've been really focused on. I think the second area is, we've really invested in our regulatory roadmap, getting licensed in all these different parts of the world. Why do I think that matters is AI agents, as efficient as they become, they can't do things that are illegal. So you're going to need to have licensing to do certain activities. And so we've invested pretty heavily there. And, one of the things that I've been seeing as well is I think we finally have a gateway drug into the crypto ecosystem, and that is stablecoins. Every business now sees this as an opportunity to have a more efficient payment rail. We had a duopoly with Tether and Circle. I think it's going to expand where more and more businesses say, well, if I've got network and distribution, I may want to hold my float in my own stablecoin and earn interest as a result of that. So we've been preparing for that shift. We've been really focused on issuing stablecoins for businesses. Kind of the third area that we've been focused on is exchange, right? So once you have a stablecoin, or a crypto asset, you're going to want to convert into any other crypto asset on chain. You're not going to want to have to think about network fees or gas or any of those complexities. And ultimately, you want the latency of those transactions to be as low as possible. So you're going to want that to be like close to 1 second. So we've been investing really heavily on how do we do cross-chain swaps really well. And then the last piece is, again, you're going to now want to spend it. And so, whether it's payment terminals that upgrade to be able to accept crypto or stablecoin linked cards, we definitely want to be well positioned there.
Can an agent do like money transmitting without a license if it's like a decentralized autonomous thing? Like, how's that going to work?
Yeah, well, I think, agents will have wallets, and they're going to rely on internet native protocols to do their swapping. So that's why I'm actually very bullish on DeFi in general. And I think that's the trend line. I think the first generation of crypto was essentially a reinvention of systems that we already kind of know and understand, and a bundling of many different things together, like inside of like a Coinbase, and you had a centralized order book. But I think over time, these software elements that you're having, like these decentralized automated market makers, are just going to be ruthlessly more efficient. You're seeing DeFi volume grow relative to centralized exchanges. A lot of our focus has been, how do we empower the DeFi ecosystem with the same tools as the CeFi ecosystem to give the same level of convenience to a user? But AI doesn't really care. AI is just going to do whatever is to be most efficient.
What are you worried about going forward? Like, you're a very optimistic person. I think that the business is, obviously outperformed even probably your wildest expectations. But you got to give me like one negative thing.
AI scares the shit out of me.
See, do you remember where we started this conversation? I told you, or should I be worried?
Well, let me tell you why it's interesting. It's just like it's moving at such a radical pace. And I think even the way that we work is changing radically, right? You're seeing what these Claude bots can do.
Explain, for those that don't know, explain the Claude bot stuff.
Yeah, well, you essentially are now able, like you're seeing agentic programming, right? These agents are. I don't even know that engineers are going to need to know how to code it in the same way. Like I think what becomes more important now is delivering the inputs and the logic to these things. Like you need to be more of like a systems designer because if you think about it, people would spend years and years, fine tuning the craft of delivering good code. These AI agents are just going to be so much better at coding than humans.
When we head towards that world, there's agents, there's wallets, there's payments, there's digital assets. What does MoonPay look like 5 or 10 years from now, right? If all of a sudden, I'll give you a good example. I saw somebody posting on Twitter like a couple weeks ago, and they said more than 50% of the traffic to their technical documentation is now agents, not humans. At some point, you stop writing the technical documentation for the humans and you start writing it for the agents. You all still have, somewhat of a human-led business. You're going out, you're doing these business development deals, you're providing this stuff for humans to navigate these pages. Like, at what point do you shift, or what does that look like going forward?
We're doing this shift right now, right? I think, for us to succeed as a business, we need to ultimately become an operating system that AI agents use, right?
What does that mean?
So that means it's almost like the same principle of DeFi, right? Like DeFi is just software that exists on its own. Like the dream case for MoonPay, if you think about like the entire order flow of how we onboard customers from KYC to collecting the payment information to developing fraud scores to then exchanging assets, delivering those assets, as much as possible, that entire flow should be done by agents. So we should think about every single aspect of our business and say, okay, are we doing that with humans or are we doing that with agents? And so, it's a big transformational shift. We're still in the very early days of figuring this out, but we know that if we don't do this, we'll probably go extinct.
I know that some of your team is sitting up here and they're going to tell you not to answer.
We still love you. Yeah.
But
still have a job.
No. But how big is your company? How much money do you guys make? Like, tell us some juicy details about MoonPay.
Well, we're a private company, so
No, that's not an answer.
No, the company's doing really well. Last year was a great year for MoonPay. It was our best year ever. I feel like this year we're on track to do even better. We're in the 9 figures category. We want to scale to $1 billion in revenue. I think there's a real path to do that over the next couple of years. But we're ruthlessly focused now on just we got to build the best operating system. We will figure out how to make money. We're good at figuring out how to make money, but I think roughly I care more about saying that we delivered something that was genuinely end useful in terms of the product state to customers. For me now it's measuring, all these sources of flow. Can we aggregate this flow in the most efficient way and have as much of it run through AI?
You guys remember in high school, if you were in math class and they asked you a question and you didn't give a number, you got in trouble? That was an amazing answer. He didn't say a single number. That's crazy. Ivan, thank you very much for taking the time to do this.
Thanks so much.
All right, we got Brendan and Charlie are coming up here next. I think. Where are they? Okay, there they go. You guys walking around that corner real fast there. Yeah, racing. Okay, here we go. All right, let's start with Core. What is Core?
Hey everyone, Brendan, one of the initial contributors at Core. You can see it on the seats, apparently, the Bitcoin power grid. So in layman terms, it's a layer 1 blockchain. It's basically a Bitcoin sidechain, what we call. So it's fully EVM compatible and secured by Bitcoin. So what I mean by that is Bitcoin miners, they delegate hash rate. So they produce hash rate to produce Bitcoin blocks, as you know. They're redelegating that to help secure the core blockchain. And there's also a staking function. So as a Bitcoin holder, you can stake Bitcoin and also secure the core blockchain. So it's very aligned with Bitcoiners and Bitcoin itself. And the entire goal is to make Bitcoin more productive. Obviously, there's Bitcoin, the asset, which we've talked a lot about, and there's Bitcoin, the blockchain. There's not a whole lot you can do on the blockchain. You can send, store, receive. And we've seen this kind of wave of new applications on Ethereum and other blockchains. We're looking to bring those types of apps and applications to Bitcoin on our blockchain core.
What about BitLayer?
So Belayer, we try to focus on two things. We're building the new trust minimized bridge compared to WBTC, which is more decentralized. It's powered by BitVM. We're one of the first research team on BitVM. That's the new kind of technology framework to build a better bridge for Bitcoiners. We started our layer 2 network, mainnet, 2 years ago as one of the first BitVM layer 2, EVM compatible as well. Compared to sidechain, our transaction actually eventually was set on Bitcoin block. Kind of have similar value proposition as core. We want to bring more fees, more revenue to the miners. Actually, 3 top Bitcoin mining pool and miners are actually our investor and a partner. I think Fred was here right this morning. All those Bitcoin mining pool have this issue. They have a lot of AI data centers as a new revenue stream, right? But Bitcoin in the mempool compared to 3 years ago, which was very congested, a lot of fees. Now it's pretty empty, right? So how to make them economically sustainable to still earn revenue, being the miners? It's a tough business, right? So we want to be very valuable, bring more transaction, bring Bitcoin more productive.
Well, what are you doing? Like, how are they getting paid? What's the extra economic value that they get?
So we built our ecosystem. All-time high, we had around 200 ecosystem projects. We generated around 15 million gas fee revenue already, around 120 million transactions. So a lot of the fees we contributed back to the bridge operators, and some of the fee will eventually on the settlement layer we're paying as a gas fee to the miners. So that's like the new revenue stream where we contributed quite a bit to F2 pool, N pool, and Spider pools. And we want to do that with other Bitcoin miners.
And over time, I guess the thinking is some of these transactions on these other networks will eventually settle on Bitcoin, driving up more fees. You've got, I don't know if we've talked a bit about Lightning Network and things great for mass payments, but it's actually taking fees off the main Bitcoin chain and actually reducing fees in the mempool.
You know what's funny? You're the first person to say Lightning in 2 days.
Yeah. I mean, I've met a couple of people outside talking about it. So I hadn't heard it for a while.
Is it working?
Is it work? I'm not a Lightning expert. I mean, I think there's some debates around whether it can actually scale because it's going to take a long time to onboard individual customers. So I think what they're finding is that may not actually be the play to get individual people like me and you to set up a channel because it's just going to take years and years and years to get everyone on that network. But large institutions, exchanges, et cetera, who are doing high volume of payments, it seems like there's a really good value prop there. But again, it's taking transactions off the Bitcoin network itself.
We are in the Bitcoin investor events, right? But maybe not a Lightning event here. Lightning is essentially a state channel network. It can solve the payment issue, but I think what we're trying to do is actually empower Bitcoin for DeFi use case. It's not just payment, right? With lending, all kinds of smart contract empowered DeFi protocol. Lightning cannot do that.
When you guys think about Bitcoin side chains, layer 2s, all this stuff, who are the people who are using this stuff? This is, and maybe what I can do is, I got a lot of questions about, I get pitched all day long from all these people who want to build all this stuff in and around on top of Bitcoin. And I always ask them 3 things. Where does the yield come from? Who is using this stuff? And how do you make sure that these people don't just show up, get a bunch of economic value in the beginning and leave, kind of the yield farming problem that all the altcoins, et cetera, have. So maybe let's just go through those 3 things, right? Where does the yield come from? Who's using this stuff? And how do you make sure that you retain them over the long run?
Yeah, I mean, we can shed a lot of light there. So the core project's been live 3 years. And I think you have been in this space a while because you did some rootstock stuff like years ago, right? And the value prop there was like Bitcoin yield, lending, borrowing.
When
this was like
you're a young person, you try everything, but you don't stick with anything. That's me. I tried it all. I looked at it all. I tried to figure out what was going on everywhere, right?
Yeah. So I mean, I think there's a bunch of stuff packed into that question. So I think in launching new blockchains, it's been very hard to retain usage and have people farm. I think we even dealt with that ourselves. And then with this big 10/10 liquidity crash, alt layer 1's got absolutely destroyed. And that's a whole other thing that we can go into. At the end of the day, where we've kind of ended up after 3 years is there's really 2 main use cases that folks are interested in. And there's 2 kind of segments, and we want to focus on those 2 products. So first of all is Bitcoin yield. I've heard like almost every panel talk about Bitcoin yield, whether it's a DAT, treasury, investment fund, et cetera. And there's various forms of that. I've talked to like insurance protocols. With Core, you can stake Bitcoin, which is using a time lock in your wallet. There is delta neutral trading strategies. There's a bunch of different things. But it's hard for institutions to access those, and they want to keep their Bitcoin in some sort of custodian of some kind, like BitGo, who I think you just had on. So yeah, looking to launch a product there that gives exposure to a variety of these strategies, that has an investment advisor, but the Bitcoin itself is held in Bitcoin custody, and that's more of an institutional product. And then you get a token, which is the value of any blockchain. You can trade in and out of it as you want. Your Bitcoin, 24/7 access. You can plug it into DeFi. You can borrow. You can do all the benefits of what come with a blockchain and a DeFi market with that token that's earning yield. So Bitcoin yield token. The other use case that we've seen, and I saw some panels yesterday on the retail side, is a lot of people just want to collateralize Bitcoin. I think initially, Bitcoin was meant to be peer-to-peer money. No one wants to spend it. It's seen as a store of value, but people want to borrow against it. Whether you're a retail or an institution. So on the retail side, I think there's more and more simple apps. I think you'll see it embedded in fintech products. We're launching a product, which is going to be a front end to a lot of the DeFi apps on Core, where users can just borrow against their Bitcoin and spend on a spend card in stables, right? And it's kind of like what any rich person does. They borrow against their stock. They don't ever sell the stock. You're basically empowering every person to do that, whether it's someone in Africa, LATAM, or America.
Where does it come from? Who uses it? How you keep them?
Yeah, so kind of straight to the question. We saw the evolution of user base. 3 years ago, when we started BitLayer, when we launched our mainnet, it was a bunch of the Bitcoin old folks that were very active on the ordinal season. So there was tremendous of energy and attention on that. They want to use their Bitcoin. And now evolved to like a lot of the DeFi users. Some of them actually came from Ethereum world. Certainly a lot of the builders, right, built on top of BitLayer and other network. They brought a lot of their community on that, right? And eventually now we see from 2025, Bitcoin is one of the best collateral assets, right? So the yield come from basically all the proven DeFi yield, right? Borrow against the lending yield, stablecoin yield. You mentioned about delta neutral, all these yield. There's no rocket science in terms of the yield sources. Whoever claimed like over 15%, all kinds of yield, you're bringing your investor taking all kinds of excessive risks, right? So I think for Bitcoin DeFi, the yield competition is not you competing with pretty high risk kind of perpetual trading kind of DeFi yield stuff, which a lot of the Ethereum protocols claiming to do, and some of them, unfortunately, after 1010, right, they had a lot of insolvent or bad debt issue. So I think for Bitcoin infrastructure builder like us, we should never like claim all these like excessive yield we provide for Bitcoiners, and for the user base of Bitcoiners, we're competing with zero yield, on native zero yield on Bitcoin layer 1. So it's better than zero, right? So that's kind of on the value proposition comparison. And I think the community of Bitcoin is getting much diverse now. It's very hybrid, right? In the past, it was just Bitcoin miners, like the people who completely self-custody, hold their Bitcoin doing nothing. Some of them are very maxi. They're never going to use their Bitcoin for any reasons. We see more and more users, right? They actually want to borrow against their Bitcoin, right? For like make their Bitcoin more productive. And obviously, with after ETF, institution coming, so we're dealing with a lot of like institutional powered family offices. They manage their Bitcoin holding in a more institutional way. So they're pretty financial savvy compared to the miners we know that actually just know like the hash rate and all this equation. Outside of that, they're actually not the financial savvy. So we do see the user base evolve quite a bit in the last 3 years.
How much can people make doing this stuff? Are we talking 1%, 5%, 20%? Like, what does the yield percentages look like?
So the sweet spot we see, obviously from the DeFi yield we get is around 4 to 6%. That's like kind of the sweet spot. User actually care, they want to get it. It's not like too small. For some kind of a layer 1 Bitcoin staking protocol, they can only deliver like less than 1%, which is like people don't bother, right? It's just way too small. Some of the small depositor kind of staking users, you can't even, the yield you get like less than 1%, you can't even justify the fee you pay. So sweet spot, which has a product market fit, is around 4 to 6%.
Yeah, I think there's a whole range. Our target's thinking like 2%. I think a lot of, again, because it's institutions, they're not looking to take on a ton of risk with their Bitcoin. Again, we mentioned there's a lot of ways to earn yield. I'll just talk core staking. If you want to stake just Bitcoin, and again, that's a time lock in your own wallet, literally no risk, risk-free yield, it's like 20 basis points. So
Describe what a time lock is.
Yeah, so how that works, time lock is basically you issue a Bitcoin transaction in your own wallet to yourself, and you time lock your Bitcoin for a period of time. It could be a day, it could be a month, it could be a year. What that does is basically make your Bitcoin unspendable for the amount of time you specify the time lock. It's a basic Bitcoin function. There's not many other functions that you can do. While your Bitcoin's locked, you're basically delegating it to Core and helping choose a validator. For doing that, you earn yield. You earn Core tokens. It's like staking Ethereum tokens. But the beauty of it is you have the peace of mind of knowing the Bitcoin's in your wallet, and there's no way that we can take it from you. It's just time locked, and you're unable to spend it until the time lock expires. We have this thing called dual staking. So if you also stake Core, you get higher yields. That's roughly 2.5%. And we've had like an ETF product focus on this that has Core and Bitcoin, yield-bearing ETF. A few other folks building on top of it. It's kind of like infra that is really interesting to see what people are going to build on top of.
Let's talk about the different ways you guys build this stuff, right? I think some of these companies are very centralized, kind of traditional corporation. There's leadership, there's employees, they're employees of that corporation, and they go and they build it. There's others that are more kind of DAO-like in structure. They're kind of projects, and people are very distributed, and it's kind of, hey, build what you can, when you're available. Talk about each one of your models, and then the pros and cons of the, kind of how you've set it up.
Great question. So we started as a research lab, right? We're one of the members in the BVN Alliance, first to implement on the BVN. We're essentially trying to build a better bridge. So for that, we believe it needs to be a pretty solid, centralized tech team, actually have a very clear vision with a clear roadmap, right? We had like institutional investors like Franklin Templeton and so on. Basically, we actually have a company to sign investment agreements or even asset management contract, right, with sort of like our counterparties and so on. Whereas we have the governance token, we have around 70 different validator sets, and in the future we want to embrace to over hundreds of them, right? So the token holders, we now have over like 500,000 users now. So they have like governance voting, we have the fee switch kind of structure, we build like the on-chain governance protocol on that. So eventually you've talked to the governance side, right? The token is issuance by the foundation. So foundation is like the non-profit kind of way, the structure, just like Ethereum from Switzerland. So that's kind of the structure. I don't think we want to claim as a DAO. Like DAO has a lot of like kind of ambiguity, right? There was quite a lot of controversial things going on with Aave, right? On the DAO, like how the main management tech company own a lot of the IPs, where the DAO, like Aave token holders, only have the voting rights, and sometimes the voting rights will be overrun. So I think that the ambiguity of the DAO is actually not really helping companies move forward. At the end of the day, we want to deliver the best product for the customers with sustainable yield, which they're not taking too much risks. And the better infrastructure we build needs to have a real team to running that, not just a DAO.
I don't have much to add because it's a very sticky topic. Well,
let's go.
Yeah. I've been in tech 15 years. Operating as a DAO is super inefficient and difficult and hard to compete. It's like any tech. If you're running a fintech company, are you going to operate as a DAO or are you going to be a benevolent dictator founder? I would bet on the benevolent dictator founder every day. I think there's a bit of ambiguity when it comes to crypto startups and legalities and structure in the US. So obviously there's some things you need to think about. But at core, it doesn't operate as a DAO. It's not quite like the fintech benevolent dictator either. It's somewhere in the middle. That's all I'll say. Yeah.
I will say, for those that don't know, I one time looked at investing in something that was controlled by a DAO. And so I talked to the people who were kind of like the initial people who started it, and they said, okay, yeah, this all sounds great. Here's the deal structure also. Okay, awesome. So there's just one thing. We need you to get on a call with the DAO. I said, okay, sure. How do we do that? And they said, well, we're going to get on Discord. We're going to get on a call. I said, okay. And so I got on a call, and I thought, everyone, it was a Saturday morning. And so I got on this call thinking that there was going to be, 5 or 6 people or whatever. There was 900 people on the call. 900 people. Go. And I literally texted I texted the guy and I said, do they all get to ask a question? I was like, this is going to be crazy, right? And so to your point, like I think I saw firsthand, like how do you make decisions? How do you actually, who gets what, kind of weight, right? Is there like preferred voting shares versus not, and all that stuff is difficult.
Yeah, I'm all for like getting the community involved in certain decisions or stakeholders, but not every single piece of minutia, right? And otherwise, just nothing gets.
And we see it in Bitcoin, right? Like if you look at, there's been many times in Bitcoin where you have the miners, you have the node operators, right? And you also have the software developers. And there has been disagreements. There has been, kind of all these things that kind of grind our way to a better spot. But definitely those checks and balances are important as well. One other thing I want to talk about is you all are both in technical businesses. You guys are building software. We have talked ad nauseum over the last 2 days with people who are saying, hey, we are changing the way we write software because of AI. What are you guys seeing inside of your companies right now? And is it making you better or faster? What's kind of the impact?
I got a lot to say about that. So I think, I
never seen you so excited before.
This is the most exciting thing in 2026, right? I think we had a huge run. We made over 10 million revenue being the L2, right? We helped a lot of Bitcoiners get yield, which is all there, right? It's proven it worked, but certain people don't need it. Certain people like it. But at the end of the day, it's a software business, as Anthony you mentioned, right? So we wish all the AI system, the new things coming with the AI agentic engineering can come earlier, because we actually spent millions of dollars. We ran like over 50 people full-time engineering team. We built a lot of the tech with pretty high cost, right? So I think it's a life-saving for a lot of software company like us. We reduced 80% our R&D cost in the last 3 months, and the entire team productivity and output is 2x. So it's 10x difference per person or per cost capital, right? So it's a life-saving for companies. And assuming we are in this like short-term bear market, right? We need to survive. Whoever continue to deliver really good, products, solutions with low cost can win, can survive. So that's very important. And in the last 3 months, we really train every single team members to think about it. Like I use that every single day probably to my team members. Is this something needed for human input? Have you even checked with your AI for get answers before, right? Like sometimes we need to train everybody in the team to become like a high agency kind of the team member, right? To use all the AI tooling to empower yourself. That's probably one of the most important things to do as a tech company in 2026.
Yeah, we have a short on time. So I think like from a blockchain perspective, blockchain programming, frankly, is just not that complicated. Some of the big technical pieces are in research, but programming itself isn't. It was more about audits. So I think it's going to help a lot. A lot of, I'm just like a technologist. Generally, a lot of my founder friends find that some of these mid-level engineers are opposed to using the tech. I don't know why. I think it's just like old habits die hard. I was a good friend with a group that was bought by Pivotal. They were big advocates of pair programming. If you guys remember, tech from like 12 years ago, this was an approach where like literally 2 engineers sat side by side and coded together. And what it resulted in was just way better work. And I think that now everyone can pair program with an agent. It's going to empower really great engineers. I think you will need less engineers. I agree with some comments from yesterday too on the Lava side that it's kind of air cover to fire your bottom 20% of your staff. I don't necessarily know if it's just AI. It's just getting low performers out of the org. But yeah, no question, it's like one of the wildest technologies, and it's going to make us hyper efficient and super exciting. And if you're a generalist, I mean, you feel like a genius. You can code up basic things in English. It's amazing.
It's magic. If I can build something and I don't know anything,
there you go. In an hour or two,
anyone can do it. Anyone can do it. All right, thank you guys very much. I appreciate it.
Thank you.
Thank you guys.
All right, next up we've got Bill Barheit. Oh, Bill's a pro. Bill's already halfway down the runway here. You were enjoying the speaker room back there? They got Jolly Ranchers back there, so you know.
Yeah, only the best, Pomp.
I do like Jolly Ranchers.
Yep.
You have built a very big business. You have been very successful at understanding what do people want. And I think that one of the big frameworks right now is this whole buy, build, borrow framework that you guys are helping to bring it to both individuals, family offices, even some institutions. Just describe, like, when you think today of providing financial services to people who want crypto exposure, what do they want? How do you serve them?
Well, people first they want to know who they can trust, right? That's probably the biggest problem facing people who aren't crypto native in our world. Who do I trust? Why?
You're saying like the banks or other financial institutions coming in?
I'm talking about end users want to know who they can trust, right? Why are you not the next FTX or whoever, right? We saw BlockFil's announcement today that I guess they paused withdrawals. I don't know what's going on, but it's just another example of probably excessive risk and misuse of lending, et cetera, et cetera. So for us, it's always been about how do we consistently show clients that we are the one place that they can always go, and they know we're not going anywhere. They're not taking corporate counterparty risk to us. We use the technology the way it was meant to be used. They actually pick up the phone and can actually get a human being on the line, et cetera, right? And so I think that is, for us, the key to our staying power, is that long-term, like our churn is near zero. And there's a reason for that, right? And it all comes down to instilling trust, which is ironic because we operate in an environment which was, enabling trustless technology.
It's crazy.
Yeah.
But I guess there is something about like the brand still matters. And so if I think about 5 years from now, Goldman, JP Morgan, all these guys come in and they say in some form or fashion, hey, I'm going to offer some sort of financial product. You have one of the leading crypto native offerings, a brand that people have known, have seen. If they listen to Pomp podcast, they probably heard me talk about it. And now you almost put the user at this like decision point, right? Do I use the legacy brands and hope that they understand the new technology? Or do I use the people who have been in this technology, have been the quote unquote like experts at it till now? How does that play out?
I think all right, I'm going to say something that may not be popular in this room, but that doesn't mean it's not true. And I think we're at this juncture now where there are a bunch of blockbusters in traditional finance. And by blockbusters, I mean the Blockbuster video company that's now dead. And
name them.
Yeah, good luck. And probably a bunch of Netflixes that are going to take over from those blockbusters. And people don't want to hear that. They don't want to accept it. The government certainly doesn't want to deal with it, right? Because they're all regulated entities that are partially in a position they're in because of moats they've been granted over decades, right? And crypto doesn't care, right? Retail users of crypto generally don't care. I care, but I think what's going to happen, to directly answer your question, is you've got trillions, tens of trillions with wealth managers, which we refer to at Abra as boomer money, which is about to be inherited by people who aren't boomers, who are saying, well, why do I want to continue to work with wealth managers who don't understand me when what I want is I want to have my money in a Robinhood-like environment. I want access to prediction markets. I want access to crypto. I probably want access to DeFi. And the RAA is already lost in this conversation, right? And I think what's going to happen is you're going to see a whole bunch of new financial institutions created, not a whole bunch, a small number, that effectively bridge that gap. And as that money transitions, right, it's going to be that new Netflix that's operating in the crypto native world that's going to assume those assets, in my opinion. And our goal is to be one of the key players in that world.
So when that happens, are they doing the same thing that they're doing now in the traditional world? It's just with new rails, new assets, new technology, or are there different things that they're actually doing with their financial life?
Yeah, so my answer is different. It's a big planet. So this is a very US-centric audience, US-centric probably set of discussions, but my answer is partially dependent on geography. So I'll give you two examples. But a lot of it is centered around, my answer is partially centered around lending and credit. So we'll start there. I think that for most of the planet, credit infrastructure is incredibly complex, and just getting a credit card as opposed to a debit card for most of the planet is nearly impossible, okay? We've set up a relatively sophisticated environment to do that, but watch what happens if you don't pay your credit card bill. They more or less eat it, right? And there's a reason why rates are what they are. Okay, now what if all of your assets become tokenized? You have your traditional kind of, let's call it first generation crypto, but you have your stocks, you have your real estate, or the title to real estate, whatever, which all is, let's call it crypto liquid, right? Via DeFi rails or whatever. If I can give you an instant on credit line against all of that, attached to Apple, Google Pay, credit card, whatever, you now have a credit line attached to your life that you can take wherever you want, and the merchant has no idea where the credit is coming from. It just knows that it can accept it, and it's not taking counterparty risk to you as the consumer when it does, okay? Now, especially outside the US, that's the future of credit, in my opinion. Now, in the US, it's a tale of two cities because most of the public has no assets, okay? But let's focus on the public that does, the part of the public that does for a second. I do think that retail is going to access asset-based lending the way the wealthy have for 2 generations, right? So if you're a Goldman client, you can easily borrow up to 50% of the value of your portfolio with them, probably in a couple of days' notice. We're making that available to our high net worth clients on crypto rails today. It's all DeFi based. There's no central counterparty risk for any lending that we do at Abra, none. Other than technology, but we use it ourselves. So we're comfortable with that, okay? So that's the future of kind of, or how I see this evolving quickly. And the second part is yield and how to take advantage. And again, all of it purports back to understanding DeFi, in my opinion. We made the strategic analysis literally 2.5 years ago to migrate the entire platform to be DeFi based when no one was talking about DeFi. It's all over the headlines today that BlackRock is embracing DeFi, and we literally migrated the entire business 2.5 years ago because we saw that as companies and startups come and go, that's fine in Silicon Valley startup AI land, but it's not fine in wealth management land, right? And so the best way to deal with that is to eliminate the balance sheet and counterparty risk altogether from the business model, right? And that's what we've done. So as that relates to yield, I think that you're going to see this integration of AI and robo-investing with DeFi, which is a match made in heaven because neither will have an off switch, right? The markets that you all support are closed more than they're open. AI doesn't understand that concept. It's like, you know, I've been playing with OpenClaw for the last 2 weeks, and it knows more about me than I know about myself. It reminds me constantly about all these things that I did 2 years ago. And it's doing a lot of the work I assign it at 3 in the morning when I'm sleeping. And so that's the future of investing, and those are going to be integrated. And we want to facilitate a simple user experience for that as we grow our client base over time.
Has anybody tried the on like a ChatGPT? You can ask it to create a character of yourself based on what it knows about you.
I have not tried that. I'm too afraid.
Scary.
Yeah.
Like, I mean, in terms of like how accurate it, you know what I mean? You like see it and you're like, oh, I probably have talked about this stuff that I didn't remember I talked to this thing about.
Yeah.
When we think about this, you have talked about, and I'm generalizing, but the individuals and like the family offices, they're leaning into this stuff. They like it. They're kind of more risk taking. They're, you know, on the forefront. You mentioned some blockbusters on Wall Street. RIAs, though, I get the sense that they're under pressure from 2 different sides. One, there's a bunch of people in this room who they're not working with an RIA regardless. Like this rise of the independent investor who says, I can do it myself. I may be smarter than a financial advisor, or I want to feel like I've got control because I got the tools now. The other thing is what we're talking about here, where even if somebody is working with a financial advisor, they're saying, I want to own Bitcoin. I want lending in DeFi. I want these things that are not the XYZ fund on Wall Street, you know, fixed income, give me 3% type thing. Do you have RIAs that are talking to you guys, or like just what is the current state? Because I feel like there's some that are going to say these people are all dumb and we're not going to go, and then others are like, we're going to get disrupted. Let's go embrace it and, you know, try to be ahead of the curve.
So I have been for 5 years now, quietly talking to RIAs. I guess it's not quiet. It's not quiet anymore. It's very so 5 years ago. It was, hey, can you explain this Bitcoin thing to me? Because I don't really understand why I should care. Fine, it's part of the gig. We do that. last couple of years, or starting maybe 2.5 years ago, post FTX, it was like, all right, Bitcoin's not going anywhere. ETF's clearly coming. What's next? Why should I care about embracing crypto? I would talk to them about these L1 blockchains, which were probably going to be used in their world, mostly lost in the conversation. But I would say if you understood what really happens under the hood with Ethereum and Solana and what it enables, you'll understand why it's the future of finance. And in the last year, what's happened is, and I've had this happen 5 times, and I wasn't expecting this at all. They took that as investment advice. So I've had RIAs come back to me and say, thank you so much for recommending Solana to me. And I'm like, what are you talking about? I didn't recommend that you go buy Solana, but they did anyway. And I said, well, congratulations. How about your clients? And they said, oh, no, we can't do that yet. And I said, well, what do you mean you can't do that yet? And they said, well, we don't have the permissions and the platform, and but they get it now. Right, they've been doing their own homework, and a lot of them are investing themselves. And obviously, the ETF and the BlackRock blessings helped. But I think you're going to see a next generation, and we're leading the charge in doing this. And it's one of my 3 key initiatives for this year, is really to integrate RWAs into our vault model. So our model, when I talk about eliminating counterparty risk, it's all based upon this concept of every client gets a vault, which doesn't touch our balance sheets. Okay. And that means that if we go away, their assets are still their assets. They retain title to them. And to me, that's the future of banking, because if we are in this so-called fourth turning phase of society, which I do think is true, and institutional trust is breaking down, banks have negative net promoter scores, which I didn't go to business school, but I didn't know that was possible, meaning you add a new client and the perception of you in the public goes down by adding a new client. How is that physically possible? That in that world of no one trusting each other, this is the right model for combining asset management and banking, right? And you can see why Jamie Dimon doesn't like that, why he's so angry with Brian Armstrong. So the point being, RIAs have no choice. Real world assets are about to become tokenized. We already support that. It's the same Ethereum and Solana chain integrations that we started doing 3 years ago. So as those assets are available to us and there's demand, we're just going to list them and create portfolio structures that integrate. I wouldn't be surprised if there's more people borrowing against SpaceX shares on our platform in 2 years than Bitcoin, right? And that is massive, because Bitcoin really drives, ironically, the adoption of most other L1s because of wrapped Bitcoin being required for lending. And soon it's going to be pretty much Elon shares that drive probably more volume even than Bitcoin.
When you look at the current user base, how many of them are young versus middle-aged versus older? And one of the things I've been thinking a lot about is, like, do 18-year-olds care about Bitcoin and crypto? Or is it the millennial generation that, if I look around this room right now, and I don't expect a lot of 18-year-olds to be here, but I do think that most people in the crypto industry that I interact with tend to be in that millennial generation. Yep. If we don't get the 18 to 22-year-old, kind of crowd, do we run out of Bitcoiners, in a decade?
So there's so many kind of crevices to this question. I would say, first of all, most of our clients are kind of younger, middle-aged, I would say, mostly because they're the ones who have the money, and also are believers that the old order is breaking, and this is the way to protect myself, and this is the future of finance, and I need to have exposure to this space. And a lot of our clients honestly started off with small exposure 10 years ago. It's now 50% of their net worth, and they need a way to borrow, earn yield. That's the most common discussion that I'm having with new clients these days, is how do I basically deal with the fact that I'm now crypto wealthy? But 18-year-olds by and large don't have a lot of money. In my experience, that's more like, hey, I want to move money around, and am I using Venmo or am I using crypto or stable coins, right? I do see that a lot. My kids do both, right? They use Venmo with some friends. They use stable coins with some friends now. They're actually doing that. They'll use Phantom on Solana, where it's free to move that around, and they don't have to put anybody's details in there. They just send it. So I've seen both. I think that most people don't understand finance and money at all, right? So most people have no idea what happens when you swipe a credit card, and the fact that there's like 4 or 5 banks that are touching that money in some way. So they just swipe it. They know that they're protected in some way, and they go about their day. people understand DeFi even less. And so eventually it's not going to be DeFi, it's just going to be Fi. And there'll be people who embrace it, and there'll be people who die. Just like all telephony now is voice over IP. And I used to have telecom companies yelling at me back in my Netscape days, this will never work. I remember going to France, we have the Minitel, we don't need the internet, and shit like that. And so I used to say the good news is that we all die. Now that's actually probably not going to be true in 30, 40 years anymore, so I can't use that argument. But the times are changing whether we like it or not. And I think that our timing is perfect. We're ahead of the curve, but just enough where we can, I have three initiatives for this year, so it's a quick plug, right? Triple assets under management, independent of price movement, get Abra public, which we are doing, and the third is launch real-world assets into the platform, which helps facilitate number one, and is a side effect of the credibility of number two, which is getting us public. And so you can't do that in a vacuum with clients and not try to integrate the existing investment opportunities into crypto as they become tokenized. It's all just going to become investing, and it's not going to be DeFi, it's just going to be Fi. And how it's working behind the scenes will only matter insofar that they believe that they're not taking risk to me. And that's what I mean by eliminating that centralized counterparty risk, and that's why DeFi is so beautiful.
I mean, it makes sense to me. I think you guys done a pretty good job so far.
We're still here, which is, I've had, and thank you for this, I do appreciate it, but on the other hand, the number of all of you who have come up to me in the last 4 hours and say, congratulations on not dying.
Man, what an amazing crowd.
Yeah. I'm like, well, my last name aside, we need to set the bar a little higher, I think, than just not dying. And I've laid out what my goals are for this year for Abra, and I do think we'll get there. I certainly have visibility into all three. And hopefully the compliments will be a little bit higher, but I do appreciate it, but let's aim higher.
I think you're doing a great job. Bill Barhart, everybody. A lot of people don't know, Morpho is being used more and more now by people in what I would consider more the centralized world, as they, Bill was just talking about it, the Coinbase guys talked about it earlier today. They're all trying to do this DeFi mullet, right? How do I show something on the front end that looks like a trusted, centralized, kind of user interface, but then on the back end, I want to make sure that we can do some DeFi stuff.
Nice to meet you. You can think about Morpho as it's a blockchain, 600 lines of code. It's an open protocol. It's an open market where borrowers and lenders come together. In that dynamic, there's an interest rate that is charged based on the liquidity and the utilization of the capital. So Morpho is a project that's 4 years old. There's 11 billion of assets on the platform. And then since launching with the Coinbase in kind of the DeFi mullet model that you mentioned, we have roughly about 1.8 billion of loans on the platform.
It's pretty good.
Yeah, good start.
Yeah, we were just talking about this right before this, that exact product. Lending product, Coinbase spins up, I guess they already had a lending business, but they spin up a retail lending business. Cap deposits are at like 5 million or something like that, do almost $2 billion in loans, probably making somewhere between, 15 and $30 million in revenue off that product. That, all of that happened in a matter of, I don't know, probably like 1/10 of the integration costs, if not 1/100th of the integration costs that it would have been had they tried to spin up that business independently. So, I mean, if that's not the power of on-chain finance, I don't know what is. The other cool part about that, I suppose, is the rates they're charging are below market, in fact, right? Because of DeFi's sort of structural cost advantage.
This fucking guy should just be the host. Jesus. You got energy, you got a loud voice, you talk fast. This is fucking great. What's Lombard do?
Yeah.
Since you want to talk, let's go. What's Lombard do?
Listen. We've had a lot of, I know the Morpho protocol quite well, so it's been a privilege working with them.
What's Lombard do?
Lombard connects Bitcoin to the world of on-chain finance. So, what's kind of funny about, being at this conference and have the opportunity to chat with all these folks is we're kind of back to the basics of pitching on-chain finance first and then going back to what you can do with it. So I'm a sort of DeFi guy natively. I worked at a fund for, Polychain for 3 years, was focused almost exclusively on DeFi, worked at a DeFi protocol after that. And saw this big opportunity, $2 trillion in Bitcoin sitting on the sidelines collecting dust and custodians and ledgers. And, the thought was we built an entire on-chain ecosystem of financial primitives built upon the same ethos as Bitcoin, trust in math and code, not individuals and institutions. And it would be, if all assets are coming on-chain, it'd be silly to not see Bitcoin used in on-chain bar lend protocols, yield products, whatever else. So Lombard builds a suite of infra that connects BTC to the on-chain world, allows you to earn yield, allows you to borrow stablecoins against your Bitcoin. And yeah,
how big is it? Like the on-chain, not just Lombard, but like people doing this stuff.
Yeah, it's a good question. I think there's
hundreds of millions, billions, a trillion.
Yeah, I think there's 150, maybe $200 billion in on-chain protocols right now. So big, but I mean, if Bitcoin came on chain, you could dwarf that in a very short amount of time.
I see.
Yeah.
All right. What are you guys doing at Anchorage?
Awesome. Anchorage. Well, thanks for having me. Very excited to be here.
You don't have to thank me. Thank you for coming.
Anchorage is one of the leading providers of institutional infrastructure in Bitcoin and crypto more broadly. We're well known for being one of the leaders in custody, and we do that for a very broad range of clients, going from VCs to asset managers to protocol foundations, and a very, very broad range there. We're also the first company, the first crypto bank to get an OCC charter, meaning we just actually celebrated the 5th anniversary of our banking charter, and that puts us in a very strong position to do things like regulated stablecoins and things like that. And another thing Anchorage does, and this is more what I work, is prime services. So we act as a prime broker in the industry, meaning we do spot trading, derivatives trading, settlement and lending, so all that good stuff. We also serve a very broad range of institutions there. So yeah, we do quite a bit.
All right, but the on-chain stuff, what are you guys trying to help people do with the Bitcoin on-chain?
Yeah, so we are basically a connector between the, let's say, centralized side of things and the amazing work that these guys do. So because whether due to our tech stack or whether due to our regulatory standing, I think we're in a good position to be the bridge here.
I think part of the requirement to be on this panel, you got to be a smooth talker and just sound good. Jesus, you guys are all good. All right, so when you look at Morpho, one of the questions that I've got is you guys go to a Coinbase, but that is centralized, bringing this decentralized back end. Are the institutions going to do this stuff? Can you go to a JP Morgan, a Goldman Sachs, name your organization and say to them, hey, we want to do these Morpho vaults, but we want you to use your front end? Or is that actually the advantage that the crypto companies have, where they're willing to kind of go into this, wade into the deep end, and the institutions are never going to do this?
Yeah, it's a good question. I've been surprised at how quickly institutions are running at this and how quickly they're mobilizing. You mentioned a couple of names there, and I've had meetings with all of them in the last 3 weeks. The entryway into Morpho is, you can think about Morpho in 2 ways. You can think about the product, and then you can think about the market. The product is a vault, and we've kind of heard a lot about vaults, which is this container in which asset managers or asset allocators can change, adjust, and manage risk profiles. So you take the capital in, and then that vault can deploy across multiple or one market.
Okay, hold on, because I'm going to ask questions that I know everyone wants to ask, but they don't get the chance. Yep. So there's a vault in the cloud, on the chain. Where's the vault live?
You can set up a Morpho vault on the protocol, and we have the software to do that. You can also use a third-party vault like Vita or any other provider. Which
I have 1 Bitcoin. I put it in the vault. It just sits in there like it's in custody, essentially?
So you'll use somebody like Lombard, who are working with Morpho on our Bitcoin smart accounts. So if you're a large holder of Bitcoin, it was very difficult for you to get any type of leverage from that. You had to sell it. It was a tax event. Or you held on to it, and you were just looking for some sort of value appreciation. So it was very difficult for you to try and get leverage off that. Now with Lombard's new solution, what you can do is you can get the equivalent of that Bitcoin. You can put it into a Morpho vault, and then that Morpho vault can be managed by one of our curators, a Galaxy, a Bitwise, a Gauntlet, a Stakehouse, and they can manage the investment strategy based on your risk profile. Because everything is open and permissionless, you can see exactly how those assets are being used. And then you also have the ability within the vault, If, for example, one of the curators wanted to change the strategy, add another market, take a market away, there's a safety mechanism in the vault for you to be able to withdraw your assets.
Yeah, maybe I can hop in here and tie this all together a little bit. We at Lombard, we spent the past 2 years onboarding Bitcoin into on-chain finance. We onboarded about $3 billion, but had we have the tech that we just announced today, we probably could have onboarded a couple $100 billion. The biggest impediment, I think, to people bringing Bitcoin on chain is tech risk. They don't want to trust new smart contracts. They don't want to trust brand new protocols. They don't want to trust, even a good-looking guy like myself who promises to give their Bitcoin back. They want to trust Anchorage and Coinbase Custody and BitGo, the most battle-tested Bitcoin custody tech in the space. We just announced this product today called Bitcoin Smart Accounts that allows a user to keep their Bitcoin within their own self-custody wallet within a custodian. So Bitcoin stays within Anchorage, under Anchorage's control. You mint a representation of that on-chain that can then be used to borrow stablecoins within Morpho. So this is kind of like, it's the marriage of custodians and on-chain finance.
Now I know why all three of you are up here together. All right, so hold on. So this Bitcoin Smart Account is, I take my Bitcoin, give it to Anchorage. Anchorage leaves it in a custody account, but then I use that Bitcoin as collateral to then go to Morpho and borrow stable coins from it.
Exactly.
Now, here's my question. Let's say that I do that. It's all seamless. You guys are all geniuses. If I go to the traditional world, I just can email like a private banker and they'll give me a loan. And I don't have to worry about it. I couldn't even tell you what the protocol is. Well, all I know is I gave them X dollars, they gave me Y, dollars of a loan. Do we need to get to that point, or is actually that is a bad thing because there's no transparency, there's no trust, how do you guys think about this user experience thing versus the technology working?
I think I can talk about that because we actually do both things. We have a credit desk. So folks are all the time pledging Bitcoin, for example, as collateral to us and taking stable coins to maybe do some other trade or something within the platform. I think that the, let's say, centralized Bitcoin credit market and the, let's call, on-chain Bitcoin credit market, I think they're kind of complementary to each other because today they're not entirely connected. You will see that the rates, the DeFi rates and the centralized rates, sometimes they can be very different. I think I was looking at Morpho now. You can, I think if you want to borrow stablecoins at Morpho now, we were paying 5.5%, something like that %. You can find just completely different rates if you go to our credit desk, for example. And the reason is these markets are not entirely interconnected. So I feel like it's a little bit these are two rails that will probably operate alongside one another, and we need to find ways to interconnect them as much as we can so that they're kind of operating more in tandem. That's how I see it.
I saw you shaking your head, yes.
Yeah, to answer your question in terms of the difference, banks are limited by the hours that they're open, the geography that they operate in, and the liquidity within their own kind of system. If you're on chain, it's 24/7. You can see everything that's happening, and you can withdraw at any time. There's no kind of counterparties or middleman there. So you have to. The big thing about Morpho is what's the trust signal? When you think about borrowing against an asset or lending against an asset, today it's over collateralized crypto-backed loans. But as we move into the future, we're trying to think about what are the off-chain signals, such as legal contracts or others, that will allow us to be able to serve under collateralized loans.
One more comment here. These, the ideas they're presenting here are not theoretical. This is very active in practice. Today, yeah. There's a Galaxy report from last year that says something along the lines of about half of all collateralized crypto borrowing happens on chain, which is pretty crazy. Almost as big as the CeFi space.
Say that again?
About half of all crypto collateralized borrowing happens on chain.
That's interesting.
Yeah. And then the other thing I was going to say is right now, if you want to borrow against your Bitcoin, you can borrow about half the cost on chain. Pretty close.
Compared to posting as collateral.
Exactly,
okay,
yeah.
So maybe I don't want to do anything with my Bitcoin, but as we tokenize assets and kind of this whole on-chain world starts to happen, you just go right down the line at Lombard and you say, hey, if you can do it with Bitcoin, then we're going to do it with tokenized SpaceX stock or Apple stock or whatever?
You could theoretically. Lombard's not going to do that. We just focus on Bitcoin. There's enough enough challenges to onboarding Bitcoin that we're going to have our hands full. I think
trying to flirt with the audience and get them excited.
No.
Bitcoin
It's the truth. It's the truth. But there's plenty of other asset issuers I think Morpho works with.
But I think that's a great point. I actually
now they're excited. Now they want to talk. All right, go ahead.
No, this is definitely further along the road. But one of the interesting things about tokenization is that you allow these DeFi primitives to be used around tokenized real-world assets, which is something that is not that easy to get sometimes in the TradFi world, right? You have all the on-chains advantages that these guys have already mentioned. So I think that when we start to see these DeFi primitives and the DeFi advantage accruing to these tokenized assets, I think it's going to be even clearer why it makes sense to have real assets on-chain.
Listen, I'm convinced that we should put the real assets on chain. I've been thinking this for a decade. I actually thought that it was going to happen way sooner, and then I had to shut up about it for like 8 years, right? Because it became obvious it wasn't going to happen as quickly.
Tokenize the world.
See, I know you've been around a long time. There's two phrases I used to say all the time: tokenize the world, and then the other one was the virus is spreading. 2020 kind of screwed that up. I had to stop saying that one. But if you think about this, I guess part of what becomes really interesting is if we tokenize these assets or it's just Bitcoin, okay, I want financial services. So borrowing against it makes a lot of sense. You guys are all working on that now. What I then think becomes interesting is there's this interoperability of a digital asset, regardless of what is backing it, right? Whether it's dollars as a stablecoin, Bitcoin, or a tokenized thing. I hear people even talking about, can you spend a fraction of the Apple share, or can you, in a borrowing standpoint, could you borrow against, a piece of real estate or something like that? And so is it one single asset, or do we actually start to pool this stuff? Like Bill was just talking about, if I understand more of your financial life, now maybe I just give you a loan and it's backed by a basket of goods, which looks a lot more kind of like an unsecured loan that a bank would give you just because like, hey, you're rich. Right. And so this is almost like the best of both worlds is like, hey, if you have money, you get the loan, but maybe there is some securitization that happens on, or like, how do you guys think about that type of stuff?
I mean, today on Morpho, we've got real world assets that are tokenized to the tune of about 800 million. So that's an active market. But the things that are kind of exciting is you think about, like, imagine a large card holder comes to Morpho, and what they want to be able to do is they want to be able to free up paying their merchants on a Friday instead of that, instead of waiting to a Monday. So Visa has all this information around their merchants in terms of balances received. They can see that, an oracle can be read, and then you can develop a market around that to say, hey, I'm going to lend against that. Like, I know that there's a payment going to come in on Monday. I know that I'm going to be the first to be paid, and so I'm going to lend this money at 1% over the weekend. And like that's a real use case on market. So we're starting to see like not only the aggregation of real world assets, be it someone coming in with a credit warehouse coming in with car loans or mortgages, but we're kind of also seeing like businesses, cardholders coming in for their merchants and being able to say, look, we have information here that we can provide that shows strong credit and can actually forward capital against that.
Give me the pitch on Lombard. Like what is the entire idea here, right? Obviously, we're talking about some lending stuff, but like when you think of the vision of what you're building,
the pitch for Lombard.
Yeah, like what's the long-term vision? This is very obvious why this is valuable, right? But I get the sense that this is only one piece of what you ultimately want to build.
Yeah, well, I mean, the world we envision is all Bitcoin living off L1 on L2s effectively. Bitcoin is, the next generation of money. It would be silly to see all assets come on chain and not see Bitcoin become the foundation of the new on-chain financial ecosystem we built, again, on the same primitives and ethos that Bitcoin first introduced. So I think this is kind of the starting point is bring all Bitcoin on chain, let it participate in the financial ecosystem in many different ways. And, from there, maybe where the vision goes. Bitcoin as an ecosystem has been largely void of innovation for quite some time, at least in an on-chain sense. You've seen, I was an investor for a long time. We didn't care about Bitcoin at all. All the innovation was happening in ETH and Solana and wherever else. I think with the introduction of Bitcoin into on-chain financial protocols, that changes. Bitcoin is one of the most principled developer communities in all of the ecosystem. If you introduce them to permissionless innovation in the ways that ordinals and BRC20s and inscriptions did, I think that changes a lot. And maybe just maybe you start to see innovation come back to the Bitcoin space in a really big way.
when you say bring it on chain, it's a layer 2 on top of Bitcoin. It's some sort of side chain. You're bringing it to another chain. Well, explain that.
We build bridging technology. That's the fundamental idea. We connect Bitcoin to on-chain finance. So we have a Bitcoin bridge that's a consortium of major institutions, OKX, Kraken, Wintermute, DCG, Galaxy, these types of folks. But that's not even good enough. BSA is a new form of bridging technology that allows you to leverage major custodians.
That's
but I think
Bitcoin Smart Account.
Exactly, yeah, Bitcoin Smart Accounts. But that's just the start of it. But one other thing
you can't ask me any questions because I'm out of my depth already. I'm here to learn.
one other thing I was going to touch on real quick here was just you mentioned, like you could wrap a ton of assets together and your banker could give you a loan against that or something. That is a product that you can only get right now if you're super, super rich. The best part about smart contracts.
Not true. I'm not super rich. They tell me something.
Sorry, yeah, fair. Smart contracts are the most scalable form of financial technology we've ever had. Anybody who can write code can now write whatever financial product that your banker would be able to give you. And that's incredibly powerful.
The one thing I want to highlight quickly, I think we're running out of time, is that this should be very exciting for everyone who is looking into Bitcoin's evolution as a monetary asset. A good monetary asset should also be a good collateral asset. A good monetary asset, as it evolves over time, we should start seeing the market structure getting more developed, which is exactly what we're seeing for Bitcoin. Even if the price hasn't changed that much over the past 2 years, I would say that the credit market has probably, 3x, 5x. The Bitcoin options market has probably 10x over the past 2 years. So you're seeing this market structure getting more complex. You're starting to see these other use cases getting kind of developed and more mature. So this should also be very exciting for Bitcoin's trajectory as a monetary asset itself.
We got a minute and 15 seconds. I got told I'm not allowed to go over anymore. Can each of you tell all these smart, amazing, beautiful people what is the pitch for them to come use it and where do they go?
Sorry, can you repeat? What's the pitch for what?
Morpho.
Okay.
Where can they go use it?
So let me talk about what Morpho is not. Morpho is not a bank. You can think about us as an AWS of credit markets. We enable banks to come online and develop their own credit markets. Every major asset class has had a credit market against it. Banks use gold, Treasury uses repo, security uses margin lending, or equities use margin lending or security lending. And then we have this big asset called Bitcoin that is not being utilized whatsoever. If we took 5% of Bitcoin and used that as collateral on market, we would add hundreds of billions to the open credit market.
Good pitch.
I guess if you want to put your Bitcoin to work in one of a number of ways, you should come talk to me. We have a booth out there. Otherwise, you can find me on Twitter, LinkedIn, or something like this. You can go to Lombard's front end. It gives you an address. You can deposit Bitcoin directly to that. Mint a token that you can mint to one of many chains, and use that to borrow stablecoins on Morpho, or do many other things.
I go very quickly. We're running out of time. Is there a trapdoor or something?
No, go ahead.
Can I go? Well, if you're an institution trying to look for ways to engage in Bitcoin or stablecoins or even the crypto market more broadly, whether that means trading, whether that means lending, whether that means custody, whether that means issuing a stablecoin, Anchorage is a regulated partner, and we would love to talk to you.
Amazing. Thank you guys very much. I appreciate it. All right, next up we've got Zach Pandel. Yeah, come on, clap. What are you guys doing? Let's go. You ready?
I'm very ready. Everybody.
All right. You know a lot about markets. Let's just start. What the hell is going on?
What's going on with the price of Bitcoin?
Yeah.
I think that's a good place to start. There's a lot of market structure, tokenization talk. I think people do want to talk about the price of Bitcoin. Look, it was a big drawdown, even for a volatile asset. This has been a pretty big drawdown, about 50% peak to trough from where we were in early October to the recent lows. By my count, this is the 9th largest Bitcoin drawdown in history. So we've had kind of 4 mega drawdowns, these big cyclical peaks. This is the 9th biggest, so kind of so far. We'll see how we get on. Look, I think the main thing to convey is that this is not just about Bitcoin. When we look at capital markets as a whole, what you've seen is a comparable-looking drawdown across many frontier tech market segments. Software companies, defense tech, ironically, quantum computer stocks have been moving down just the same way that Bitcoin has been doing. So this has not been a kind of crypto-specific sell-off. It's been a broad de-risking in frontier tech assets. And if I had to kind of put guess one particular catalyst that started the de-risking, I think you're supposed to point to President Trump naming Kevin Warsh to be the next Fed chair. I was a professional Fed watcher during the whole time that Kevin Warsh was on the Board of Governors, read every speech, and pretty intimately familiar with all the things he said about the financial crisis and quantitative easing. And I think it's not surprising that the market's knee-jerk reaction is that this guy's a hawk. We will see how it plays out, but that's the knee-jerk reaction.
But it seems like that's what he was 15 years ago. Now he's singing a different tune. Or maybe he's doing that just to get the job, or maybe he actually thinks differently. What do you think?
I don't think we can be sure that he's a hawk at all. I think it's a knee-jerk reaction from people like me that watched him as a public official saying this is a cautious outcome, but I don't think we can say for sure, and I kind of doubt it, that he will be a persistent hawk. But I do think that this was the short-term catalyst that caused a pullback in a lot of assets like Bitcoin frontier growth assets. And I think what we learned, Pomp, is really that the marginal dollar that went into Bitcoin in the last couple of years was probably a growth portfolio of some kind. People think of blockchains as a secular growth industry and Bitcoin as a part of that, and growth-related investors allocated to crypto. And so when those types of portfolios are de-risking, that means de-risking your Bitcoin as well. I think that's what's been going on recently with the price.
Now, there's been a lot of talk over the last 2 days, mainly because I think about deflation being a bigger risk than inflation. What is your take on this? And does that have any impact on Bitcoin being like a forward-looking market and potentially people saying, hey, maybe I don't need as much Bitcoin if there's not inflation?
Look, the kind of big picture macro stuff has not changed one iota. The issue is that we're running huge deficits and the debt stock keeps going up. And this is not a Trump thing or a Biden thing. This is a deeply intractable bipartisan issue related to entitlement spending, basically. And it's been coming for decades. It's here. The line keeps going up. The Congressional Budget Office today published their first budget update in more than a year, and the debt stocks just keep going up, right? So there's no change in that path. So AI, could be a deflationary force, but the key thing is the fiscal side of things. That's where our money is created by the federal government. Inflation ultimately is about the behavior of the Treasury and the Federal Reserve. And so until something changes there, I am not a believer in the deflation trend. I think we'll have persistent debasement and inflation risk for the dollar. And again, not a Trump thing or a Biden thing or whatever. This is about all of us and really about entitlement spending at the core.
One of the value propositions of Bitcoin has been block after block. It's a kind of software-driven monetary policy, does not change based on demand changes. But I think that a lot of people who hold Bitcoin have started to pay attention to the Fed, geopolitics, the macroeconomy, all these other components. How much weight do you put on everything that's outside of the Bitcoin market affecting Bitcoin versus just Bitcoin is Bitcoin, and sure, there's going to be some emotion here and there, but it doesn't really matter?
Well, Bitcoin definitely just does its own thing. And maybe I'll take the opportunity in front of this great audience to militantly defend the Bitcoin as a store of value use case. Look, Bitcoin is amazing. Open source software running on a network of computers all over the world. And it's supported by this humongous infrastructure of miners. We estimate that there's something like 7 to 8 million individual Bitcoin mining rigs, individual computers that provide the economic security for this network. And Bitcoin has been resilient across boom-bust cycles, against attackers, against competitors, and it just continues to do its thing. One thing I like to think about is that the 20 millionth Bitcoin is coming right around March 12th in block 940217. That's when we get the 20 millionth Bitcoin. And we'll have to wait another 100 years before we get to 21 million. So Bitcoin is doing its own thing. It's producing blocks. It's a money system with these characteristics. And it's the things outside of Bitcoin, the kind of macro demand for these types of things that tell us what the price is going to do. So I think it's both. Like, yes, Bitcoin is going to do its own thing, and it is resilient to all these things around it. But on the margin, those things determine its price. So we think about both of those when we're trying to analyze.
Do the people who use the Grayscale products change their behavior in any way when Bitcoin goes up a lot or goes down a lot? Or are most of these kind of institutional type players really just, I'm a dollar cost average and that's my plan?
Well, I can tell you the phone rings a lot when the price comes down. I would say a couple things. Definitely, there are some investors that are allocated. We need to talk to them about how to think about risk managing a position after a drawdown, and that's one of the reasons that they work with us. Is that we will answer the phone in good times and bad times and talk about Bitcoin, and we are here for the long haul. Grayscale has been around since 2013 when the price of Bitcoin was $125, and hopefully is around when it's something much higher. So the phone rings a lot. I would say, though, that most traditional capital doesn't have a position, though, in Bitcoin. Most investors haven't allocated. And so when you see the price draw down, we get more phone calls about whether it's an opportunity rather than, they're concerned in some ways. It's an opportunity to potentially get involved in the crypto asset class if you haven't been already. I'd say the one other thing that's quite important, maybe worth mentioning, is that because the market structure around crypto is changing so much, there's so many different types of products, ways to get crypto access, that tax loss harvesting has been a huge topic recently. People sometimes have some old crypto in some wallet or on an exchange or something that they forgot about. Now we have many more products, including lots of different types of ETFs. I'm not going to give tax advice from the stage here, but I would say, tax loss harvesting is probably something you should be thinking about so that if price comes back, you can maximize your after-tax returns. That's been a huge conversation with institutional investors.
Bitcoin historically was the entry point, and then people either chose, hey, I'm going to be a Bitcoin maxi and I'm just going to stick with this Bitcoin thing, or some people chose to kind of go and broaden out. What are you seeing the institutional clients do today? Is it kind of just Bitcoin, Bitcoin ETH? What are they doing?
Well, first off, they're slow. Institutional capital is not like retail capital. We're not going to see this, altcoins go up, altcoins go down type of thing. I mean, this kind of retail-driven market is probably something of the past. Institutional capital is slow, and it's extremely selective. So you're going to, I think, see people select a small number of tokens, but they will go for some diversification. I don't think it'll be just Bitcoin. I think it'll be the top 4, 5, 6 assets, and some of the ones that you mentioned. This is a Bitcoin conference, so I think Bitcoin is where things will start. But you will see some diversification, and they know that they don't need 500 different things like the S&P 500. They maybe need 5 things. You're getting a huge amount of investable crypto market cap with just the top a few.
Well, the reason why I think it's interesting is because people think a lot, XYZ fund or institution or endowment or whatever, they're going to put $100 million in crypto. If it's a diversified exposure, maybe Bitcoin gets 30, 40, 50%, right? Versus if it all goes into Bitcoin, they get 100. And so I do think that there's this idea that as a Bitcoiner, people think, you're making a decision on Bitcoin. Most of these institutions, I think, are like, what's my crypto bucket? And then Bitcoin gets, a large portion, but not 100% of that crypto bucket.
I think that's exactly how they think about it. Bitcoin is at the same time very special, I think, to me, and I think for people that stare at it. I mean, and maybe I'll take this opportunity to say that as well. I mean, yes, you will see diversification. There's lots of other things in the asset class and in the industry that I'm excited about, but we shouldn't forget that Bitcoin operates at a scale with proof of work mining that puts it in a different category as everything else. So as much as there's other assets, there is no replacing Bitcoin.
I know you don't have a crystal ball, but what are some of the catalysts you think that could get this thing turned the other way?
Look, I think 2 things are possible short-term catalysts. One is progress on the market structure bill, or what people call the Clarity Act. Technically, it has a different name in the Senate, but this thing it's sort of stalled in the Senate in January, but potentially we'll see more progress. If you see that move forward, I would consider it a big positive for the industry and asset class. Grayscale, very supportive of that legislation. I think it'll help us operate our business in certain ways that are better. So I would love to see that move forward. I think that's a potential positive catalyst. The other one is maybe a tail risk, an upside to tail risk, but something to keep an eye on is the movement around AI agents and using blockchain technology. Our world in the future will be intermediated by AI. AI agents are not going to have a bank account and wait 2 days for their transactions to settle. They're going to use blockchain technology in some way. And so what that looks like is one of the big open questions. Is this stable coins on a fast chain? Is this highly resilient money systems like Bitcoin? I think it'd probably be a combination. If you see some of that gain a little traction, I think the crypto asset class could catch fire pretty quick. People will really see that as a validation of the use case, and I think that that's not that far away.
This is the most important question. Was 60K the bottom? Yeah. He didn't answer that one that quick.
Here's how I put it. I think that there are a lot of signs consistent with bottoming, including technical indicators in the fund flows and derivative markets, including the chart itself, whether it's exactly 60K or something in this vicinity. I think that there will be a lot of demand for Bitcoin in and around this sort of 60s zone. And I think probably we will see a relatively durable bottom form here, whether that's 60 or 59 or 58, we will see. I think it partly depends on stocks. That's maybe the main thing I want to get across is that crypto is no longer an isolated ecosystem. It's part of the financial system, and to understand how the price moves around, you got to look at similar things, frontier tech equities, behavior of the Fed, et cetera. If that stuff looks okay, 60 was the bottom. I could see another tough couple weeks if equities stumble a little bit here.
Now, one other thing that I think is pretty interesting is as these things kind of move around, I do think that there's a lot of people, and I've heard from some folks who have recently been talking to financial advisors or whatever, it's lower. I could I could enter for the first time at a lower price. One-time purchase, dollar cost average. How do you guys talk to clients about the trade-offs between these decisions?
What we tell people is, think about how you manage money in all the other asset classes. If you like to dollar cost average, you do that. If you need to do deep research, you should do that. If you think about tax optimization, you should do that. If you think about investing in crypto in the same way that you allocate money to other asset classes, you're going to have a good experience. If you YOLO into something, on a weekend or something like that, you're probably going to lose money. But if you are allocating your money in a disciplined way to the crypto asset class like everything else, you're probably going to experience good returns, diversification, get something out of it from your portfolio. So we just say, you do you. Do it the way that you think you do. We're here to help. And I think that advice is helpful. People kind of said, okay, I'm allocating just like anything else. I'm going to take that back, ask you some questions, find my way to the ETFs, hopefully.
I love it. You put out a piece periodically that is excellent. I drop everything and read immediately. Sure. How can people in this room subscribe to read that?
Thanks, Pomp. But we know you're a busy guy, but we know how to.
No, seriously, I stop and I read it. I get it over email and I just immediately start reading. I'm like, all right, this is what I'm going to talk about for the next week.
Thank you for the shout out. We're at research.grayscale.com. Grayscale runs ETF products, private funds for accredited investors, and OG in the crypto asset management space. We don't hide well. Feel free to reach out if you're beginning your crypto journey.
What is Deion Sanders says? I'm not hard to find.
Yeah,
that's
exactly. We're not hard to find either.
Yeah. All right. Thank you guys very much, Zach Pandel.
Thanks, Pomp.
All right, let's go, Evgeny. It's the big dog. For those of you that don't know, this may be the craziest guy in all of crypto. So we're going to see how this goes. You ready? You're going to see? I think we did a podcast episode a year ago, and you said something that I think I've repeated to hundreds of people. You're going to take down Citadel in the public markets, and you want to take market share from them. Can you explain what you guys did in the crypto market and how successful you've been, and why that made it sounds crazy to people who may not know Wintermute's story, but then we can maybe explain by looking backwards what kind of your ambition level is going forward?
Yeah, sounds good. Where we started back in 2017, we were tiny by that standards. Like we were basically up against a lot of competitors, both from traditional firms like Jump and like existing incumbents like Alameda, for example. And the business that we built over almost like 9 years now is basically encompassing everything that matters in crypto. So it's basically key centralized exchanges, key decentralized exchanges, everything like all spectrum of OTC trading. And I mean, if I'm honest, it's not something I envisioned from the very beginning. Like I think when I started, it was more of a, I don't know, almost a hobby project, I would say. But
no, come on. What did you do before you started Wintermute?
Yeah, but like my background is in TradFi, right? So I was just a trader at Optiver, very good trader. Like I was there for 10 years, built the ETF market making business. But it was like, it's not so fun to just be a trader and make your company like successful in a like very niche part of, well, whatever, TradFi sector. So I left and I thought, okay, like I have no idea what I want to do with my life. And honestly, first 2.5 years of Wintermute existence were more surviving than like killing it. But when you reach success, and we reached success in 2020, 2021, it's kind of, and now even like it's, you kind of face this decision. Do you want to, I don't know, do you want to chill and relax and, I don't know, just enjoy life? Or do you want to, go for the stars? And basically going for the stars is something, I decided to do last year pretty much, and hence Citadel comment and taking on Citadel and Jane and Jump and anyone else for that matter, yeah.
If you're going to offend Citadel, just go after them all, I guess, right?
Yeah, I mean, why not?
All right, so you guys do market making, OTC. What else do you guys do in the crypto market? That's pretty much the two big ones,
It's
right?
basically everything when it comes to arbitrage and liquidity provision. So basically, we are on top spots on like all the Western centralized exchanges, for example, like Coinbase, Kraken. We are number one on DeFi, on Solana and Ethereum, and like a lot of other chains. Like for example, last year, for those of you guys who were there, like we basically one of the first ones to pioneer proper MM model on Solana, and now we're moving it to EVM as well. Like we're doing a lot of different experimentation. We're doing a lot of liquidity provision where like almost none of our TradFi competitors are present. And that's what makes me very bullish about Wintermute going forward is we are still very small. We're like 150 people. We're very small. We're very ambitious. We're very nimble. And that basically allows us to take on all those giants, basically.
So you have 150 people. Have you ever said how much money you guys make? Is there like a revenue number or anything?
Yeah, it's not something we like to shout about.
Okay.
But we are doing fine.
Have you ever said a number?
I think the number from 2021 is more or less public, so that was like $500 million.
So you made $500 million like half a decade ago.
Yeah.
Okay. So you're making a lot of money. Got it. And you've taken market share during that entire time. Okay. What is it going to take to go after the traditional market? And I think that your story is actually very interesting and coupled with the rise of Bitcoin. So if you think of Bitcoin's story, started off as basically a thing no one really believed in. All of a sudden, it started to hit some critical mass in the Bitcoiner world, right? Now you got all these individuals. Now it has graduated to Wall Street, and I think that 2 years ago when the ETFs launched, et cetera, people were like, oh yeah, this Bitcoin thing. Now every single institution on Wall Street's got a Bitcoin strategy. They've got a crypto strategy, tokenization. I mean, they understand, hey, we got to pay attention. You guys kind of similar thing, right? You come from the traditional world, you had a very successful career, very successful trader. You start Wintermute, first couple of years, no one kind of really cared. All of a sudden now here you're on the scene, you dominate the crypto market, but you want to go after the traditional equity market. Do you just go and say, hey, we're just going to turn on all public equities? Is there like a wedge into the market? Like, how do you think about taking on what are some of the most profitable, successful, finance firms in human history?
Yeah, I mean, what we started with is basically adjacent stuff. So yeah, what we pretty much already expanded into is crypto ETFs, basically traded equities like digital asset companies, but also tokenized equity perpetuals, basically everything that's adjacent to what we are doing, and that's where like we feel like we do have an edge already. Then stuff like tokenized gold, silver, commodities in general, which are roughly similar to crypto in terms of complexity, especially if you want to cover the whole, basically the whole market, not just futures and CME, for example, but also tokenized gold, spot gold, basically, yeah. Like our ambition is ultimately, I don't know, moving gold across continents, for example, stuff like that, which I'm very excited about. Like it sounds
moving gold across continents.
Yeah, I mean, like from one vault to another.
Okay, and how are you going to do that? You going to like get like a ship?
We'll see. Maybe ship, maybe like a plane or something. I actually don't know. Like we're still doing the homework.
All right, but like if you do gold, then would you do oil? Would you just go into all of the traditional markets?
Exactly. No, like my vision of Wintermute, I guess, like long, like let's say 3 to 5 years, is basically be the company that moves like both physical things and digital things across the world one way or another. So basically being this like one global, I don't know, merchant, I don't know, like if it works like this. I don't know, Dutch people had this like the very, very first company Vogue. So I don't know, something around those things.
Pretend everyone's not here. Can I invest?
Sorry?
Can I invest in the company?
It's hard. We're private, yeah.
I'm joking. We'll talk later. Talk a little bit in terms of as these traditional guys come downstream into crypto, we now know, Jump, all these guys are starting to do stuff in crypto. I do think that the crypto mindset and the psychology coming from the crypto world is very different. There is, instant settlements. There are all these components that it moves faster. It's global. It's 24/7. All that type of stuff. Does that give you as big of an advantage as maybe somebody me from the outside would think going and competing against them in the traditional world?
I think like what gives us advantage is both us being crypto native, but also a big part of DNA of the company actually coming from TradFi. Because what TradFi people often don't realize is like how much crypto can reinvent a lot of existing financial rails. But what crypto people don't realize is that a lot of times they just keep reinventing the wheel and like coming up with things that were invented at TradFi, like not just like last 10 years, but like 50 years or 100 years. Like people are still, I don't know, reinventing central order book trading, for example, and a lot of protocols. And we are in this unique position where we actually know what needs to be changed in TradFi, but also what doesn't need to be experimented on necessarily on crypto side.
Now, artificial intelligence is obviously having this massive impact on writing code, how people think about assets, it's revolutionizing all this stuff. How are you guys using AI internally? And do you think that there are things that will change your business because of AI moving forward?
Yeah, it's an interesting topic. It's like one thing that we are making sure that people are using more of those tools, especially to enhance themselves during with the normal tasks. Legal contracts, for example, is a major improvement from that perspective. Just like literally everyone being able to like easily feed the legal contracts into like whatever ChatGPT or Gemini or anything else, and get insights instead of like wasting time of our legal department. But generally, like to me, it's also a double-edged thing. Like what we are really trying to emphasize at Wintermute is you should use LLMs as much as possible, but you should always apply common sense on top of it. And that's basically, I think, how most like the best companies will be created going forward, because it's like if you fully believe what LLM tells you and you don't approach it critically, like ultimately you will basically fail in a big way. And so we are forcing people to not just take LLMs on and just blindly follow them. And that comes for asking like mundane questions, and it also comes to coding. Like we don't have a like ambition for whatever X% of our code being written by Claude, for example. Like we want to make sure that it actually makes sense, and only the code that can be like written without like care that it will be discarded actually written by LLMs. But like anything highly like important actually still touched by developers who know what they're doing.
What percentage do you think right now is written by AI?
It's not something we track, to be honest. Like we don't care about it.
Well, what about for yourself? Like, do you write code still or no?
I actually want to start again. Like I stopped coding back in 2020 2019 even when we got to a level where my coding just was not good enough anymore.
When you start making $500 million.
Yes. But I'm keen to do it like a weekend project to see like how I can vibe code. But yeah, I just didn't have time yet.
Got it. What do you think the big risks are for your business?
I would say the biggest risk is just not being ambitious enough and not moving fast enough. But to be honest, like that's the single biggest risk that has been with us since the onset. Like not moving fast enough is just the biggest threat.
And speed is the advantage that you have against these guys. Do they ever like call you up and they're like, "Hey man, don't come take us out"? Like, do you have conversations with them or what?
I mean, surprisingly, like most of those guys are pretty friendly when you meet them. Like I haven't met Ken, but yeah, like I'm not sure how friendly he would be, but I don't know. I met like a few other really big competitors, and I mean, generally, like, okay, I'm saying that I'm going after them, but I generally respect most of them because once you understand like how difficult it is to build a big business and also to maintain it through not just like a 5-10 years, but like through decades, it's really impressive what like a lot of them build, and it is my kind of like I'm taking them on, but I'm also deeply respect most of them.
I'm very fortunate to have some of the largest market makers and hedge funds as investors, and I completely agree. They are incredibly nice, but then you also know, these guys they're here to make money. When you think about the team, is it centralized? Is it remote? How do you think about where you're finding these people?
Yeah, from the very onset, we focused on office-only culture. So we have 3 offices now in Singapore, London, and New York from last year onwards. Yeah, culture is very important for us. It's important for us to have very strong culture, which is office-centered. It's very important for us not to like hire hundreds of people to do basically like the same amount of work with more people. So it's like one of the operating principles for us in general is that we just want to make sure that we don't overhire. Like we've never had a year where we had to cut down on numbers. Like every single year we grew in numbers, which is like very different from a lot of our competitors, for example. And it's still an operating principle that because we operate this shared bonus pool for the whole company, every single person that we hire needs to not just make somebody's work easier, but they actually need to actively contribute to the size of the bonus pool so that this pie grows bigger for everyone to benefit.
How does the bonus pool work? Everyone in the company gets a piece of the bonus pool.
Pretty much, and it's very formulaic as well. So it's basically everyone has like a set sort of percentage of the bonus pool every year, which basically changes based on their performance as well. So I don't know, if you perform really well, that your percentage will go like, I don't know, up 50%, for example. Well, 50% of that percentage, not 50% of total.
Yeah. Got it. And then at the end of the year, you just look at the profits of the firm or some portion of the profits, put it in there, and then based on the formula, that's what people get paid out.
Exactly, yeah.
Yeah, it's pretty good, right?
Yeah. No, I mean, I copied from the best. I basically, Optiver, the company where I worked before, had exactly the same kind of structure, and I really liked it because it's formulaic, because it's very simple. Well, on one hand, it encourages people to work together, because if you make a lot of money, okay, everyone else will benefit from it. But like if your neighbor if another trading desk makes money, you also benefit from it. So it encourages a lot of basically cooperation and not competition, which is very different from a lot of our competitors. And it just also encourages like this, people behaving in a very like entrepreneurial, really like ownership-driven way as well.
When I think of your firm, you guys make a lot of money and are very successful interacting with a lot of institutions, but you still will interface with individuals as well?
On a OTC counterparty side, yeah.
Okay, so how does somebody come and how do they become a client of yours?
I mean, basically, if you want to trade spot or derivatives with us, send an email to trade@wintermute.com and we'll pick you up. Yeah. But yeah, we do cover a very significant part of crypto ecosystem. So like we trade hundreds of tokens, we can basically price any kind of structured products based on those as well. So they're pretty unique in that regard.
My last question, and I think you know me well enough at this point, I'm cheering for you. You're one of the most ambitious people I know. But how do you know when you've won? Like what is the finish line? Or how do you know that, okay, I accomplished my goal?
I honestly hope I will never get there, because almost like feels like it's. I mean, the finish line would be, I don't know, we're number one market capitalization company on planet Earth. I guess like that would be the finish line. But I honestly don't know what I would do afterwards. Like it's kind of like depressing to think about it. So I think it is definitely like journey, not the destination kind of thing. So I am basically hoping that I will keep raising those goalposts even after we beat Citadel and everyone else. Then we'll try to beat, I don't know, OpenAI or something. Yeah.
You guys ever met someone who's depressing and inspiring to talk to at the same time? Guys' goal is to have the number one market cap in the world. All right. Thank you very much, Evgeny. I appreciate it. All right, that's all the conversations today. When you guys walk out these doors, Arch Public has, like I think I told you guys earlier, a lot of alcohol. I don't drink, but some of you may not drink after today, given how much they've got out there. So they've opened all that up for anyone who was here at the conference. So we're going to do a little bit of a cocktail hour, and then I'll see everyone back here tomorrow morning. Thank you.
Later.